Alright, recapping the first chapter, which is not a very important chapter, but very, very important from a conceptual perspective, not the marks perspective. Guys, the chapter's name is Introduction to what? DT. It's also called Basic Concepts. Importance is very low, but it's a very conceptually clear chapter. Guys, please tell me the Income Tax Act works in which year? 1961, and the Income Tax Rules 1962. But we can't run a country with these old acts, and hence every year it's amended. And for if you are giving an exam of 2024, then the Amendment Act applicable to you is 2023. Next, guys, in India, we have different persons. Of course, your exam person is what? Individual. But do we have different persons? First, individual. Next, HUF. Next, partnership firm, which is the same as LLP. But are they different? Yes, but tax perspective, they are just the same. Then there are companies, Indian companies and foreign companies. Then is there something called AOP? Guys, AOP is Association of Person. When me and Yashas Academy or any other academy come together to do some business, intentionally that's called AOP. Any person can be a part of AOP, but BOI, body of individuals. Only individuals can be a part of BOI, and it's not intentional. Example, that old neighbor not being anymore and the 3 people getting the flat, guys, on rent. Are we understanding that? AOP, BOI in real life we don't see because they are very similar to which firm? Only thing, if we add profit sharing ratio, it becomes a partnership firm. And then there is something called AJP, artificial juridical person, like your trust, like your BBMPs, BMCs, DMCs, etc., the municipal authorities in Bangalore, Mumbai and Delhi respectively. Next, guys, we go to the steps. Before that, guys, we stop at the surgeon, guys. Surgeon's life or story is our DT story. And he started working at what age? He got his first house at what age? 22. He got his first business started at what age? 28. He started dealing in shares, etc. at 45. And he started earning other 56. Excellent, guys. You know him very well now. Next, other steps on tax. The first step is finding out your legal state. In this classroom, all of us are individuals. In their exam also, the question will be on individual. Second step is you need to find out residential state. Guys, if you spend a lot of time in India, guys, you become a resident. If you don't spend a lot of time in India, what do you become, guys? Non-resident. And guys, once you're a resident or a non-resident, they define which income should be taxed in India, and that becomes your scope of income, those incomes that can be taxed in India. Once they decide those incomes, they park them in 5 rooms. They are called heads of incomes, guys. Salaries or house property or PGBP or capital gain or IFOS. And guys, the give and take relationship of real life is now real in tax. If you give incomes to the government to tax, are they happy? Do they have tears of joy? Yes, so they give you in return deduction. Example, for my lectures income, all the flight tickets, all the hotels I stay in, etc., etc. Can I take a deduction for all of that? Yes. If I go for lunch right now today also, I can take a deduction, but not you, because right now for you, you're not giving, so you can't take. Guys, in each head I have incomes and I have deductions, and the net income goes into a waterfall and reaches where, guys? Clubbing. Guys, once it reaches to clubbing of income stage, if it's your dog, who should come back to you? So if it's your income and you passed it to someone else, will the income come back to you? Yes. Example, the FD you made in your spouse's name, will the interest come back to you? Yes. That's called clubbing of income. Your income will be taxed in your hands. After that, that is called set off and carry forward of losses. Guys, Surf Excel has a tagline, Daag Achhe Hain. We have a new tagline, Losses Achhe Hain. Why a loss is good? Because they can be set off. And if you can't set it off this year, you can carry it forward to the next years. That guy will also contribute to the revision video. Yes, just like he's contributing to his neighbor's conversation. Yes, in the spectacles, that guy. Yes, please. No, behind. 3 people are turned up. Good. All 3. Yes, the guy looking behind also. Yes. Next, after set off and carry forward loss, we come to a very useless number, which is called what, guys? Gross total income. There used to be a point in time where tax was calculated on GTI, but not anymore. After that, now we get deductions under which chapter? 6A, like medical insurance, life insurance. Can we minus that? And after that, we come to the hero number, the star number, which is total income. It is on this income, guys, you need to track this income. Governments also tax this income, because higher the income, higher the tax. Guys, you don't pay the tax at one go, you pay it in parts. Sometimes you pay advance tax, sometimes you pay TDS, TCS, and sometimes you pay self-assessment tax. Are they different taxes? No, they're the same income tax but paid in different ways. And your entire story of the year, guys, happens, and you know it, your CA knows it. Who should know it? Government. So you need to file a return of income, also popularly called ITR, after the year gets over in July October or November, then you tell the government, dear government, this is what happened, this is my income, this is my tax. Thank you so much. See you next year. Next, guys, after this, there were assessment year and previous year. Previous year is the year you earn income. Assessment year is the year you are assessed. Previous year, 23, 24, assessment year, 24, 20. Are they different years technically? Yes, but they are like your name and your surname. Sourabh also refers to me, Mr. Mutha also refers to me, so Sourabh Mutha also refers to me. And financial year is any year which starts on 1st April, ends on, and calendar year is not required from our perspective. Assessee is any person who has to pay tax. Guys, if you are a beneficial interest holder, that means you hold how much percent? 10% or more shareholding in a company, or if it's not a company, then profits. And substantial interest is 20% or more. Mukesh Ambani holds 51% in Reliance. Is he a BIH? Yes. Is he a SIH? Yes, he is both. And also, guys, is there a difference between DT and IDT? Yes, DT is on your income, IDT is on your, the more you earn, guys, DT increases. That's progressive. IDT is, even the poor person, guys, has to pay IDT on his soap, toothpaste, etc. Guys, both contribute how much percent to the economy? And guys, but which is a wider base, GST or IDT? More people pay that, yes. And which is a narrow base, guys? DT is a narrow base because fewer people pay that tax. Perfect. Alright, and in the series of revision videos, while we're revising the videos, you just have seen Introduction to DT, that video, and now we are over to the next video. These videos are very helpful, especially one day before the exam. You're going home from the exam center to your house, crying about the last paper. While crying, you can watch this video. Yes, and it will benefit you because it will save your time to revise. So let's do a very nice, very crisp and very good revision video on a chapter which is called what, guys? IFHP. I request all of you all to move to your handwritten notes on the first page of IFHP. And if you are that student who is not attending my full class, then the QUIK-Book is where you should open up to the chapter called IFHP. Yes. I'm opening up the QUIK-Book here. Alright. This is income from house property, guys. We use the example of the surgeon. The sections of house property start with which section, guys? 22 and go on till section 27. Guys, house property room opens up only if you're the owner of the house property. And when I say house property, it also means your house. It also means your shop, office, go down, everything except land. Because when you rent land, you have income, but that will not go in house property. It will go in IFOS. Anyways, coming to the main question, guys. In house property, can you rent out your house property? When you rent out your house property, it is called what, guys? LOP, let out property. In that, can you have your actual rent? Yes, the government says actual rent is great, but we'll always compare it with what, guys? Expected rent, and the government has a shortcut: municipality, figures, standard. So municipal value or fair rent, whichever is 8 lakh, 9 lakh, which is higher, guys? 9. But just check, it should be within the range of standard rent. If standard rent is 10, is that okay? 9. It can be lower, but it cannot be higher. So 8 or 19, which one, guys? 19, but we limit it to what, guys? 10. Are we okay? And expected rent doesn't change for anything. No unrealized rent, no vacancy loss. Next, what is AR? Actual rent. The government says, tell me whatever is your actual rent, but always tell me for how many months. But sir, what if I've rented out for 9 months and I'm staying for 3 months? Then okay, 9 months into rent, 3 months into 0. So always start with how many months, guys? 12 months, and you find the actual rent for 12 months. Example, how many lakhs? Then from that, can you minus unrealized rent? Yes. Unrealized rent is like bad debt, something that you have not received. Can you minus it? Yes. Provided you fulfill how many conditions, guys? 4 conditions under rule 4. Legally vacate our building. You should take which action? You should ask the person to vacate. You should not give him any other building, and you should have a bona fide agreement. Can you minus unrealized after that? Yes. So no problem. And the rule is, if you don't get income, the government doesn't want what, guys? Tax. Next, what is this? This in our shortcut language, it's called AR2. Now, can I have vacancy loss? But sir, what is vacancy loss? Whenever, guys, there is no one staying in the apartment, no LOP, no SOP. That period when you ring the bell, who opens the door? No one. That's called what, guys? Vacancy loss. Can you minus vacancy loss? Yes, but there are 2 things you have to take care. One, only when AR2 is more than what, guys? So let's say your ER is 9 lakh. Am I more than that? Yes. So can I minus vacancy loss? And once you minus vacancy loss, after that, guys, you have to ignore what? So this will become what, guys? GAV. So remember, guys, vacancy loss is important, but sometimes doesn't appear in the exam. Next, whichever is the GAV, you will start with GAV. And are you offering income to the government? And because you offer income to the government says, I'd like to give you how many deductions? 3. Only 3. What if they give you 30 deductions in the exam? Only choose how many, guys? 3. First one. As municipal tax can be called different names, sewerage tax, property tax, municipal tax, etc. But only when it's paid. What if I pay it in April next year? Only 5 days late. No, you will get the reduction, but next year. This is only paid during the previous year. Paid by tenant? No, it has to be paid by the. And guys, this sometimes can be given as a percentage. You know how to solve it, guys. Percentage of which value? Municipal value. So can I example minus 1 lakh? Yes. The next number is called what? From NAV, guys, how much deduction more? You can take a standard deduction of how much percent under a section called 24A. Now this standard deduction covers everything. No further deduction will be given to you for revenue expenses. Like repairs, will you get more? No. Insurance, ground rent? No. Guys, my lucky number is 31. Can I take 31? No. You will only get how much, guys? You will minus that 30%, and after that you'll minus what, guys? Interest, any limit, guys? No, because this is LOP. Excellent, guys. Done. This is your final number in LOP. The next property can be called what, guys? SOP is when you or your family are staying in that house. My house in Mumbai and now my house in Bangalore also. I've just recently got a house in Bangalore. That house in Bangalore and the house in Mumbai, both are SOPs for me. Guys, in SOP, am I staying in with the family? Yes. So then what is the number? 0. I'm not getting any rent from it. So the number is 0. AR, 0. ER, GAV, 0. Everything 0. And that's why it's our favorite calculation, guys. This is 0, 0, 0. Only minus what? The government said, I'll still give you reduction. But guys, what's the point of deduction? It will lead to what? Loss. But is that loss a benefit? Yes, that loss can be set off. Is that a benefit, guys? Yes. So what is the benefit maximum? They say, I'll give you a deduction, but I'll give you maximum how many lakhs, guys? 2 lakhs or 30,000 depending on some condition, which we will talk about in some time. So this is what it is. 1 minute. This is SOP. Guys, can I have two SOPs? SOP1 and SOP2. But guys, even if you have two SOPs, this is 2 lakh, this is 2 lakh, can I get 4 lakh? No. They say the capping is per person, not per house. Guys, what if one house is 2 lakh limit, one house is 30,000? Still I will get 2 lakh because the government wants to give me that benefit. What if both the houses are 30-30? So will I get 60? No, it is only restricted to 30. And guys, in one house only I have 2 loans. One for 2 lakh limit, one for 30. Remember, the moment you get 2 lakh, you deserve 2 lakh. Yes. And now let's talk about the 4 conditions which you have to fulfill to get 2 lakh. Certify 5 accounts for what, guys? 99. Everyone, SOP. Certify 5 accounts for. Should the loan be a recent loan? How recent? After 1999. Mainly it should be for acquisition and if its construction should be completed within. Sir, I have taken 7 years. You'll get deduction, but only 30,000. I have taken the loan in 1994. You'll get deduction, but only, guys, and this is to be checked only in which case, guys? SOP. Are we okay with this? Next. Guys, let's go to the next one. LOP for part of the year, SOP for part of the year. Same calculation as what, guys? So will you have the same calculation? Yes. How much municipal tax? Full. How much interest? Because what is it, guys? LOP. Now, guys, how many SOPs can I technically have? And the extra ones, guys, will be called as DLOP because the government has been cheated before and this has been rented out without their permission. So if you don't rent it out, it will be called as what, guys? DLOP. Is DLOP the same calculation as LOP? Yes, except, guys, there is no actual. Why no actual rent? Because you are saying it's what, guys? SOP, and hence there is no actual rent. Everything else remains the same. But in reality, there is no problem of this because, guys, people own up to how many properties? 2. The next 2, spouse's name. Next 2, children's name. Next 2, next children's name. Yes, so people don't have this problem in your life. And guys, last, if you're a builder, who are you? Like Prestige Builders, Lodha Builders, or in Delhi, DLF Builder, wherever you're watching this video, guys, if you're a builder and you have some stock, the stock should be sold within how many years? From which year? OC or CC year? How many years? If you don't sell it or if you don't rent it, we will assume it to be DLOP. B. Excellent, guys. Next, municipal tax we already know. 24A is what? Standard deduction, how much percent? 30%. And 24B. Can you get interest? Any limit? Because your deduction is someone else's income. But what about multiple loans? No problem. Fresh loan. What about interest on interest? What about penalty? No. And guys, interest is of two types. We will talk about it right in the end, what types of interest is. Next, guys, section 25. Are you paying interest abroad? If you pay interest abroad, is it coming out from India? So India says we want what? Tax in the form of TDS. If you don't deduct TDS, forget about the deduction. Next, 25A. A for what? Guys, did someone not pay you rent? How dare you not pay you rent? But no problem, guys, that happens. So later on in life, if he pays you rent, will you tax it? In whichever year you receive it, year of receipt, but you'll get how much deduction, guys? But what if you sold the house? Still, it's connected to the house property, so hence in the same house, you'll get the deduction house property. Next, 26. Is this the ideal age to get married? Yes, so it will be co-ownership. In co-ownership, guys, can there be two or more owners? If it's LOP, last, and if it's SOP, why start? Because each one will get how much deduction? 2 lakh or 30,000 per person, not per house. So guys, two owners, two deductions. Are we okay with this? Next, guys, do you have a house property? Yes, but you want to transfer it to your spouse. To whom, guys? Can you do that? The government has no problem with the asset, but the dog always goes back to its. So the income which is now earned by whom? Spouse. She will earn it. She will not pay tax on it, guys. Who will pay the tax on it? The surgeon, the transferor will pay, because the dog goes back to the owner, except AS. What is AS? If she pays added consideration or there is separation, then who will be taxed on that income, guys? Remember, if there is income, there will be tax. Next, guys, if you transfer to minor child, same, except AM. If it's paid, and if it's a minor married daughter, in these two cases, will the income come back? No, this is AM. Rest of the things are not so important, guys. But remember, whether it's an impartable estate, or it's shares, or you've got possession, or if there are tenancy rights, even if you don't want to, you will be taxed as what owner, guys? Deemed owner. Are we okay? Now let's go to the additional points. What if you rent land? Will you be taxed? Yes. Under which head? IFOS or PGBP? Guys, can you sublet a property? If I give it to you on rent for 1 lakh, I am taxed under IFHP. But you rent it for 1,40,000. Is that subletting? So that 1,40,000 will be taxed minus 1 lakh. So ultimately, how much will be taxed in your hands? 40,000. Subletting under which head, guys? IFOS or PGBP. Guys, can you have composite rent? That means rent for house plus furniture. House will go into house property. Furniture will go into. But what if you can't separate it? IFOS. Excellent, guys. Next. Guys, what if they divide the house into two portions, LOP and SOP? If they divide the house, you divide the calculations into LOP and SOP. Which one first? 0, 0, 0. Interest. How much? Divide. Whatever the proportion. Yes. And in LOP, guys, will you do the same calculation? Guys, what about ER? Divide. What about municipal tax? Divide. What about interest? But what about rent? Because rent is only of that portion. And last, guys, we'll talk about this very important thing. Guys, interest has two parts. How many parts? Current year interest and PCP interest. Guys, if my house is made today, what is today's date? 28th March 2024. Which year? 23-24. Will I get deduction for full year? But sir, 20th March still, guys, if the government is giving, why are you questioning good things in life? So will you get the full deduction? And what if my house was under construction before this period? That is called PCP. What is that called? Can I have interest of 6 lakhs? Do I want a deduction? Yes, but you'll not be given as a cake. You'll be given as a pastry. In how many parts, guys? So how many lakhs? 1 lakh over how many years? 1, 2, 3, 4, 5. In the 6th year, you will get current year, but not PCP. Are we okay with this, guys? And first you will calculate, let's say the interest and this comes to 4,60,000. Then check if it's LOP, full, if it's SOP, lakh or 30,000. So first calculate the interest and then check whether. This is the revision video you will watch. You will read your handwritten notes along with that. And once you finish this, guys, this is only the start. After that, you will get sums, more and more sums, because the gold and the marks lie in the sums. Yes, that's the revision video. Thank you so much. All right, guys, on to another revision video, and this one is going to be on a chapter called Agriculture Income, Exempt Income. You know how to use this video, guys. This video should be supplemented, complemented with your handwritten notes in front of you. Watch this video. It can't be 2x because anyways we're going 2x speed. So this video has to be seen, revised, and then you move on to sums. So it will be very helpful. Guys, this chapter is called Exempt Income, and exempt incomes are those incomes on which we don't levy any tax. There's only one section for exempt income, which is the main section, section 10 of the Income Tax Act. And exempt income is excluded. E for exempt income, E for excluded. Basically, that means that whenever you have any exempt income, don't put it in the total income, don't put it in the conclusion, don't put it in any of the 5 heads of income. Yes, keep them separate. And main section is section 10, but we'll look at subsections also. One of the biggest exempt income in India is given to farmers, and we exempt their income under which section, guys? 10.1. So here is the QUIK-Book. Let's have a quick revision through the QUIK-Book, guys. Section 10.1, which is the first land called, guys, rural agriculture land. That means in your villages, those lands which are for agricultural purposes are called RAL, rural agriculture land. Guys, if you cultivate and you sell agricultural produce like tomatoes, potatoes, is it exempt? What if you rent it? Exempt. But for which purpose? Agri purpose. Guys, can a question come of movie shooting? Yes, then it will become taxable. Next, guys, you should be producing agricultural produce. What if it's income from farm building? That is also exempt. What about flowers, creepers, seedling, sapling, nursery, bamboo? All of that is exempt. So, guys, that will be part of section 10.1. But what if you sell your rural agriculture land? Is that agriculture? No. It is not exempt, but the word is not taxable. Why not taxable? Because you know, guys, in rural areas, agriculture land is not valuable. So the government says, I don't want to tax it. Cut to urban agriculture land, guys. Urban agriculture land is now in which area? Urban area. Not every land, only the agriculture land. Is it valuable? Yes. So two things change, shortcut, BS or SB. First, if you sell, what is S, guys? Sell. If you sell that land, is the government interested now? Yes, because the land is very, very valuable. And what is B? Building. That farm building now, guys, whatever purpose, whether it's agriculture or non-agriculture, whatever purpose, because it's urban area, you can put a board like PG available, and hence, guys, that one will be taxable. Next, guys, what is urban and what is rural? If I have to find out, you will first see the population of a place. And the population is large, like a city like Mumbai, Bangalore, Delhi, etc. Then it is up to how many kilometers, guys? From the municipal areas, aerial distance up to 8 kilometers. Everything in that range is urban. Everything outside is rural. For a smaller town with a lesser population, 6, then next 2, and then next 0. Check this population from this list or from your book or whichever book you are referring to. Next, guys, although agriculture is exempt, what about other cultures? Sericulture. What about pisciculture? What about dairy, poultry, horticulture? All cultures are taxable. The government only likes one culture, agriculture, but of course, floriculture as well. So in the exam, there is dairy, poultry, timber, sandalwood, all that income is taxable. Remember, think like the government. The government wants money to run a country, and hence they want to tax all these different incomes. Now, guys, we will go to composite income. In India, there are some incomes which are a mixture of agriculture and PGBP. Can you name 3 of them first? Tea. Next, rubber. Guys, is there element of both? So first you will find out the profit. You'll minus all the expenses. You'll get to which level, and then you'll split the profit in ratio. I only want the PGBP number, guys, for tea business. And rule 8, because you drink how many cups of tea, guys? 8. Coffee is what percent? 47B. And coffee can also be, if coffee is only grown and cured. If it's grown, cured, roasted, grounded, flavored, then 40%. And rubber is rule 7A, where the percentage is, guys, remember the PGBP percent, agriculture income is always considered as the balance. Yes. Now, guys, if you basically grow potatoes and give it to a chips factory, can you do that? Yes, of course, but you have to transfer it at what price? Lower is okay, higher is not okay, guys, as per rule 7. In the exam, it can be sugarcane to sugar, it can be grapes to wine, it can be tomatoes to tomato ketchup, any two complementary industries. You can do these questions here. Now, guys, we move to a scheme of partial integration, which is actually in which chapter, guys? Rates of tax, but we'll revise it here only, guys. If you are only and only business income and professional income like me, are we in a problem? No, we are taxed normally. If you're only a farmer having agriculture income, are you exempted? Yes. But the smartest people who have both incomes, taxable income as well as Agriculture income, guys, their taxation works separately. They are scam. Do you remember the scam? Scam of partial integration. If you're looking for the notes, it's in rates of tax chapter. You can go there later and revise it. But right now, we'll revise it here. Guys, this scam applies only when you have both these incomes. And what is the first step in the scam, guys? Shock. How do you shock them? You take their taxable income, example 10 lakh, and agriculture income, and you calculate what? Tax. Which tax? Total. Basic also, surcharge, rebate, everything you calculate and find out the number. Then step number two, is it calm down? How do you calm them down? Whatever is their agriculture income and their basic exemption limit, it can be 2.5 lakh, 3 or 5 lakh. You total them up and you calculate total tax. And the difference is what that person will pay. Guys, this is a scam. It's called a scheme of partial integration. Now, when does the scheme apply? In the exam, guys, only when you're earning both the incomes and they ask you to calculate tax. If they ask you to calculate income, then no. Only if they ask you to calculate tax will you go on to that stage. Everyone okay? And you should be someone who enjoys what, guys? Basic exemption limit. And as you know, only some people enjoy basic exemption limit. Shortcut is I have a. If you don't remember the shortcut, remember individuals. Are we okay with this, guys? This is your agriculture income. Now let's attack the other exempt income which are here. As exempt incomes, the first one which we already did was 10.1. In 10.2, has your HUF already pays the tax? So then the members get share of profit, will they be taxed again? No, because already HUF has paid the tax. 10.2A, same concept, but now partnership firm has paid the tax, so share of profit of whose partner will not be taxed. Next, 10.4.2. Guys, if a non-resident abroad puts money, especially forex, in a NRE account, full form, non-resident external account, the interest will not be taxed. Can he come back to India and retain that account? Yes. He can't add money, but the interest will still be exempt. Logic is forex. Guys, 10.6, the two you don't have to remember. Guys, does the government of India have people working for them abroad? The government of India has a slogan that we tax, and because of that, even the foreign government have the slogan, they tax their people. And when they will tax their people, the French people in India, we have to exempt them under which section? 10.6. Guys, 10.7 also we'll do, it's not here, but we'll revise it from here. Guys, remember the France, the person working in France. For whom was he working? Government of India. Was the government paying salary? That salary will tax. We tax our people. But to live in France, we also give him some allowances. Remember, 7 allowances, and those allowances are exempt under which section, guys? So if you get this sum, the salary is taxed, the allowances are exempt. Next, 10.10 BC, shortcut, big penalty. In floods, etc., when you get money, guys, should the government tax that money on humanitarian grounds? That money is considered exempt. 10.10D, death. You're taking a life insurance, and are you getting receipts? Yes. Guys, when you get the receipts on death of a person, on humanitarian grounds, they don't check any premium. Whatever is received, completely exempt. Otherwise, guys, they check the premium. The premium should be low. How low? Guys, low is 10% of the sum assured. Example, I took a 25 lakh rupee policy. 10% is what? So every year my premium should not be more than 2,50,000. If even 1 year it is high, taxable. Guys, this 10% earlier, before 1/4/2012 was what? 20. So check when the policy was issued, not when the premium was paid, when the policy is issued. For disabled person, 20% became 15%, but that's not so important. They are 2020. Guys, next is 10.11.8. Can you open a Sukanya Samriddhi account for girl children? Can you put money in that account? We are not talking about putting the money, guys. We are talking about removing. When you withdraw the money, depending on whatever rules, those rules are not important of tax. Whenever you withdraw as per the rules, that withdrawal will be completely exempt. Shortcut, gently, Sukanya Samriddhi will get how many lakhs, guys? 11 lakhs. Guys, which account did you open? National Pension Scheme. Was it a new account? Yes. Now, can you open this account? Yes, you put money. Who else puts money in that account? Employer. What do you earn in that? Interest. We don't tax it till now. But if you withdraw that money before and after, guys, is it taxable? When is the government not happy? You should not withdraw it before retirement. But if you withdraw, let's say 10 lakh rupees, first what will they do? Tax. But they will give you a small exemption under section 10.12B. Why small? Because you withdrawn it before. How much? 25% of your self contribution. But if you withdraw later, let's say 30 lakh, then they will give you exemption of total amount, not total contribution, total amount. So please withdraw later, that will be more beneficial. Next, guys, 10.12B is between 10, this one we'll see. This is, I made you leave a page, but I'll just explain it because you're watching it after I talk about the amendment. If you invest in an Agnipat fund scheme and when you withdraw the money, it is exempt under section 10(12)(c). You have blank faces because I want to explain it now. I'll explain it in the amendment section. Next is what, guys? 10(15). If you invest in a post office savings account, can you get interest? Yes. And when you get that interest, guys, up to how much amount? 3,500 for single, and joint account 7,000. It will be completely exempt. So example, my interest is 10,000. I will only be taxed on how much, guys? 6,500. Next is 10(16). What are you getting? 10(17). Allowances by MPs, MLAs, all these amounts will be completely exempt. 10(17)(a) not there now. 10(18). Gallantry award winners getting pension. 10(19). Armed forces. When armed forces people, guys, 19-year-old people who join the army, when they lose their life or they become disabled, and when they get the money, should be taxed? No. When you, which is your favorite state in India? Sikkim, because Sikkimese individuals on two incomes are not taxed. Any income within, only individual, any income within Sikkim, and interest and dividend from entire India. 10(32). Guys, when you have a minor child, will you be happy? Yes, because you get an exemption of 1,500 whenever you club their income per child whose income is clubbed. What do you have? Two children. So it's 1,500 per child whose income is clubbed. We'll see more of this in clubbing of income chapter. Next, guys, 10(34), which I have not written here, was an exemption which is removed on dividend. But guys, now that has been removed, so we'll not talk about it. But in case the company does a buyback, buyback means, guys, 1,000 rupee share bought by the company for 1,500. Is the shareholder making money? Yes, 500 rupees per share. But in this case, who will pay the tax? Company. The logic being the government does not want to go to lakhs of shareholders. They'd rather collect the tax from one person, that is the company. Next is 10(37). Do you have an urban agriculture land? Is it valuable? Yes. What if you sell it? Taxable, it's valuable. But if you don't sell it and the government compulsorily acquires it, can that be exempt? Yes, provided two conditions. You should be an individual or a HUL, and in the last 2 years, you should have used that for what purpose, guys? So remember the two connection for the shortcut here, and 10(43) is which scheme? Reverse mortgage scheme. If you give your land papers, house papers to the bank, can they pay you every month? How will they recover the money along with interest? Sometime later, they'll sell the apartment or you pay them. Now, this money that you get every month, guys, is it a loan or is it an income? And because it's a loan, it's not as income, hence it's exempt under which section? 10(43). Now, guys, these were exemptions. We move to one which is not called exemption, it is called deduction under 10(a)(8). Guys, do you have a business? Yes, let's say you're manufacturing laptops and you have two units, one in Bangalore, one in an SEZ. Guys, the government says thank you for going to a SEZ. And when you export from there, the government gives you benefits for how many years? 15 years. Every year they calculate a golden number which is called SEZP. From the SEZ, profit into export percentage, and whatever the number, you'll get a deduction of how much percent? 100% for the first 5 years. In the next 5 years, guys, and this year starts when? Whenever you start manufacturing. Example, if you start 17, 18 manufacturing, that's the first. 5 years, you get 100%. Next 5 years, that means whatever this number comes, you'll get 50% of that. And in the last 5 years, as your machinery is getting old, so they'll give you 50% with a promise that this amount has to be transferred to a reinvestment reserve account. Guys, what if you transfer more, but deduction will still be only up to this amount? What if you transfer less? Then less amount. Yes, so you need to put the money and you should use the money in the next 3 years for buying new plant and machinery for your business. If you don't use it, or if you misuse it, like you send it abroad to Vijay Mallya, you declare dividend, the government taxes you because you've broken that promise. Guys, remember, this export turnover and this total turnover should be only a product turnover or service turnover. It should not have three things: FIT, freight, insurance, and telecom. In the exam, if they say freight is included, minus it from export also and total turnover also. Are we clear about this, guys? And this deduction, although you can't take it fresh right now in 23-24, but can an entity have gone there 3 years back? Yes, last year to take it was 2021. Can the 15 years still be on? Yes, this is very important. Comes in the exam very, very often. Section is what, guys? 10(a)(8). But I want to ask you, in 10(a)(8), this is a deduction. Your first stop is PGBP. Where is your first stop? Guys, first you do profit, you take the profit to PGBP and then you minus it in deductions after your GTI. Is that clear, guys? Yes. This is a chapter called Exempt Income, Agriculture Income. If you don't remember the sections of this chapter and you want to give up, just quote section 10. After watching this video, go on to do all the sums, first from our book and then if you want from ICI material illustrations, and you'll be good to go. Thank you so much. Another new recording video being recorded now, and this one's going to be really helpful because it's a chapter where you don't know what to start with. There are too many complications sometimes. There are deemed income, sections, amendments. You don't know where to start, and this video is going to be a great start. Whenever you want to revise, whether it's the month of February, 24th Feb or 24th October, 2 weeks before the exams, you want to do a quick revision of this chapter, this is the video that will help you. I want everyone to go to your handwritten notes. Please open your handwritten notes. For people who are not my regular batch students, crash course students, please go to the QUIK-Book. Like I am going to the QUIK-Book. Others guys can go to the handwritten notes. Everyone, please go to handwritten notes. I'm opening up the QUIK-Book and we're doing a nice revision, a complete revision on a chapter which is called Residential Status and Scope of Income. Here we go. Yes. Guys, before we begin this chapter, if a client comes to you at the end of the year, obviously, after the year ends, to figure out his residential status and scope of income, which one will you determine first? Because only once you know, is he a resident, NR, RNOR, etc., we can find out his scope of income. Second last bench, also the screen is here and the revision lecture is happening here. Yes. So now before we begin this chapter, I want to understand the difference between a resident and a citizen. Guys, in a nutshell, a resident is someone who stays in India and a citizen is someone who has an Indian passport. Guys, there's someone called PIO, person of Indian origin. Are you a person of Indian origin? Of course, yes. But guys, someone who's born abroad, let's say there's someone who's born abroad in the US, he's brought up in the US, he has a thick US accent, everything is in the US, but he still can be a PIO of his parents or grandparents. Grandparents means Nana Nani also or Dada Dadi also, or anyone, not all, any one of them is also born in India, even India before 1947. That's a PIO. Next, guys, let's find out. First, we'll do with scope of income. Guys, we'll first finish scope of income and then we will move on to residential status, just like in your notes. Yes. Scope of income is section 5. Now, India can't tax every income in the world. Example, Elon Musk right now is sitting in the US. His income is in the US. Can India go and tax it? No. Simple logic is, if you come to my kitchen and if you bake a cake, I am going to have a couple of pieces for that cake. So that's a simple logic. And for scope of income, the people are divided into 3 categories. The first category, resident, are 2 types, ROR and R. Guys, both of them are what, guys? Residents, and at the other end is a non-resident. Non-resident has no further categories. So there are 3 people. You cannot have a 4th option. You have to be one of them only. Now, guys, when the NR we talk about, he is very, very happy. He's like Elon Musk. He's like the surgeon's brother who is abroad. He says, I'm really happy because India does not bother me on my foreign incomes. India will only bother me if I have some income which has an India connection, which the shortcut is what, guys? Your income, any income received where? In India. Accruing where? India. Earned where? India. Deemed where? In India. Deemed we'll talk about at the end of this revision video, but right now, accruing basically means till you earn it, every day it accrues to you. Example, interest, example, salary, and then you earn it. So it's almost, cousins, earned and accruing. All right. Anything which is an India connection, guys, can India tax it? Yes. But otherwise, we will not disturb you on your foreign incomes. You can be very happy, and that's the reason this guy is really happy. Why is RNOR so happy, guys? Because he says he also taxed on very few incomes. His incomes abroad are not touched. Only which incomes, guys? 5 here plus 1. Here we already know, we just discussed. What is this plus 1 income, guys? No, it's not CMS. It is income earned abroad. That is the first part. Income earned. So the income is abroad. Example, your hotel is in Dubai, your advertising firm is in Singapore, your business is in Sri Lanka, your income is abroad. But the control or management, basically the business is controlled, managed or set up. These 3 words, one of them you have to see either control or manage or set up is happening from India. Control or manage is every day, setup is initial setup. Even that if it hasn't happened in India, this income will be taxed. Guys, this is the only one which difference between RNOR and NR. In the exam, highly probable one of them will be there in the exam. They'll give you 5-6 incomes. You have to spot which connection. India. The moment you spot India connection, you can tax it. Then we go and meet the ROR. ROR is not even looking at us. He's looking in the corner and crying. Why is he crying? Because, guys, for him, every income in India is taxable. But that's not a problem. Income in India should be taxable. But guys, what about his income abroad? Example, he has dividend in the US. Where is his dividend? He has a house given on rent in UK. Will UK and US tax him? Yes. But India says, listen, you're my family member. You're a resident and ordinary resident. You stay so many days in India. I have every right on you. I will also tax you. So he's paying tax on foreign incomes how many times? Twice. And that's the reason he's sad. The way he's taxed is on global income. Which income, guys? But how will we save his tax? At CA finally learn something called double taxation relief. But at CA Inter, you let him cry. Don't disturb him, guys. This is how these are taxed. That's the scope of income. Guys, while you look at it, ROR is very simple because which incomes are taxable? All. And that's why in the exam, don't expect ROR question. Expect a question on what? NR or RN. Sometimes they give you a person called some Samarth, etc. and they say find out there are 7 incomes, find out his income as a ROR also, as a NR also, and they'll give you about 5 marks for this. Has come in the exam many times before. Two things you have to ignore. First, guys, any past income. Any? Your exam year is 23, 24, and any past incomes, guys, whether they are taxed or untaxed, guys, please ignore them. Focus on the year in question. Second thing you need to ignore is remittance. Example, guys, my salary was earned in the US. Where was it earned? And then I brought it to India. Which part you have to ignore, guys? How do you ignore it, Beth? Take a pencil in the exam and strike it off. And brought to India again, that part to strike it off. So we'll focus on the first part. Don't ignore the first part. Salary earned where? In the US. For ROR, is it taxable? Yes. For NR, RNOR? No. So you have to focus on the first part. Don't cut off the entire line. Only cut off remittances. Shortcut is ignore remittance. But what is remittance? Remittance is the second, third, fourth subsequent receipt. You focus on which receipt, guys? That's your scope of income. All this you can read. Deemed income we will talk about right in the end. All right, CMS, all the shortcuts are here. Now, guys, you can do these questions and you can do the ICI illustrations also. Now, let's go to residential status. Guys, residential status is discussed under which section? 6, and the most important one is 6.1, residential status of individual. Guys, in the exam, there will be some Priya, some Samarth, some A, B, C person, and it's only going to be individual, and they will give you many details. Last 10 years, he was in Canada, a year there, he got married, doesn't matter. Focus on the year in question because basic condition 1, which is asked to everyone, says that is your stay in India during which year? 23, 24 is it greater than or equal to 182 days. That means, guys, you will not go to any year. First, you start with 23, 24. When you're calculating the stay in India, let's say I left for some country abroad today on 24th of February. Will you include that? Yes. Guys, the day you leave and the day you arrive, both are to be included. So 24th will be included. What if I come back on the 5th of March? So how do you calculate that? 31 days of March minus 5 plus 1. So this is a complicated way. Yes, this is the same calculation in GST. So I'm keeping the calculation separate as the same. So this is how you'll calculate when you come back to India. But guys, if you work on a foreign bound ship, what is a foreign bound ship? A ship which is going abroad. Not a ship which is going from Mumbai to Goa or Chennai to Goa. A ship which is going from Chennai to Singapore. That is a foreign bound ship. If you work on that ship, the day you leave India and the day you come back, that will not be included as per a document called CDC, Continuous Discharge Certificate. Don't go into details, it's just an attendance record. Yes. So in the exam, check where you're working. Mostly it will not be the ship, mostly it will be just normal. So you have to include the day you leave and the day you arrive. Next, guys, that is the first step. Basic condition 1. It's a Lakshman Rekha. If you say yes to this, have you crossed the Lakshman Rekha? And what do you become in that case? Resident. What do you become? Resident. But if you don't cross this Lakshman Rekha, we don't give up so easily because we want more people to become what? So we go to basic condition 2, which is as follows. In this year, in the previous year, and in how many years? But which 4 years? Preceding. That's the word. What is preceding? Preceding means before 23, 24. Does it include 23, 24? Before that year in the 4 years, has your stay in India year been greater than or equal to? And in the last 4 years, greater than or equal to? It is at this point you start going to the last 4 years. Don't do more oral calculation in the exam, guys. Very, very dangerous. Actually, write the 4 years, put the numbers, and then calculate. All the people who use calculator like a laptop directly, guys, will be in a very dangerous situation tomorrow in the exam. Yes. So write the 4 years, add up the numbers, and if both these situations are fulfilled, which condition are you fulfilling? Basic condition 2. In the exam, don't call it basic condition, just call it condition under which section? 6. If this Lakshman Rekha is crossed, what do you become? But if this is also not crossed, guys, then you become a non-resident and we will not disturb you again in this whole year. Next year, again, we'll have to check. Yes. Now, guys, while we're discussing this basic condition and basic condition 2, this helps you become either a resident or a non. This is the first filter. But now, as a resident, can you further be broken up into ROR and RNOR? Yes, and that depends upon another section called section 6.6 and additional condition 1, additional condition. Guys, these conditions on paper look very complicated in the last 10 years. That means preceding. And in the last 7 years, guys, they are going many years back, but it's very simple. First, let's go technicality. You should be a resident in how many years? Resident means ROR or RNOR, or you have to stay in India for at least 730 days. In any other material, you might find days different because the symbols are different. I've kept the symbol same. All of them are greater than or equal to. If both these conditions are what, guys? Yes, that means you're staying too much in India. You become, even if one of them is no, you become what, guys? In the exam, look at additional condition 2 first, easier to do. Calculate last 7 years. And if this is n, will you check this condition? No. Guys, that's a very simple way of saving time in the exam. Now, guys, while 10 and 7 years are too complicated, we don't know what we did last 10 days. How will you know last 10 years what we did? It's very simple, flashback mode. As a student in India, which country do you see in flashback mode? Which country does Elon Musk see in flashback mode? US. If I'm in Canada since 15 years, which country do I see? So if the flashback mode is India, only then yes, yes. His cues are like this. He left India for the first time. Yes. He came to India after 20 years. No. Guys, these are the kind of words you have to pick up. So don't worry about additional conditions. Use the shortcut flashback mode. Are we done with this, guys? You will either be a resident, non-resident, and here because of additional conditions, ROR or RNOR. Life is good here. Now we're talking about two people whom the government really loves. The government says if you're someone who's leaving India for what purpose? But you have to be an Indian citizen. Which citizen? You'll go abroad, you'll earn a lot of forex, the government likes you. And if you're an Indian citizen or a PIO and you're visiting India, like a Priyanka Chopra or a Siddharth Malia, when they come to India, they spend a lot of forex. In both these cases, the government says we'll have only one Lakshman Rekha for you. Basic condition 1, basic condition 2 will not apply. This is the place where most people falter. Guys, remember basic condition 2 don't apply to them. So they will be residents only if they stay for how many days? 180. Excellent, guys. With this, you will either become one of them. But if you become an NR, what do you become? The government is now a little more greedy. They want to convert some NRs into what, guys? So they want to make a non-resident into a deemed resident. What is this called, guys? Deemed resident. So the government basically feels only if we satisfy some conditions which are given under AIC1 or AIC2. That means you have to fulfill these conditions. Only then you'll be converted to RNOR. Basically, the government wants to target that one extra income. Now, what is AIC1 and AIC2? Pro tip. Guys, the Indian income should be more than how many lakhs? So first check that. If it's a poor guy, 3 lakh, don't bother him, let him remain as a non-resident. But if it's anyone who earns more than how many lakhs? Exam question, exact 15 lakhs. It has to be more. This is not more than or equal to, this is more. Guys, that's the first pro tip. In this case, you should be an Indian citizen, Indian income more than, and you should not be taxed in any country as a resident. That's the condition. If all three fulfill, congratulations to India. What do you become? And AIC2 is Indian citizen or Indian income more than. And this is similar to basic condition 2, whereby 60 days are replaced by the remaining part remains the same. And if you satisfy this or this, guys, what you become? RNO. Pro tip in the exam, look at income. In the exam, if the answer is ROR, will you do the amendment? No. RNOR, no. Amendment only applies to non-residents who are rich. But sir, what is Indian income? Indian income's definition happens to be, it is not because he's an RN1, it happens to be dear plus 1. Are we clear about it? We've also done a test in the class. Those test sums are also available on the Google Drive link. Yes? Alright. Next, guys, we are done with this residential status. 6-1 is what will come in the exam. That's my prediction for you. 6-2 is for, 6-3 is for, and 6-4 is for all partnership firm, AOP, BOI, AJP, all of them. 6-2 depends on, 6-4 also depends on if it's in India, resident, if it's abroad, And if it's partly in India, partly abroad, think like the government, they want you to become a resident if there's an India connection. Same thing here also, guys. Is it same? Then why are they not in the same section? Because guys, a HUF, a HUF can be further divided as a resident into OR and R and O. Remember, guys, if you have to go to Goa, who has to answer yes? Your parents. Your parents answer yes, you go to Goa. Same way for these two conditions. AC1, AC2 will be asked to the Karta. If Karta says yes for both, that means he is in India for 10 years, 7 years, then who becomes a ROR? HO. If he says no, who becomes RNOR? HO. 6.3 is very simple. It's a company. If you start any company in India, example Reliance, DMart, Zepto, all these are Indian companies, automatically no days, no control manager, nothing to be checked. And if it's a foreign company, example Tesla is a foreign company, only one exception. Sometimes foreign companies are effectively managed from India. That is the place of effective is in India. Example, Elon Musk moves to Goa with his board of directors. In a rare case, then it can be considered as a resident. Guys, this is section 6. Everyone wrapped up. 5 wrapped up. Now, only thing remaining is section 9.1. Guys, there are some 8 incomes. How many incomes? Where the government says, listen, there is an India connection. What connection? And each of these you have to see only from whose perspective, and also from whose perspective. The government says we may tax it, and what are these 8 incomes, guys? I, S, S, D, I, R, F, gifts. Guys, if you count, these are 8 incomes under section 9.1, and each of them there is some India connection. Let's start, guys, with I. Income from a business. You are one plus China, you are in China. You don't have a company in India yet, but you have an agent in India. Whom do you have in India? He's a dependent agent. He buys your phone, sells your phones. He's dependent on you. You are dependent on him. Exclusive agent. He does all the work for you. Stocks your goods, sells your goods, enters into contracts. He does everything like you are in India. Now, if he sells phones of OnePlus China in India, can it be taxed? Yes. He will be considered as a business connection, and OnePlus China's income of India will be taxed in India. Are we okay? But this has some exceptions. So that foreign companies don't leave India abruptly, we say that India exports news, movies, and diamond. So if even if we tax OnePlus China, we'll only tax him on India attributable income. We will not tax people who only purchase in India for the purpose of export. Remember, guys, Indian income will tax, but the foreign income will not tax. Anyone who collects what? News and views. The news reporters will be taxed in India, but the foreign entity will not be taxed in India. If you shoot what? And if you showcase diamonds, guys, that income which is in India obviously will tax, but that foreign income will not be taxed because these will not be considered as what? Business connection. Are these exceptions? Yes, highly important. Have been asked, will be asked. Guys, this section 9.1 has single-handedly given 7 marks to people in the last 3 years. And that could be you in the next year and this year. Next, guys, is S. Do you have salary? Who's paying your salary? Government of India. But you're not working in India, not in Jayanagar, not in Mumbai, not in Delhi, you're working abroad. Then the government says, listen, we tax half. So they will tax your salary. But how can they tax it? You've received it abroad in France, earned it abroad. So they say we'll deem it and we'll tax it in India. But remember, allowances, exempt. Next guy is 10.7. Guys, this Japanese guy, did he develop the metro in India? So he renders services in India. Will it be taxed in India? Yes. India connection. Different from which company? Guys, next, interest, royalty, fees for technical service. Guys, there is a guy abroad called whom? He is earning what? Interest. He is earning fees for technicals. Then why in the right mind can India tax it? How can India tax someone abroad? India is saying that listen, this money, this patent, these technical services are being used in India. If you use it in India, I will tax it. For what purpose? BPI. Business, profession, or income generating activity. Business is an academy like this. Profession is a CA firm like mine, and income generating activity means buying shares. Guys, all this is great, but there's an exception. If interest is being paid by whom? One NR to another, then how is India taxing? India says if you use it in India for business and profession, I'll tax. But if you use it for income generating activity, I will not tax. And remember, guys, this usage is not checked for government of India. That means if the government of India is paying IRF, you don't check usage, you always tax. And last is gifts. Guys, if you like giving gifts to people abroad, then that liking has to be reduced now up to 50. If you give gifts more than 50,000 in terms of property, property means MISB, SAT, job. That means money or jewelry, etc. More than 50,000, the government will not tax you. They will tax the other person abroad on the entire amount. So, guys, your gifting has to be now either curtailed or you need to give iPhones, bags, etc. That is allowed. Cash gift, property gift, more than how much? Now, if you give 55,000, how much will be taxed? Guys, think like the government, the entire thing will be taxed. Guys, this section 9.1, section 6.1 are important. Deemed resident, the first part AIC1 had a section called 6.1.A. That is important. This is an excellent video which you recorded. Watch this video with your handwritten notes. Pause it in between, read your handwritten notes. Once you finish, this is the start. Then you move over to sums. You don't need to look at the ICI material at all, except for any sum that you want. Over to now sums for this chapter. Thank you so much, guys. All handwritten notes now will be centered towards a chapter which is called IFOS. This is in the series of revision videos. And we're looking at the last head of income, which is called what, guys? But surprise, surprise, we've done this as a second head of income. After which head? House property. This is the next head of income. Why are we doing this now? Because when we do PGBP, this head of income is really helpful. So the head of income is called what, guys? IFOS. Let's see how well we remember it and let's see how well we can revise it. Everyone on handwritten notes. In case you don't have handwritten notes, then you can use the QUIK-Book, which I'll be using right now to help you revise IFOS entirely. Yes, here we go. Guys, IFOS is the one of the last head of income. Generally, guys, all your etc. or the extra incomes go into IFOS. Yes, but IFOS I'd like to divide into three parts. So let's see what IFOS is. The first part of IFOS is called general. The second is called dividend tax, and the third is called gift tax. But all of them are in IFOS only. I'm just dividing them because your ease of understanding. No book divides it, only I divide. Let's talk about gift tax, guys. Gifts in the exam, if they say gift received, great. If they sometimes don't give gift, you have to know that anyone giving you like that only is a gift. Gift is also called receipts without consideration. Excellent. Whenever you get a gift, it can be a watch, it can be a laptop, it can be gold, money, etc. It is taxable only if it's in the definition of. And what is the definition of property, guys? MISB SAT job. I'm just going to go to the gift taxation part. Yes, only if it's MISB SAT job. What are the main ones? Money, immovable property, shares and securities, bullion. Bullion means precious metal, and jewelry. Guys, sculpture, archaeological, not so important. Jewelry. In the exam, I'll tell you what comes in the exam, guys. Cash, land, jewelry, shares. These are four main things which come in the exam. If you are getting this kind of property, will it be taxable? Yes. But the government says, I don't want to tax 100 rupees of your cash received on your birthday. When you touch someone's feet, they give you 101. No, not that. I want to tax only valuable gifts. That is those gifts which are more than 50. So they divide the entire gifts into three parts, which is called MMI. Money, movable property. In your mind, keep them separate. Don't aggregate them. But within them, will you aggregate? That is what do you mean by is money on Holi, Diwali, birthday, CA clearing. All of them you add in the year. And if it's more than, example, 57,000, you will tax how much? Entire, because you always think like the movable property like gold shares you will add, and you will tax only if it is more than 50. And immovable properties individually. What do I mean by that? If you get three movable properties, see them individually. Guys, next there are situations in which, guys, the government doesn't want to tax you, and those situations are given in step number 2. In the exam, gift tax, whenever you're quoting, you will quote section 56 to 10 because you always want. And guys, gift tax is always seen from whose perspective? This is. If you're thinking, oh, Mr. A gave land, if he gives land, let him be, we'll see him in capital gains. But Mr. B received it from his perspective. Guys, let's talk about don't tax tip and COVID money. If the property is received on someone's or it's received on someone's inheritance. Sorry, we'll take it from there only, guys. Don't just one. Guys, either on death or on inheritance. Very, very similar. You've got some money from a trust, from a fund, or from a local authority. Then, guys, COVID money received for treatment or COVID death. Guys, COVID death within 12 months and the limit is 10 lakh. If it comes from the employer, there is no. On marriage, guys, there is no gift tax and money received from relatives. Guys, relatives only for gift tax. How many relatives do we have? 232. What do I mean by 232? If you're in the middle, two spouses, three siblings, and two lineal ascendants and descendants. What do I mean by if you're in the middle, your spouse? Then three sets of brothers and sisters, your brother, your sister, your spouse's siblings, and your parents' siblings. Everyone above you, but moment you go above your parents, it's only lineal. Lineal means dada, dadi, not nana, nani. Your people above your spouse, that is her parents, her grandparents, and people below, of course, hoping it's same children and grandchildren. Again, guys, this and the spouse is everyone's plus one. Example, my sister, is she my relative? My sister's husband is also my relative. And remember, you don't like any children except your children. My niece is not my relative. Yes. Oh, but from her perspective, that is separate. I'm looking at from my perspective first. And guys, step cousins, etc., are not your relatives. For a HUF, who are relatives, guys? All the men. Guys, girls, when you get married, you become part of the next HUF. All right. So that is gift tax, guys. We've covered gift tax well. HUF, guys, on PM. Only one partition when given to the members. If it's a private trust also and specified persons like slum dwellers, whenever you get any situation to common situation in the exam, marriage, relatives and trust. You've seen Pushpaka trust, we've done a sum also on that if you remember. All right. Next, guys, a very subtle point is they don't give you a gift, they give you something inadequate. Example, the surgeon bought a 10 lakh jewelry for 3 lakh. How much was the benefit? He bought a 1 crore flat for 60 lakh. How much was the benefit? Guys, in reality, no one gives you such a big bargain. That means you paid cash, which is illegal, which is black, and the government doesn't like it. So they say this is called benefit tax, shortcut IB. What is the shortcut? Are you paying inadequate? And is it leading to a benefit? Yes, guys, this is IB and it will be taxed. Guys, benefit up to how much thousand? But I've got a benefit on this watch. No problem. On this laptop, no problem. The benefit only if it's in relation to step 2 does not apply here, and step 3 only if the benefit is more than 50. Here there is no MMI. Money is not there, only movable and immovable. And when it's immovable, guys, 50,000 is a very low limit. So they give you two numbers, A, B. Guys, calculate A always 50,000. B is always 10% of sale consideration or stamp duty value. If you're ever confused, you can't touch stamp duty. You can touch sale consideration. And if sale consideration is 60 lakh, 10% is how much? So 6 or 50,000, which is higher, up to that much you can bargain. But 1 crore house for 60 lakhs. So what is your bargain? Sorry, you'll be taxed on the entire amount under 56 to 10, same section, IFOS. Yes. Guys, what if there are two stamp duty values? How is that possible? Date of agreement, date of. If there's one, no problem. But if there are two, you would like to take the lower one. If date of agreement is lower, then there's one condition. If date of registration is lower, date of agreement, they say, listen, so that we know that actually agreement happened on that day or before that day, you should have paid some money. Some means any amount by modes other than CBC. In the exam, you can't write CBC with this enthusiasm. Right? Yeah, no cash, no bearer check, and no cross. Guys, bearer check is like money, which is no name is written. That's called bearer check. Cross check, you only write two lines. So the only check which is allowed basically is an account credit check. Can you do NEFT? Yes. RTGS, Paytm, GPay, everything is allowed except the CBC. Yes. Now this is done. This is gift tax. We now move to dividend. Guys, dividend is a great thing. You buy shares, you hold it nicely, and you get some dividend. But dividend isn't taxable. There used to be a time under Section 1034 when dividend was exempt, but that party has ended. Now it is taxable, and there's a shortcut called DTI. Dividend taxable under I. What does that mean? Your and my dividend IFOs. Rakesh Jinjonala's dividend, no matter where it is, only in one direction it goes, that is IFO. And remember, when you earn dividend, guys, there's not too much deduction. You'll get one, that is interest. We'll see it ahead, but up to 20% of your dividend income maximum you'll get interest deduction. Never coming back now to dividend. Guys, the company has profits of 222 lakh. How much? Has the company already paid tax? Yes. Now if the company declares dividend, it goes to whom? Don't they have to again pay tax? Yes. But the government has said the company has paid its own tax. You pay your own tax. The company has separate legal identity. All this is argument. Now let's come to the law. The government is saying, listen, if the 222 lakhs remain with the company, I have no problem. But if they go from the company to the shareholder, by whatever name you call it, we will consider it as deemed dividend. In 222A, the company gave out assets. That was taxed as deemed dividend 222A. In B, the company gave bonds, preference shares, even that is deemed dividend. In C, the company closed down and gave assets, even that is deemed dividend. And if you decrease the share capital, even that is deemed dividend, but only up to accumulated profit. There is a E part also. E is exception. What is so exceptional about it? It only applies to private. In the exam, they can give you a private company or closely, or they can say it is not a widely held company, which means a closely held company. And it only to a BIH. What is a BIH? A person who holds 10% or more shareholding in a company or 10% or more profits. But right now we're talking about company. Now, guys, when a loan is given from that private company to the BIH, this is problematic. BIH, you wanted a loan, go to a bank. Why are you going to a company? This is because I know you're trying to remove money, so that is also deemed dividend. Guys, whether given directly or given to any entity in which the BIH has substantial interest, that means the money will go, or to a third party for the benefit of the BIH. The shortcut is BET. BIH directly, or to an entity, or to a third. In the exam, they have to write the third party for the benefit of BIH. Are we okay, guys? In all three cases, is it taxable? Yes, as deemed dividend. Now, guys, there are exceptions. One is BPL. What if this is not a loan, but it is for the business advance? Then no taxation. Even if the assessing officer is saying that it is wrong, it is not tenable in law. Next, if it's a public company, and if it's a lending or a banking company. Guys, what if you repaid that loan? Still, and what if you paid interest? Still, it will be considered deemed dividend. But remember, only up to accumulated profits. Exam question: you took a loan, but the company had only made losses since inception. No, because only if they're accumulated profit, the government is interested in taxing. And now we go to the general part. There are some incomes which are taxed under IFOS. Guys, IFOS section is 56. What is the section? If there is any income which you can't tax under any other head, guys, can you put it under 56? Yes. Plus, there are some specific incomes. I'm just going to tell you the incomes. You have to think and tell me whether it's IFOS. First, dividend. Interest from your bank account. Guys, I have some rent of only land. I have composite rent, furniture, and house. Which part? Guys, I have a key man insurance, KT. Guys, what is key man insurance? A company for its key persons takes life insurance, which is key man insurance. It's a life insurance which is always taxable. 1010D does not apply here. KT, key man, always taxable. If the company gets the money, if by chance the employee leaves, takes the policy with him, and then he gets the money back. And if he's no more and the family gets the money back. So KT will come in three chapters. You go to McDonald's, you had that veg burger, which was actually a chicken burger. Did you file a case? Did you get the money, guys? That is a non-business contract. Again, guys, in IF. If you forfeit any advance, that is also going under which head, right? And guys, if you in life are get lucky and earn any casual income, who wants to get lucky with you? Government wants to get lucky on the same. So no deductions, no losses, no basic exemption limit against casual income. Guys, you're a small company, closely held company, and you issue shares. What are you issuing? Remember Zepto? If there's a symbol which is called issue price, what is the symbol, guys? If that issue price, example 200, is more than 100 and fair market value 180, is there an excess? That amount will be taxed, guys. If this equation is not fulfilled, then there is no tax, guys. This is only applicable to closely held companies. There is a 4-mark question on this which we have solved. And welfare amounts we discussed in PGBP ahead. These are some general incomes which will always go in IFOS. Guys, can the government compulsory acquire property? That we'll talk in capital gain, but because they pay you that money late, they pay you interest on compulsory acquisition. Is it taxable in the year of? But that interest belongs to 5 different years, 7 different years. No, still it will be taxed in the year of receipt, but you will get a 50% standard deduction. Standard means every time, and standard means nothing more. Let's go to deductions. Guys, when you earn incomes, you also have what, guys? Deductions. Some specific deductions: interest on compulsory acquisition, 50%. If you earn dividend income, what is the only deduction? Interest, and that to maximum 20% of your dividend income. Next, guys, if you have any family pension, that brings me to PT. What is PT? Pension is taxable. If you get pension while you're alive, salary, when you're no more, guys, your family gets. But because the government feels bad about taxing family pension, they give a deduction which is A or B. A is One third of the monthly pension, B is 15,000 per month, whichever is lower. In the exam, take the numbers, do the maths, but deduction, whichever is income, whichever is, think like the government, act like the government. Okay, so these are general expenses also, which can be taken a deduction under IFOS. And guys, certain expenses the government doesn't want you to take deduction, they are called disallowances. Guys, poor wins cash income. Everyone, here is it. Poor wins cash income. Now, guys, in this case, there is personal expenses disallowed. Casual income, any expense disallowed. Guys, I win 4 lakh rupees in the lottery. My lottery ticket price is 40,000. Guys, it's my business to sell lottery tickets. I bought a lottery. Still IFOS. Next, guys, cash. Up to 10,000 per person per day. Okay, remember, exact 10,000 is okay. Above that, how much is this allowed? Super, guys. When I say cash, I mean CPC. And income tax paid will always be income tax refund, interest on income tax, interest received. And the only one which is taxable, it goes to IFOS. Guys, you are paying outside India or to a resident in India. Please make sure if the government tells you deduct TDS, you should deduct it. If you don't deduct it, the government is 100% angry. And in resident, because the resident is in India only 30%, that means it will disallow it entire amount or 30%. But don't worry, when the money gets to the government again as taxes later, will you get the reduction back? Yes. And this R we will be doing in PGBP. You don't know this right now. Guys, IFOS is very, very similar to PGBP. Sometimes there's a standalone question, sometimes it's part of a bigger question. Watch this recording. The moment you stop this recording, make sure you've revised everything in your handwritten notes. And after that, the more the sums, the better the marks. Thank you so much. All right, so looking at the biggest revision and the most important revision lecture, because I'm very sure when you're at the stage of PGBP and you see any book, ICI material will be definitely over 100 pages. Your handwritten notes also will be over many pages. So the easiest way to start revising this chapter, including one day before the exam. So let's say your paper just got over and you're going back home, you're in the car or in the bus or somewhere on the auto, you can just plug in your earphones and revise a chapter called PGBP because very important. First, let's talk about where does it come in the exam paper. Guys, the first question, number one, is it compulsory? Yes. And in that, a major part will be PGBP, not the entire 14 marks. I don't want to give you any false hopes, but a major part of that will be PGBP. Some important amendments also, and hence this chapter becomes really, really important. Watch this video till the end along with your handwritten notes. If you don't have handwritten notes, then use the QUIK-Book and you can revise using that as well. And once you finish that, then move on to sums. Let's start, guys. PGBP is one of the heads of income. Is it right? Yes, it's right in the middle. It starts at section 20 and goes on to section 44. A small pro tip, revise without sections first and then we'll plug in the sections later on. Yes. Now, guys, in PGBP, you have business and profession. Are they two different things? But both are taxable under which head, guys? Same. And there are three types of businesses actually. First is called non-speculative business, in which you don't speculate like an academy like Yashas Academy or Pinnacle Academy or any academy or SMAT. That basically we don't speculate. A CA firm, etc., will all come there. All Zomatos, etc., are non-speculative. And speculative is where you buy and sell at the same time. Right now, we buy shares and sell shares. That will be speculative. And last is what is specified. We see specified business in more detail in this revision video. But two people, guys, always consider normal BD. One is bankers. Who? Bankers, investment bankers. Whenever they do intraday trading, it is considered what? Normal. And what is the derivatives like futures options? If you have any profit or loss, that will always be considered as normal. That is non-speculative business. Let's start with income, guys. PGBP has a lot of income. Section 28 says there are a lot of income, but very predictable. For McDonald's, what is the income? Sales. For Yashas Academy, what is the income? Fees. For a restaurant, guys, whatever the sales, etc. For a Netflix subscription are all incomes, but there are some income which only go into PGBP. First is non-compete fee when someone pays you for not doing something. Next, guys, P salary and pay interest. What is that? When partners get salary, when partners get interest, yes, it should not go in salary, should not go in interest. Exception will go in which head, guys? PGBP. Association like ICI, when they make money, where will it go? PGBP. Export benefits when you don't use and you sell them, will also go in PGBP. Then, guys, KT. Keyman. If Keyman Insurance, guys, is there and the company gets the key. You know, Keyman Insurance, life insurance on important people, and Keyman Insurance is always taxable. If the company gets the money, it will be taxable under which head? Just going one step ahead is the person gets the money and if the family gets the money, but right now PGBP. Guys, can you get benefits or gifts in relation to business and profession? Example, if you do as a CA do good work, your client can give you a gold coin, air tickets, etc. Is it taxable? Above 50,000? No. Any gift? Any amount. That means even if it's 10,000, 20,000, obviously in reality people don't show it, but in the exam, will you show it? Yes. And you will write any gift will be taxable under which head, guys? If it's related to your business and profession. And remember, if you have stock in your business, if you sell, will it be taxable? But if you don't sell, convert it into asset, is it also taxable, guys? Under the same head, which is PGBP, that is section 28. When we move to section 29, it only tells you how do you calculate tax, guys. You first take your incomes, you minus what? Deductions, because that's give and take. You offer income, you get deduction, and final number is what is called PGBP. Let's now talk about expenses. Guys, can a business have a land and building? Shortcut is RRTRI. Rent, rates, taxes, repairs, and insurance. All of that you can minus, but remember, guys, only revenue expense. Only which expense? The moment you spot any capital expense, straight take it to the balance sheet, but you can take depreciation, like adding a new floor to this building, right? Is it a capital expense? Take it where? And take depreciation. Now, guys, for plant, machinery, and furniture, example, all these ACs you see, projector you see, furniture you see, can we have repair? Can we have insurance? In a nutshell, guys, in PGBP, you can take any expense as long as it's connected to one, guys. That's a very, very nice shortcut. Next, guys, we go to the residual dustbin section, section 37. If there is any expense in PGBP which does not have its own section, where will it go, guys? Except two expenses. Anything that is illegal or bad in law, like any penalties, like any bribes you pay, or any secret commission will not be allowed. And any CSR expense. CSR expense, who tells you to do? Company's law. So income tax law says I will not allow you unless it's two expense, which is called scientific research and family expenditure, which you will see in this video ahead. Now, guys, if you do normal businesses, the government is okay, happy with you. But if you do some scientific research, is the government even happier? They say you are special. Who are you? If you do scientific research, example, if you want to find out a cure for cancer and you do research, that's scientific research, the government gives you two benefits. How many benefits? The first one is revenue. Guys, from today, let's say to 27 February, if you're starting your business, will you get deductions from today? But for this scientific research, how many years back? From today, not from the beginning of the year, from today, 3 years back, any revenue expense which is of raw material and do that also you can take in the first year of business. And second, capital expense. Example, you bought a microscope for 5 lakhs. How much, guys? Is it an asset? Generally, we will take it to balance sheet and you will minus depreciation. But the government says you are special. If we won't give you 10% depreciation or 15%, we will straight give you. Guys, this deduction under section 35 is only a replacement of depreciation. So full deduction will you get it today? So what is the asset cost today in the balance sheet? Zero. That's okay. But as long as you're getting a huge deduction, and why deduction is good? Because more the deduction, guys, lesser is your profits and lesser is your tax. Except land, they don't get deduction because land does not get depreciation. But all this is in-house scientific research. As a CA firm, can I do scientific research in-house? No. But can I donate? Yes. If you donate to SRA, Scientific Research Association, of course recognized, will you get a deduction? Yes. Social and statistical research. Indian company whose main objective is, and example, Baba Ramdev's company or USIF. If you donate to any university, specified person, IIT or national, will you get a deduction, guys? Yes. So in all this, whatever you donate, you'll get a deduction. Guys, this is scientific research, you are special. Now, guys, again, the next section, you're doing a business which is helping the entire humanity. Example, starting a 100-bed hospital. These businesses the government has specified and they are called which business? In specified business, if you buy any capital asset today, tomorrow, later on, or if you bought them before and you capitalize it. What is the word capitalize mean? Introducing into the business's balance sheet. Then the government says, listen, if you buy a building for the hospital worth 70 lakhs, general normal people will get what? Depreciation. But you are special. The government will give you how much reduction? So 70 lakh minus 70 lakh, is that a great thing? Yes, it's a great thing, but the government takes a promise from you guys in specified business. 8 land. What is the shortcut? 8. If you are using this building, you have to use it for any specified business for how many years? Next, guys, can you have losses? Generally, you get a lot of deductions. Those first years you have losses. That loss you can set off, but only against other specified businesses only. 8. You should get yourself audited because we don't know how many capital assets you bought. To check that, we need a serious certificate, that is an audit. And N, basically the plant and machinery. Example, for the hospital, can you buy X-ray machine, MRI machines, ACs? You can buy all of them, but it should be new plant and machinery. But second hand is allowed up to how much percent? Example, if all my machinery is 1 crore, then up to how many lakhs? But what if it's 22 lakh? Then the excess 2 lakh will not get 100% deduction. You'll get only depreciation. Remember this, guys. And anything used abroad will be considered as new in India. Guys, this is a promise. Now, guys, let's go to the next part. In scientific research, I forgot that microscope was for how many lakhs? You have to use it for which purpose? Scientific. If you sell it for 4 lakhs, then up to cost they will add it where, guys, in PGBP. 5 lakh PGBP, 6 lakh. Then 5 lakh in PGBP up to cost in PGBP, above cost in capital gain. Same thing happens here also, guys. If you sell this building of 70 lakh for 70 lakh, PGBP 65 lakh, 75 lakh, then 17 PGBP fine. The same as scientific research, but guys, I converted the hospital into a mall after the first year because the hospital wasn't working. Mall is working very well in Bangalore, so I converted it. Is that okay? Yes. But the government says because we gave you deduction, we'll reverse it RD. What is it called? Super. Some people have revised, others will also have to revise. RD means the amount has to be reversed. 70 lakh will be reversed, but we'll give you depreciation for that first year. Are we okay with this, guys? Yes. This is called specified business. Guys, which are the specified business? You don't need to buy heart. Exam will tell you this is a specified business, but we still have a shortcut. Super fast buy can cover 3 hospitals, 3 institutions, 3 workshops. What is this? You can go to your main book and the business is there. You can relate to it and you can just read it once. Next, guys, you have some expenses which are before starting the business. They are called preliminary expenses. Tongue twister for me, so I always call it PE. Example, starting the company, MOA, AOA, marketing, all that is, guys, preliminary expenditure. Do you get a deduction for it? The government says it is before starting the business, so I can't give it to you as a cake. I'll give it as a pastry. Example, if it's 10 lakh, I'll give it to you 2 lakhs for how many years? From the year you start that business for 5 years. But only be careful about one expense or 4 expenses, which are called project and project report, feasibility study, engineering study, market. In these four, either you do it in-house or you do it from an approved source. Otherwise, we'll not give you this deduction. And guys, because people can take huge fees, the government has limited it to cost of project. They are 5%. At the end of the year, go to that year and see the cost of the project. Cost of the project means all the cost, land, building, everything. Uska cost, take 5%. That's the limit. And if you're a company, 5% of capital employed or that whichever is higher. That's a benefit because they want to encourage people to start new businesses. And what is capital employed? Equity, preference, debentures, loans. And if it's foreign borrowings, only if it's taken for a period of more than 7 years will include it. Otherwise, people artificially inflate that number. Guys, this is called 35D, preliminary expenditure. Next, guys, if a company is paying VRS expense, which expense? A company called Delhi Development Authority is paying VRS expense. In that, the government says, no problem, I'll give you a deduction. But these VRS expenses are huge, so I'll not give you as a cake, but I'll give you as a in how many installments from the year you start making the payment. These are different deductions. We now go to specific ones. I'm going to give you a list of deductions. You tell me, is it connected to business? If it's connected to business, you can take a deduction. This is section 36. Section is not important. Insurance premium for your business. Yes. For stock, for employees' health, not life, for health. And cattle, like Amul, like Nandini, etc. Next, guys, bonus and commission to employees. Next, guys, interest on business. Guys, all businesses take loans from banks, friends, etc. You can pay interest at any rate, you'll get the deduction, except interest on interest, penalties, interest on income tax. No. Guys, what if you don't take a loan? Can you issue zero coupon bonds? A zero coupon bond is issued at 85. So, how much are you getting money? No, as not an investor, as a company, how much are you getting? But when you repay, you have to repay 100. Example, so what is your expense? 50. Now this 15 or 15 lakh or 15 crore, it's an expense, but of which year? All the years of zero coupon bond, you have to spread it based on number of months. Example, if the zero coupon bond is issued on the 5th of February, which date? If it's up to 50, they have to go to 1st. And guys, if the redeem happened on 26th of February, then you have to go to the end. So if it's after 15, you go to the end of the month, otherwise before, and you spread it based on number of months. This is a mathematics calculation. Next, guys, as a master, do you have to take care of your employees? Yes. Employees are called slaves, employer is called master. You pay for their salary, do you get a deduction? Yes. Similarly, if you pay for their PF, or you pay for their NPS, or you pay for their, will you get a deduction? Yes, this is master's contribution, you get a deduction, but please pay by John. Please pay by when? What is John? John is July, October, or November, which are our return filing due dates. Please pay by then, you'll get the deduction. But guys, can the slaves also give you their money? Example, the master says that I have opened a PF account. The slave says, here is my 10,000. Can you put it in the account? He says, yes. But so that they don't misuse the money, this is called welfare amount. You first add that 10,000 to PGBP income. But is it really their income? They are intermediary guys. They're only a middle person, but we'll still add it and we'll minus it only if they pay within monthly due date. Sir, what is monthly due date? Don't worry. It's like electricity bill. February's electricity bill, when will you pay? September, October. Guys, September you'll pay in October. So basically, the next month if you pay, you'll get a deduction. But what if you pay after 4-5 months? Then it will be added, but no deduction. That means you'll have to pay tax on that. That's a punishment. Yes. Next, guys, for family planning expenditure, can you spend money? But it's not connected to my business. But the government says still you're helping the country, which is great. So we'll give you a deduction, capital expense as a pastry, not as a cake. That means how many parts? And revenue expense, can you take a deduction? Yes. But guys, for this, only available to which companies? This came in the exam, Mr. A get family planning expenditure. Will he get the deduction? No. Almost 99% went wrong because the exception was only available to which companies? Next, guys, on the highway, do you pay toll? Same way on the stock markets, you have to pay something called STT and CT. And if you pay that, will you get a deduction? Yes. But only in which head, guys? So only share traders, share brokers, etc. will get this deduction under PGBP, and this is all the expenses. This is the deduction. The only thing now we'll do next is disallowances, guys, and then we will continue and we'll make another part of this video. So disallowances, let's do. Disallowances are those expenses which you incur, but the government says sorry, no deduction. Can you tell me some disallowances? Shortcut: poor, wins, cash. Is it similar to IFOS? Yes, it's not even similar. It's the same. Personal expenses. That means, guys, all my household expenses can I take in business? No, sorry, you can't take personal expenses, are not allowed. Oh, outside India, if you pay some money without deducting TDS, government say I can't catch hold of that foreign guy. I'll disallow that entire amount and I'll allow it to you only when I get the tax. Next, guys, if you pay to a resident in India, because he is resident in India, if you don't deduct TDS, the government says I'm 30% angry. So if you pay 1 lakh, how much deduction will you get? 17% you'll get, but 30% will be denied to you, and they'll give it to you, but only when the government gets the tax. Next R. Guys, to relatives or with relatives, can you manipulate? Yes. Guys, excessive income is never a problem. Excessive receipt is never a problem. Excessive expense is a problem. Remember, USE is an expense unreasonable or excessive. Example, for laptop repair, you had to pay 15,000. How much? But you paid to your spouse 1,50,000. Do you remember that example? Yes. So U is unreasonable or excessive. What is S? Specified person. And what is the expense? That means the government knows that only excess expense you pay to specified persons. In that case, the government says the extra amount I will disallow. Important, watch, read the handwritten notes well. Guys, who are specified persons? In a nutshell, these are people whom you can manipulate with. In an individual. Relatives. But sir, relatives are 232. No, guys, relatives have two definitions. One is 232, which is only for gift, and everywhere else it is clock. What is the clock? People next to you, spouse. This side, below, children, and above, parents, and these are the people are specified persons. And second, anyone whom you hold substantial interest, basically 20% or more, basically you control them or they control you. For a HUF, members or substantial interest both ways. For a partnership firm, you can manipulate with partners or their clock and substantial interest both ways. For a company, directors and directors clock, directors spouse, directors children, or substantial interest both ways. In a nutshell, guys, any expense with these people. In the exam, they give you this question that you paid excess expense. You paid to sister, to sister-in-law. Guys, sister-in-law is not in that clock. No problem. Guess what ICI asked? Sister-in-law. So they love exceptions. Your concept should be super strong for this. Next, guys, winning is not here. Then what is cash? Up to how much amount is allowed? If you pay higher than that, then don't allow it. For GTA, how much is the amount? 30. But are there some exceptions? Yes, there's a rule called Rule 6DD. If you pay to fishermen, animal husbandry, etc., how much is allowed? Yes. If you pay to cottage industries without the use of power. If you pay to someone who's in a village, etc., without banking facility. If you pay to an employee for retirement benefit up to 50,000, and an employee if you pay salary in cash who's out of office for more than 15 years. As long as on the salary there is TDS deducted, we'll give you the deduction. And guys, last one is income tax. Do you get a deduction for income tax? GST? Yes. Municipal tax? Customs? But for income tax, we don't give you no ignore income tax. Interest also, unless you're earning the interest. Guys, there's some disallowances provisions. No provisions allowed in the Income Tax Act. If you make any payments into unapproved gratuity funds, etc., disallowed. unless the money is finally paid to the employer. So guys, these are some disallowances which you have to be careful about. And in business, if you make any ads in Times of India, can you take a deduction? But if you put ads in political magazine or political service, will you get a deduction? But it's popularizing my company, no? But still, it has a political angle, so that is disallowed. In the second leg of the video, we'll go to 44A, 44AB, and all the additional points, and that's how we wrap up PGBP. Thank you so much. All right, so looking at the biggest revision and the most important revision lecture, because I'm very sure when you're at the stage of PGBP and you see any book, ICI material will be definitely over 100 pages. Your handwritten notes also will be over many pages. So the easiest way to start revising this chapter, including one day before the exam. So let's say your paper just got over and you're going back home, you're in the car or in the bus or somewhere on the auto, you can just plug in your earphones and revise a chapter called PGBP because very important. First, let's talk about where does it come in the exam paper. Guys, the first question, number one, is it compulsory? Yes. And in that, a major part will be PGBP, not the entire 14 marks. I don't want to give you any false hopes, but a major part of that will be PGBP. Some important amendments also, and hence this chapter becomes really, really important. Watch this video till the end along with your handwritten notes. If you don't have handwritten notes, then use the QUIK-Book and you can revise using that as well. And once you finish that, then move on to sums. Let's start, guys. PGBP is one of the heads of income. Is it right? Yes, it's right in the middle. It starts at section 20 and goes on to section 44. A small pro tip, revise without sections first and then we'll plug in the sections later on. Yes. Now guys, in PGBP, you have business and profession. Are they two different things? But both are taxable under which head, guys? Same. And there are three types of businesses actually. First is called non-speculative business, in which you don't speculate like an academy like Yashas Academy or Pinnacle Academy or any academy or SMAT. That basically we don't speculate. A CA firm, etc. will all come there. All Zomatos, etc. are non-speculative. Speculative is where you buy and sell at the same time. Right now, we buy shares and sell shares. That will be speculative. And last is what is specified. We see specified business in more detail in this revision video. But two people, guys, always considered normal. BD. One is bankers. Who? Bankers, investment bankers. Whenever they do intraday trading, it is considered what? Normal. And what is D? Derivatives like futures options. If you have any profit or loss, that will always be considered as normal. That is non-speculative business. Let's start with income, guys. PGBP has a lot of income. Section 28 says there are a lot of income, but very predictable. For McDonald's, what is the income? Sales. For Yashas Academy, what is the income? Fees. For a restaurant, guys, whatever the sales, etc. For a Netflix subscription are all incomes, but there are some income which only go into PGBP. First is non-compete fee when someone pays you for not doing something. Next, guys, P salary and P interest. What is that? When partners get salary, when partners get interest, yes, it should not go in salary, should not go in interest. Exception will go in which head, guys? PGBP. Association like ICI, when they make money, where will it go? PGBP. Export benefits when you don't use and you sell them, it will also go in PGBP. Then guys, KT. Keyman. If Keyman Insurance, guys, is there and the company gets the key. You know Keyman Insurance? Life insurance on important people and Keyman Insurance is always taxable. If the company gets the money, it will be taxable under which head? Just going one step ahead is the person gets the money and if the family gets the money, but right now PGBP. Guys, can you get benefits or gifts in relation to business and profession? Example, if you do as a CA do good work, your client can give you a gold coin, air tickets, etc. Is it taxable? Above 50,000? No. Any gift? Any amount. That means even if it's 10,000, 20,000, obviously in reality people don't show it, but in the exam, will you show it? Yes. And you will write any gift will be taxable under which head, guys? If it's related to your business and profession. And remember, if you have stock in your business, if you sell, will it be taxable? Yes. But if you don't sell, convert it into asset, is it also taxable, guys? Under the same head, which is PGBP, that is section 28. When we move to section 29, it only tells you how do you calculate tax, guys. You first take your incomes, you minus what? Deductions, because that's give and take. You offer income, you get deduction, and final number is what is called PGBP. Let's now talk about expenses. Guys, can a business have a land and building? Shortcut is RRTRI. Rent, rates, taxes, repairs, and insurance. All of that you can minus, but remember, guys, only revenue expense. Only which expense? The moment you spot any capital expense, straight take it to the balance sheet, but you can take depreciation, like adding a new floor to this building, right? Is it a capital expense? Take it where? And take depreciation. Now, guys, for plant, machinery, and furniture, example, all these ACs you see, projector you see, furniture you see, can we have repair? Can we have insurance? In a nutshell, guys, in PGBP, you can take any expense as long as it's connected to one, guys. That's a very, very nice shortcut. Next, guys, we go to the residual dustbin section, section 37. If there is any expense in PGBP which does not have its own section, where will it go, guys? Except two expenses. Anything that is illegal, or bad in law, like any penalties, like any bribes you pay, or any secret commission will not be allowed, and any CSR expense. CSR expense, who tells you to do? Companies law. So income tax law says I will not allow you unless it's two expense, which is called scientific research and family expenditure, which you will see in this video ahead. Now, guys, if you do normal businesses, the government is okay, happy with you. But if you do some scientific research, is the government even happier? They say you are special. Who are you? If you do scientific research, example, if you want to find out a cure for cancer and you do research, that's scientific research, the government gives you two benefits. How many benefits? The first one is revenue. Guys, from today, let's say to 27th February, if you're starting your business, will you get deductions from today? But for this scientific research, how many years back? From today, not from the beginning of the year, from today, 3 years back, any revenue expense which is of raw material and do that also you can take in the first year of business. And second, capital expense. Example, you bought a microscope for 5 lakhs. How much, guys? Is it an asset? Generally, we will take it to balance sheet and you will minus depreciation. But the government says you are special. If we won't give you 10% depreciation or 15%, we will straight give you. Guys, this deduction under section 35 is only a replacement of depreciation. So full deduction will you get it today? So what is the asset cost today in the balance sheet? Zero. That's okay. But as long as you're getting a huge deduction, and why deduction is good? Because more the deduction, guys, lesser is your profit and lesser is your tax. Except land, they don't get deduction because land does not get depreciation. But all this is in-house scientific research. As a CA firm, can I do scientific research in-house? No. But can I donate? If you donate to SRA, Scientific Research Association, of course recognized, will you get a deduction? Social and statistical research. Indian company whose main objective is, and example, Baba Ramdev's company or USIF. If you donate to any university, specified person, IIT or national, will you get a deduction, guys? Yes. So in all this, whatever you donate, you'll get a deduction. Guys, this is scientific research, you are special. Now, guys, again, the next section, you're doing a business which is helping the entire humanity. Example, starting a 100-bed hospital. These businesses the government has specified and they are called which business? In specified business, if you buy any capital asset today, tomorrow, later on, or if you bought them before and you capitalize it, what does the word capitalize mean? Introducing into the business's balance sheet, then the government says, listen, if you buy a building for the hospital worth 70 lakhs, general normal people will get what? Depreciate. But you are special. The government will give you how much reduction? So 70 lakh minus 70 lakh, is that a great thing? Yes, it's a great thing, but the government takes a promise from you guys in specified business. 8 land. What is the shortcut? 8. If you are using this building, you have to use it for any specified business for how many years? Next, guys, you have losses. Generally, you get a lot of deductions. Those first years you have losses. That loss you can set off, but only against other specified businesses only. A. You should get yourself audited because we don't know how many capital assets you bought. To check that, we need a serious certificate, that is an audit. And N. Basically, the plant and machinery. Example, for the hospital, can you buy X-ray machine, MRI machines, ACs? You can buy all of them, but it should be new plant and machine. But second hand is allowed up to how much percent? Example, if all my machinery is 1 crore, then up to how many lakhs? But what if it's 22 lakh? Then the excess 2 lakh will not get 100% reduction. You'll get only depreciation. Remember this, guys. And anything used abroad will be considered as new in India. And this is a promise. Now, guys, let's go to the next part. In scientific research, I forgot that microscope was for how many lakhs? You have to use it for which purpose? Scientific. If you sell it for 4 lakhs, then up to cost they will add it where, guys? In PGBP. 5 lakh, PGBP. 6 lakh. Then 5 lakh in PGBP, up to cost in PGBP, above cost in capital gain. Same thing happens here also, guys. If you sell this building of 70 lakh for 70 lakh, PGBP 65 lakh, 75 lakh, then 17 PGBP, fine. The same as scientific research, but guys, I converted the hospital into a mall after the first year because the hospital wasn't working. Mall is working very well in Bangalore, so I converted it. Is that okay? Yes. But the government says because we gave you deduction, we'll reverse it. RD. What is it called? Super. Some people have revised, others will also have to revise. RD means the amount has to be reversed. 70 lakh will be reversed, but we'll give you depreciation for that first year. Are we okay with this, guys? Yes. This is called specified business. Guys, which are the specified business? You don't need to buy heart. Exam will tell you this is a specified business, but we still have a shortcut. Super fast buy can cover 3 hospitals, 3 institutions, 3 workshops. What is this? You can go to your main book and the business is there. You can relate to it and you can just read it once. Next, guys, you have some expenses which are before starting the business. They are called preliminary expenses. Tongue twister for me, so I always call it PE. Example, starting the company, MOA, AOA, marketing, all that is, guys, preliminary expenditure. Do you get a deduction for it? The government says it is before starting the business, so I can't give it to you as a cake. I'll give it as a pastry. Example, if it's 10 lakh, I'll give it to you 2 lakhs for how many years? From the year you start that business for 5 years. But only be careful about one expense or four expenses, which are called project report, feasibility study, engineering study, market. In these four, either you do it in-house or you do it from an approved source. Otherwise, we'll not give you this deduction. And guys, because people can take huge fees, the government has limited it to cost of project. They are 5%. At the end of the year, go to that year and see the cost of the project. Cost of the project means all the cost, land, building, everything. Uska cost take 5%. That's the limit. And if you're a company, 5% of capital employed or that whichever is higher. That's a benefit because they want to encourage people to start new businesses. And what is capital employed? Equity, preference, debentures, loans. And if it's foreign borrowings, only if it's taken for a period of more than 7 years will include it. Otherwise, people artificially inflate that number. Guys, this is called 35D preliminary expenditure. Next, guys, if a company is paying VRS expense, which expense? A company called Delhi Development Authority is paying VRS expense. In that, the government says, no problem, I'll give you a reduction. But these VRS expenses are huge, so I'll not give you as a cake, but I'll give you as a in how many installments from the year you start making the payment. These are different deductions. We now go to specific ones. I'm going to give you a list of deductions. You tell me, is it connected to business? If it's connected to business, you can take a deduction. This is section 36. Section is not important. Insurance premium for your business. Yes. For stock, for employees' health, not life, for health. And cattle, like Amul, like Nandini, etc. Next, guys, bonus and commission to employees. Next, guys, interest on business. Guys, all businesses take loans from banks, friends, etc. You can pay interest at any rate, you'll get the deduction, except interest on interest, penalties, interest on income tax. No. Guys, what if you don't take a loan? Can you issue zero coupon bonds? Yes. A zero coupon bond is issued at 85. So, how much are you getting money? No, as not an investor, as a company, how much are you getting? But when you repay, you have to repay 100. Example, so what is your expense? 50. Now this 15 or 15 lakh or 15 crore, it's an expense, but of which year? All the years of zero coupon bond, you have to spread it based on number of months. Example, if the zero coupon bond is issued on the 5th of February, which date? If it's up to 50, they have to go to first. And guys, if the redeem happened on 26th of February, then you have to go to the end. So if it's after 15, you go to the end of the month, otherwise before, and you spread it based on number of months. This is a mathematics calculation. Next, guys, as a master, do you have to take care of your employees? Employees are called slaves, employer is called master. You pay for their salary, do you get a deduction? Similarly, if you pay for their PF, or you pay for their NPS, or you pay for their, will you get a deduction? Yes, this is master's contribution. You get a deduction, but please pay by John. Please pay by when? What is John? John is July, October, or November, which are our return filing due dates. Please pay by then, you'll get the deduction. But guys, can the slaves also give you the money? Example, the master says that I have opened a PF account. The slave says, here is my 10,000. Can you put it in the account? He says, yes. But so that they don't misuse the money, this is called welfare amount. You first add that 10,000 to PGBP income. But is it really their income? They are intermediary guys. They're only a middle person, but we'll still add it and we'll minus it only if they pay within monthly due date. Sir, what is monthly due? Don't worry. It's like electricity bill. February's electricity bill, when will you pay? September, October. Right, September you'll pay in October. So basically, the next month if you pay, you'll get a deduction. But what if you pay after 4-5 months? Then it will be added, but no deduction. That means you'll have to pay tax on that. That's a punishment. Yes. Next, guys, for family planning expenditure, can you spend money? But it's not connected to my business. But the government says still you're helping the country, which is great. So we'll give you a deduction, capital expense as a pastry, not as a cake. That means how many parts? And revenue expense, can you take a deduction? Yes. But guys, for this, only available to which companies? This came in the exam, Mr. A get family planning expenditure. Will he get the deduction? No. Almost 99% went wrong because the exception was only available to which companies? Next, guys, on the highway, do you pay toll? Same way on the stock markets, you have to pay something called STT and CT. And if you pay that, will you get a deduction? Yes. But only in which head, guys? So only share traders, share brokers, etc. will get this deduction under PGBP. And this is all the expenses. This is the deduction. The only thing now we'll do next is disallowances, guys, and then we will continue and we'll make another part of this video. So disallowances, let's do. Disallowances are those expenses which you incur, but the government says, sorry, no deduction. Can you tell me some disallowances? Shortcut, poor, wins, cash. Is it similar to IFOS? Yes, it's not even similar, it's the same. Personal expenses. That means, guys, all my household expenses can I take in business? No, sorry, you can't take. Personal expenses are not allowed. Oh, outside India, if you pay some money without deducting TDS, government say I can't catch hold of that foreign guy. I'll disallow that entire amount and I'll allow it to you only when I get the tax. Next, guys, if you pay to a resident in India, because he is resident in India, if you don't deduct TDS, the government says I'm 30% angry. So if you pay 1 lakh, how much deduction will you get? 17% you'll get, but 30% will be denied to you, and they'll give it to you, but only when the government gets the tax. Next R. Guys, to relatives or with relatives, can you manipulate? Yes. Guys, excessive income is never a problem. Excessive receipt is never a problem. Excessive expense is a problem. Remember, USE is an expense unreasonable or excessive. Example, for laptop repair, you have to pay 15,000. How much? But you paid to your spouse 1 lakh 50. Do you remember that example? Yes. So U is unreasonable or excessive. What is S? Specified person. And what is the expense? That means the government knows that only excess expense you pay to specified persons. In that case, the government says the extra amount I will disallow. Important, watch, read the handwritten notes well. Guys, who are specified persons? In a nutshell, these are people whom you can manipulate with in an individual. Relatives. But sir, relatives are 232. No, guys, relatives have two definitions. One is 232, which is only for gift, and everywhere else it is clock. What is the clock? People next to you, spouse. This side, below, children, and above, parents, and these are the people are specified persons. And second, anyone whom you hold substantial interest, basically 20% or more, basically you control them or they control you. For a HUF, members or substantial interest both ways. For a partnership firm, you can manipulate with partners or their clock and substantial interest both ways. For a company, directors and directors clock, directors spouse, directors children, or substantial interest both ways. In a nutshell, guys, any expense with these people. In the exam, they give you this question that you paid excess expense. You paid to sister, this to sister-in-law. Guys, sister-in-law is not in that clock. No problem. Guess what ICI asked? Sister-in-law. So they love exceptions. Your concept should be super strong for this. Next, guys, winning is not here. Then what is cash? Up to how much amount is allowed? If you pay higher than that, then don't allow it. For GTA, how much is the amount? 30. But are there some exceptions? Yes, there's a rule called Rule 6DD. If you pay to fishermen, animal husbandry, etc., how much is allowed? Yes. If you pay to cottage industries without the use of power, if you pay to someone who's in a village, etc., without banking facility, if you pay to an employee for retirement benefit up to 50,000, and an employee if you pay salary in cash who's out of office for more than 15 years, as long as on the salary there is TDS deducted, we'll give you the deduction. And guys, last one is income tax. Do you get a deduction for income tax? GST? Yes. Municipal tax, customs, but for income tax, we don't give you no ignore income tax. Interest also, unless you are earning the interest. Guys, there's some disallowances provisions. No provisions allowed in the Income Tax Act. If you make any payments into unapproved gratuity funds, etc., disallowed unless the money is finally paid to the employer. So, guys, these are some disallowances which you have to be careful about. And in business, if you make any ads in Times of India, can you take a deduction? But if you put ads in political magazine or political surveys, will you get a deduction? But it's popularizing my company, no? But still, it has a political angle, so that is disallowed. In the second leg of the video, we'll go to 44A, 44AB, and all the additional points, and that's how we wrap up PGBP. Thank you so much. So we are here, we have done PGBP recording and we have recorded the incomes, we've recorded the expenses and the disallowances. But one expense has escaped. Let's revise that, guys. It's called depreciation. A very common in the exam, guys, section 32(1). As a business, can you take depreciation? On which assets? Business assets. Guys, personal assets like my TV, washing machine, oven at home, I cannot take depreciation on that. So can I take depreciation on business assets? Yes. The shortcut is OP. What is the shortcut? You should be owning the asset and you should be putting it to use. Now, guys, sometimes you buy the asset in the middle of the year. How much depreciation can I take? So they have said that if the asset is used for less than 180 days, then you will take half year's depreciation, which is very confusing in the exam. How do you calculate 180, etc.? So it's very simple. For your year 23-24, which is a leap year, the cutoff date is 4th October. So 4th October for half year, full year, I like to see the glass full. So I always look at full year. So full year you will get only if you purchase and put to use the asset. By which date, guys? 4th. I'm giving an example. You purchased it on 1st October, but you put to use on 6th October. Which date will you see? Put to use. So put to use is 6th October, so half year. So in depreciation, which is the more important word, put to use. Guys, if there is any SAM-R, that is sale, amalgamation, merger, or reorganization, then which entity should get the deduction, guys? Both will get. So you'll calculate depreciation and you'll split based on number of days. As everyone knows how to divide and split, we are very well known for our divisions. We divide well, so this is also how to divide based on number of days. Now moving ahead, can I choose any rate of depreciation? No. The rates of depreciation are fixed. All assets are classified into four categories. The first, building. Land is never depreciated. Second, furniture. Third, plant and machinery. And fourth is intangible. Building is depreciated at what rate? 10%. Furniture at what rate? 10%. Intangible asset at what rate? 25%. And guys, plant and machinery, what is the general rate, guys? 15%. If it's computers, laptops, and accessories, anything good for the environment is pollution control equipment, medical equipment 15, but life-saving medical equipment, guys, 40%. Guys, motor cars is 15%, ships move slow, 20%, aircrafts move fast, 40%. Windmills are good for the environment, 40%. In buildings, guys, if it's a residential building but used for business, how you give it to employees to live, so that is 5%, and temporary sheds is what, guys, 40%. Now, guys, along with land, even goodwill cannot be depreciated in intangible asset. In the exam, common mistakes will be they've forgotten depreciation, or they've taken bought furniture entire thing in P&L. Guys, can we take entire in P&L? No. It's a capital expense, should go where? And you will take only depreciation. They take the wrong rate of depreciation or days when they bought, etc. These are common things. Guys, while you depreciate, while the rate is fixed, guys, what is not fixed? The cost of the asset. But can you manipulate the cost? No, because they've defined it. Remember, guys, cost of the asset is all the costs incurred till the asset is put to use. For example, I'm imported an asset for 1 crore rupees. Will I add that to the balance sheet? Yes. Plus transport, customs duties, local transport, installation, training, yes, everything till the asset is put to use. But what if I get some subsidy? Then minus it, because if you haven't paid, you won't get depreciation. What about cash payment? Up to 10,000, it's okay. Guys, there is no limit of 35,000 in the balance sheet. Guys, what about customs duties when you get credit? If you get credit, that means you haven't paid for it, so you cannot add it. And what about, guys, interest till the rate of put to use? It will be capitalized, that means taken where, guys? Balance sheet. And after that, interest will go into which account, guys? P and L. That wraps up expenses, disallowances. Now let's go to the additional points. Guys, in additional points, I am a builder like Prestige Builders or Lodha Builders or in Delhi DLF Builders, and I am selling an apartment, that is land and building. Guys, in only land and building will the government check. The section is 43CA. What is the section? They say that your apartment is stamp duty value 1 crore. How much? Stamp duty value 1 crore. You are selling it for 60 lakhs. The government will start with which amount, guys? 60 lakh. That is a sale consideration. They'll add how much percent to it? And they'll make it 60 plus 10% is what? 66 lakh. The 60 is only an example. And they say the stamp duty value is close. Close means up to how much amount? 66. We have no problem. But if the stamp duty value is far away, example, the stamp duty value is how much, guys? 1 crore. We'll have to move you ahead. The stamp duty value, you have to move far away like that. Yes, if the stamp duty value, guys, is far away, then we will take that as a sale consideration. Do you remember that, guys? Yes. We move to the next additional point. Guys, do businessmen have to arrange accounts? Yes, but not all of them. Guys, section is 44AA. A is what, guys? Arrange accounts. Yes, you will sit that side. Yes, you will sit that side. The girl will sit this side. Yes. So that is called arrange accounts, guys. 44AA is called arrange accounts. In that, only when you're as a profession, in the last how many years, guys? 3 years. Guys, how many years you have to go back? In all the years or one of the years, guys? In all the years, guys, if your turnover is above a certain amount, are you big enough? Yes, then you need to arrange accounts this year. And for business, is it all or any? Any. So it's like a Lakshman Rekha. If your turnover is more than 10 lakh or your profit is more than 1.2 lakh, even one of the years in the last 3 years, you'll have to maintain arrange accounts. Yes. And guys, for individuals, the limit is 25 lakh and 2.5 lakh. Yes, this arrange accounts. Once you arrange your accounts, you have to keep them safely locked in the cupboard for how many years? Or on the hard disk drive for 6 years. Guys, this is 44A, not very important. The next one is absolutely golden. It is in your exam. Guys, there are big fish and there are small fish. That means big businesses, big profession, and small. The big ones, after the year gets over, they need to take the financial statements to whom? CA, and get themselves audited. So in India, who needs to go for an audit? And guys, this could be a goal in India. When you do a business or a profession, do it on such a scale that you are subject to audit. So what is a big fish for professional? 50 lakh. If you cross a turnover of 50 lakh, and for a business, what is the limit, guys? 1. So if you cross those turnovers in this year, at the end of the year, check. If you cross those turnovers, then you'll have to go to a CA and get yourself audited. You're a big fish. Guys, these limits are now changed. Yes, so I'll tell you how to look at this. LT. What is the shortcut? First, you'll check the limit. then you'll see the turnover. If the turnover is crossing it, then you have to go for audit. For professional, there are two limits now. One is 50 lakhs, one is 70. And for businesses, there are two turnover, 1 crore and 10 crore. Guys, who likes the higher turnover? Businesses. Guys, higher turnover means they save money, they don't have to go for audit. But this 75 lakh and that 10 crore turnover, you can go only if you fulfill two conditions. That is, your cash should be low. How low? Cash payments divided by total payments up to 5%, and cash receipts divided by total receipts should be also up to. That means if your cash is low, we'll reward you with a higher limit. So first find out your limit, 75 or 50, 10 crore or 1 crore. Once you know your limit, example for professional, the limit is 75. What is the limit? Now check turnover. Turnover 72 lakh. No audit. Turnover 78 lakh. Audit. So LT is a shortcut for 44AB. Shortcut for AB, audit the books. Good, guys. And in a world which is very nice, guys, can we have a world where we presume our taxes? It's called presumptive taxation. There are three sections: 44AD, 44ADA, and 44AE. AD is for whom? Business. ADA is for, and A is for GTA. All three have their own rules, guys. In business, you always tell the turnover and the profit will be at what rate? 8% or 6%. What is 8% on all amounts? And 6% is only on amounts received in the bank. And this you will check by John, return filing due date. So for 31st March, whatever you received till John, you have to see it that way. And guys, for ADA, 50%. And for trucks, guys, 7,500 per truck should earn per month. And even if it's bought in the middle of the month, you will include the entire month. Yes. Now, guys, the first condition is RIT. 44AD is available only to residents, only who are individual, HUF, and partnership firm. LLP? No. First difference between partnership and LLP, and only difference. And T, or turnover should be up to how many crores? 2 crores. For professionals, same RIT, but in I, it's individual. HUF, partnership, HUF firm has been removed, and turnover up to how many lakhs? And for RIT does not apply for trucks. It is only trucks up to how many trucks, guys? Not put to use. We have to focus on ownership. No residents, non-residents are also allowed there, and no individuals, etc. Everyone's invited to that party. Guys, here are you supposed to show this minimum profit? Yes, shortcut is AAP. In this, the best part is you don't need to go for arranging accounts. You don't need to go for, and your profits can be fixed. Can you show higher profits? Yes, but you can't show lower. If you show lower profits, you'll have to arrange your accounts and maybe get yourself audited. As this is 44 presumptive taxation. In presumptive taxation, have you assumed all expenses? So in PGBP, you will not get any further expense. But other sections will you get? Yes, set off, etc. Yes, that you will get. And guys, 44AD is an addiction. Once you take it up in 1 year, you need to follow it for how many years? Remember chain reaction? If in any of the years you break the chain, then 3 punishments. That year, 44A, 44AB. For the next 5 years, no presumptive taxation, and each of those 5 years, 44A and 44AB. Are we okay? Amendment. 44AD and 44AD now have higher limits. 2 crore or 3 crore, 50 lakh or 70. But when will you get same condition? Your cash should be up to how much percent, guys? 5%. So again, here, find out the limit first. Check your turnover. If the turnover is within that range, congratulations, you can take presumptive taxation. If the turnover is above that range, you can't take presumptive taxation. Are we okay? Yes. Next additional point. In businesses, can I take a deduction on accrual basis? Example, I want to pay rent of this building, but I don't have the money right now. Is it payable? Yes. Can I take a deduction still? Yes. But there are 5 payments. Repeat there. How many payments? The government will say, I will allow you under the Income Tax Act only if it is paid. What are these 5 payments? M3. What is the shortcut, guys? What is M? Payment to any MSME. This is in your exam, May 24 or November 24. Micro, small, medium enterprises. If you're going to make them a payment, please pay, show, and then take a deduction. What is T? Any tax you pay like GST, municipal tax, only if you pay, you'll get the deduction. What is R? Railway assets. E. Employees, that is slaves, PPL, bonus, PF, etc. amount, and leave salary, pay them, and only then you'll get the deduction. And what is I? Interest. To whom? To uncle? No. To your money lender? No. To banks, NBFCs, and financial institutions. Only when you pay, you'll get the deduction. Guys, do I need to pay tonight? No. You can pay by John. But if you don't pay by this John, then you will get deduction only in the year you pay. And guys, here, if you convert the loan, it is not payment. What is the word you're looking out for? Payment. Only on these 5 payments. Are we okay with this, guys? Yes. Now we go to the next additional point. Guys, partnership firm. Can a partnership firm pay interest to a bank? Yes. Is there any limit? No. But can a partnership firm pay interest to partners? Yes, but there's a limit of maximum how much? Can you exceed that? What if the partnership deed allows you to exceed? Still, you can't. Maximum how much? Can it be 10? 9, 8? Yes, but it cannot be more than what, guys? 12. And whatever is the deduction given to the partnership firm, same to same. What is it, guys? The same will be added to the partner's income. Are we okay with this? Now we come to partner's salary. Can a partnership firm pay salary to others? Any limit on others? No. On partners, is there a limit? Yes. First, find out what? Book profit. How do you find out book profit? Take your profit minus all the expenses, including interest, up to how much percent? 12%. Then you get a number which is book profit, split it. Excellent. One is up to 3 lakh 90% and above 3 lakh 60%. And find out the limit, that is the maximum. If it's 7 lakh 50, can I pay 7 lakh 40? Yes. 7 lakh 30. Yes. But what if I pay 7 lakh 80? The excess will be disallowed. Excellent. And same to same. Whatever is the deduction for whom? Partnership firm will be income for whom, guys? Partners. Are we okay? Guys, now closing stock and opening stock. Guys, closing stock and opening stock have a relation with profit, which is the direct relation. CP, closing stock and profit move in the same direction. So in the exam, they say closing stock is overrated or overvalued by 1 lakh. That means your profit is also overvalued by 1 lakh. So you'll do minus it. And opposite impact you'll do for which stock, guys? Opening stock. Guys, you can follow accrual system also, cash system also in PGBP. In accrual, you'll follow the year. You'll follow what? Example, I have rent for this year. Can I minus it? Yes. I have not paid it. Still, because you follow the year. I have rent of next year. Can I minus it? No, because you follow the year. On the other hand, cash system of accounting. You follow cash. Example, rent for this year not paid. No deduction. Rent for next year paid. Yes, as long as you pay. So in year accrual system, you'll follow the year, and in cash system, you'll follow cash. Any other additional points, guys? Check your notes, guys. Any other additional point? Deemed income, guys. There are 4 deemed incomes. How many deemed incomes, guys? A, B, C, D. Before that, let's revise SLM. Guys, can an asset be SLM? In SLM, guys, only power companies are allowed to follow which method, guys? SLM, and that too it's optional. They can follow which other method? WD. But if they follow SLM method and the cost of the asset after 2 years is 80,000, example, then they can sell it at a profit also, or they can sell it at a loss. If they sell it at a profit, it's a profit you'll add. It's called balancing charge. If they sell it for a loss, terminal debit. If you didn't understand this, congratulations. Even better. Doesn't matter. It won't come in the exam. Yes. Now let's look at the 4 deemed incomes: A, B, C, D. If there is any asset, scientific research asset. Remember microscope? If you sell it up to cost, PGBP, above cost. So this is deemed income up to cost. B, balancing charge. You will add. Next, C, any liability gets cancelled. I was supposed to pay someone. I minus it also, but I don't have to pay now. Is that a good thing? Yes. And D, what is D, guys? All these are deemed income. It doesn't matter if you remember deemed income. As long as you remember, you need to add them. Next additional point, guys. I forgot in depreciation, guys. Which method of depreciation is most common? And in WTV, guys, if I have to take Infosys example, 1 lakh laptops, how do I depreciate? They follow family method. Not family planning, but family method. What is family method, guys? It's basically a family of assets, same type, same rate. All the ACs, can they go into one type? AC and laptops? No, because they're same type but not the same rate. So you'll make a family, it's called block of asset. In that block, what do you start? Opening. Opening should be your value of asset minus the depreciation till the start of the year, plus any purchase and minus any sale. But sir, you've sold an asset which any part of the year you sell, guys, you can minus it. And you don't have to calculate profit or loss, because in family method, we don't focus on individual sale. Are we okay with this, guys? Anything else? Check, guys. Check. Anything else you're missing on? M3 we've discussed already. Section 43B we've discussed. Let's quickly go through any other thing that is needed. Perfect, guys. Here I've also discussed composite income in my QUIK-Book, because, guys, do you remember tea, coffee? Long back, many years back, we discussed tea, 8 cups of tea. Guys, in that 40% is what? PGBP. Which chapter are we doing it now? Then why did we do it that time? Because that time we were doing agriculture. But still, composite business also has some part in business. So let's revise. Tea, what percent? 40. Coffee, what percent? 40 or 25. Rubber, what percent? 35%. And guys, potatoes to chips should happen at what price, guys? This is PGBP, guys. Wrap it up. But I will tell you what happens in the exam. The exam will give you an income and expenditure account. You have to Diwali Safai. That means, guys, which number will you take first? In that profit number, that will be in a PGBP. Anything which does not belong to PGBP, will you remove it? That's called Diwali Sabai. Common adjustments, depreciation. Scientific research. Closing stock, opening stock. Amounts paid in cash. And remember that use. These are some common adjustments which you can expect in your paper. PGBP is a make or break chapter. Watch this video, revise to your handwritten notes, move over to sums. The better the sums, the better the marks. All right, in the revision lecture series, part number 6, 7, 8 doesn't matter. Don't know, don't care. But this one is a chapter which is very, very valuable. Guys, before I even tell you the name of the chapter, guys, this chapter has been there in our CA Inter papers regularly, wearing 1 to attend where it's not come. And its minimum come for 4 marks, that's only once. But maximum also come for 10 marks, but that's also only once. So on an average, guys, it generally comes for about 6 marks, 5 to 6 marks. And guys, every mark is valuable. And these marks are only practical questions. If it comes in MCQs, of course, there's something more you can get there. So this is a very valuable. And another thing, I'm personally, I don't like theory questions. I'm a big fan of practical question, and this one is absolutely practical. From where I see, it's almost like a game we play. So let's start it. Let's start this game, guys. Everyone, this is a chapter called set off and carry forward of losses. If you see all the 5 heads of income, they only focus on profit, guys. What is PGBP's full form? Profits and gains. What is capital gain? Capital gain. What is IFOS? Income. First one, income from salary, and second one, income. So all those who are only focusing on income, this chapter actually focus on the neglected part or neglected person called losses. This chapter, the star of this chapter is losses, and we only focus on losses. Guys, when you're doing this chapter, if you think, oh, where is the profit? What can the profit do? No, think of what the loss, what can the loss do, and how it can be set off. This chapter is entirely based on a blood bank example. So if you're unwell and you need blood, whom is the first person you go to? Family. Then if you are still no, blood is not there, guys, then you go to outsiders, means everyone you can go to. And then, guys, I'm telling you the third step, you'll come back to family. So now you know, guys, linking it to tax. This is called set off and carry forward. If you have a profit of 100 and you set it off this year only, guys, a loss of 20, what is that called? Set off. What is this process called? But if you have a higher loss, that is 120, and you set off only 100 and carry forward, that's called what, guys? Carry forward. And next year it will become carry forward and set off. From where I see, it's a cake someone has got into your house. If you can't consume it today, where you put in the fridge, so you can consume it later. I'm using the same examples also, so it relates to you in a few months from now. All right, now, guys, when we start off, let's start off with the first intra-head adjustment, which is called family. Guys, so how many heads of income are there, guys? 5. Let's make a diagram. Whenever in the exam also you get Mr. P, make 5 arrows here like this. First one, next, next, PGBP, next, and last is, guys, one thing is for sure, if there is any casual income, which income? The government says, listen, if you have any casual income, no one can touch it, because the slogan is, if you get lucky, the government also wants to get lucky on the same. So that means, can you set off anything from casual income? No. Let's go to salaries, guys. Can salaries ever have a loss? No. So no step 1, no step 2, no step 3, nothing required. House property. Guys, there are 2 house properties. One is called. Guys, can there be losses? Yes. And can they help each other first? Yes. Next is what, guys? In PGBP, I'm only talking about step 1 right now. There are 3 businesses. First is called, normal is only for you and me in the exam, non-speculative business. There's a business called speculative, and there's a business called specified business. What is specified business? Is from a chapter called PGBP. Speculative business is anything which you do intraday trading except BD. Bankers, when they do intraday, it is normal. And derivatives, guys, exam question, derivatives loss, where will you put it? Normal. Derivatives are normal. Now, guys, can you have losses here? Can you set it off? Yes. Happily, you can set off against everyone except, guys, speculative business. It has what kind of blood group? So if there is a loss here, but there is a profit here, I can't still go, because it has which blood group, guys? Unique blood group. And what about specified business? Again, unique blood group. And are they the same unique? No, they are different, unique. So if there is a profit here, can I go there, guys? No, these are called unique blood group. Basically, you cannot set it off. You already know this from PGBP chapter, that loss from any specified business can be set off only against profits from any specified business. Do you remember that, guys? Yes. So while you're setting off, be careful about these unique bloods. How many unique bloods till now? 2. Capital gain has 2, guys. If you sell the asset short, it is called short term. If you hold it for long, it's called long term. Can it be a losses? Yes. But amongst them, guys, one of the losses called what, guys? Unique. Example, if I have 1 lakh loss here, and if I have 2 lakh profit here, can I set it off? No. Profit. I'm saying profit. Can I set it off, guys? Yes. But if I invert it, guys, 2 lakh loss here, 1 lakh profit here, can I go there? Because guys, long-term capital loss is another unique blood. And last is what, guys? In IFOS, guys, generally which incomes come? Dividend. There can be no loss in dividend. Interest, no loss. Casual income, if there's a profit, you'll put it in a box. Example, 10 lakh from a lottery. But if there's any loss, example, you go to Goa, go to the gambling den, lose 10,000 rupees, who is not with you? They say if you make any loss from gambling, card game, this has come at least thrice in the exams. Guys. Any loss from gambling, card game, etc., what do you do with it? You have to ignore it. No set off, no carry forward. So the only loss there can be is a horse called OM horse. In a few months, guys, you'll forget what is OM horse. So this video will help you guys owning and maintaining race horses. You own the horse, you maintain it, you make him run. If he wins, it's your gain. If he loses, it's your loss. But that gain or loss will not go under PGBP. Although the activity is a business activity, it will go under which, guys? IFOS. But this again is what kind of blood do? Unique blood basically means if it's a loss of 2 lakh and I have profits here, can I still set it off, guys? No. So while intra-head adjustments you do, 4 people refuse to do any adjustments. Which are the 4 people? Speculative business, specified business, long-term capital loss, and OM horses. Those 4 are which blood group, guys? Unique blood. Are we okay with this, guys? Now let's go to step number 2. Step number 2 is going out. Guys, when you go out first, salaries, can it go out? It will not require to go out because it will never have any losses. Now, guys, HP, first you help within the family. If you're still unable to, and there is a loss of 2,81,000, like in one of the sums, can I go outside?
Yes.
How many neighbors do you have, guys? 4. Everyone has 4 neighbors. This is PGBP. This is which one? Capital gain, and this is IF1. Guys, here you can go to any head because you're friendly. You're what, guys? So you can go to any head except casual income. Of course, no one can touch. You're friendly, but you're shy. That's a shortcut. Friendly, basically, you can go to any head. But up to how much, guys? 2 lakh aggregate or individual? Aggregate per annum. So basically, this 2 lakh can go either here, or here. Doesn't matter where. Sir, but if there is a speculation business profit, can I? No, guys, don't look at it. Look at the loss and ask the loss where all you can travel. So this loss, where all it can travel, guys? Anywhere, but only up to how many lakhs? Next, guys, which is the next one? It is a semi-friendly head. That means what? Normal business. Which other business? Speculation. Which other? Guys, are these two unique? If a blood is unique, that is a loss is so unique that it can't go within the family. Can it go outside? No. So these both cannot go outside, but normal business can they go out? But it is semi-friendly. What is it, guys? Semi-friendly basically means they talk to all 4 except one, guys, which is so they only talk to 3. They've had a fight with salaries over parking. What is the logic? You know, I'll tell you tomorrow if I have not taught it to you right now. But the logic is never asked in the exam. I'll teach you tomorrow. So this is what is semi-friendly. And last, guys, is which one? Capital gain. If you have any loss from capital gain, can you go out? Guys, the other family, which is a snob family, remember they don't talk to anyone. They are non. So if they have a loss, who will save them? They themselves will save. And OM horses, guys, is it unique blood? And you know the reason of unique blood? They can't go within the family. They can't go outside. Excellent, guys. This is what is step number 2. Now, step number 1 was section 70. Step number 2 is section 71. Now, step number 3, guys. Salary, will it ever require?
No.
House property, will it ever require? Yes. If you can't sell it off within the family or outside this year, then you will do what, guys? For how many years?
80.
And when you carry forward, you'll get which stamp? What is quarantine stamp? That means if I take 60,000 to next year, and next year I want to sell it off, it is a friendly but shy head, but next year it will only remain within the family. Guys, next is which one? PGBP. Tell me again, can I carry it forward? Yes, but the years change now, guys. Everyone, normal business, speculative because the speculation angle is 4 years, and specified business. Who likes this, guys? Because you've done something really nice, and hence this will be carried forward indefinitely. That is the word to use in the exam. Next, guys, is capital gain. Guys, capital gain can be carried forward. Yes, again for how many years, guys? So this is it. And last is what, guys? IFOs, generally we don't have losses, but if you have OM horses, again, is it encouraging betting? And hence the logic is 4. So in a nutshell, every loss can be carried forward for 8 years, 2 losses. Speculative and OM horses for how many years? And guys, one can be carried forward indefinitely, which is specified business. These are 3 steps. As in the exam, besides the 3 steps, what are very important are the additional points first. Anything that you carry forward will get what kind of stamp, guys? Quarantine stamp basically means you can't go out of the house when you carry forward. This year, friendly, non-friendly, you can see. But when you carry forward, it always has which stamp? Quarantine stamp. Second, guys, can a business get discontinued? If the same person starts another business, can you set it off? You can carry forward again with quarantine stamp, but you can set it off for how many years, guys? Same 8 years. Third, guys, what is UAD? Unabsorbed debt. If I have a profit of 100 and a depreciation of 20, can I minus it? But what if the depreciation is 120 because I've got a lot of assets? Then I can only minus, and the balance will go ahead is called unabsorbed depreciation. You've seen this in PGBP section 32.2. The government likes UAD because, guys, you have UAD when you have a lot of assets. So the government says UAD, you are coming from which head? PGBP. You can be set off against any head except salaries because you're from PGBP. You don't talk to salaries. But I'm giving you two powers. They are called INS, guys. What is the shortcut? Guys, all these shortcuts are also mentioned here. Like today's shortcut, INS I've already included here. What is INS, guys? That you can be carried forward indefinitely. So always, guys, remember he is happy because he can be carried forward indefinitely and he does not have any quarantine stamp. What does that mean? That in the 5th year, can he go outside? Yes, he can go to any year except salaries. All right. Next additional point, guys. If you want to carry forward your losses, the government has asked you for one favor, that please file your return of income by when, guys? July. That is July, October, or November. Guys, if you don't file your return of a particular year, can you set off? Yes. Can you carry forward preceding years? Yes. But can you carry forward this year's? That's the reason, guys, when you have a loss, please make sure your returns are filed on time. And next, guys, when you open the fridge right now and you go home, and if you're not very hungry, which one will you eat first? Current year. Whatever is cooked today. Then, guys, you will eat something which has a. What if there are two things which are expiring, one after 4 days, one after 2 days? After 2 days, that one. And guys, the last one which you consume, which has no expiry. So same thing works in tax also. If you have losses and you have profit only of 100, first you will minus what? After that, if you have some space, you will minus any brought forward which has an expiry like 8 years, and last you will minus any UAD. Guys, UAD works the same way. That means the same superpowers are also going to SRE and FPE. If you've forgotten, SRE is scientific research expenditure and family plan. That means what, guys? If in the exam they give scientific research expenditure brought forward after 5 years, can you set it off? How many years? Indefinitely. And which head? Every head except SAT. But guys, if there is limit, you will first minus UAD, then SRE, then FP. Guys, remember in the exam, they will not tell you it's a set of sum. They will only give you a table listing all the incomes, and you have to basically figure because you'll see which their losses. So guys, our loss is good. Yes, this chapter of set of a loss is good. You can score marks. It's a very practical question. Thank you so much. Perfect. All right, another new video, and this one is on a very small chapter. It's that tiny little chapter which gets you some not so tiny little marks because on an average, if a question comes from this chapter, 4 or 5 marks from this chapter are a given. So while you prepare for PGBP, salaries, clubbing, while you really struggle with these chapters, there's a small chapter here which is equivalent to a PGBP sometimes because 5-6 marks come from this chapter. This chapter is called clubbing of income. As a background, guys, clubbing exists because people earn incomes, but they pass on their tax, where they pass on their income to someone else. So, example, I have a lot of income. I am taxed at 30%, but my spouse does not have so much income on her paper in her books. So I can pass on some of my assets. The best assets to transfer is just make an FD in her name. Can I do that? 10 lakh FD in her name. Now, who's earning the interest, guys? My spouse. In that, she'll not pay too much tax because first you have basic exemption limit. Second, another benefit you have is what, guys? Rebate up to how many lakh? And even if it goes above 5 lakh, guys, she'll only pay rate of 20%, whereas I would have paid 30%. Guys, all this making an FD, transferring debentures, transferring houses to our spouse, all this love and affection is great, but the government doesn't like it. They lose out on tax. And hence the government says that if you transfer any assets to 4 relations, how many relations? But why just 4? How is the government so sure? They know us. They know that beyond these 4, we have trust issues and we don't give out these assets. So these 4 relations, they say that if you transfer any asset to these 4 relations, then asset is not the problem. The income is the problem. They will earn the income, guys. Who will earn the income? The person who's got the new asset, they will earn the income, but the income will come back to us. Basically, that means when we file our returns, we will have to pay the tax. Example, if I make an FD in my spouse's name, who will earn the interest? My spouse. But that interest amount, when I file my tax returns, I will have to open my room of IFOS, put that amount and pay the tax because of a chapter called clubbing of income. Remember the name, guys. It's not clubbing of asset, it's clubbing of. So assets, let it flow out, no problem. The government has no problem. The government has a problem with the income coming from that asset. This is the chapter. Let's start. The chapter is divided into two parts. Although I've written section 60 here, but you know I teach also, and the handwritten notes also go in the section 64. In section 64, basically targeting four relationships. You are an individual. Who are you? Oh, sir, individual only are subject to clubbing? No, everyone is subject to clubbing, but your exam will direct towards individual. And once we finish individual, we'll also go to the other parts. Individual having a spouse, individual having a son's wife, individual having a minor child, or individual having a. The government says these are the four relationships which I'm going to be targeting. First, let's discuss here 64 1A. So let's discuss minor child. They say 64-1A shortcut is A1 minor children. They say that every income, repeat guys, every income of minor child will be clubbed in the hands of the higher parent. What this means is that the kid can have many incomes. Grandfather makes an FD, uncle gives a birthday gift, doesn't matter. Whatever is the income, that income you first compute. What is it? First compute. And then whatever is the final amount will be taxed in the hands of the higher parent. What is this higher parent? Higher parent basically means before this clubbing, calculate the income. If husband has 10 lakh, wife has 14, then will be clubbed in the hands of the 14th wife, and next year and next to next year, every year it will be clubbed in the hands of the parent. What if that kid becomes a major? Then he will pay his own taxes. The government does not bother with major children because we know that manipulation does not happen with them. Next, guys, after when you club minor children's income, there's a section called 1032. What is the section? And in this, guys, they say that whenever you club the income per child, the income, there will be an exemption of 1,000. This is also discussed in a chapter called exemption. And remember, guys, you will do this 1,500 per child, not per income, per child. And once you've done it, you'll not do it again. What if the income you're clubbing is only 1,000? Then you're exempt also 1,000. While your clubbing of income is great, guys, you will never club any sim income. Which income? Any thing which is skill, intelligence, or manual work. But they have to mention all this, like scholarship, quiz competition, singing competition. If they say a child is doing a business, but that does not mean manual work. Yes, yes. So if they mention sim income, then will you club it? No. Who's done the hard work? Minor child. So the income will be taxed in the hands of the minor child. Guys, what about disabled minor child? The government says on a humanitarian ground, they said for disabled minor child, no clubbing at all. Whatever income, it's taxable, but he will pay his own taxes or she will pay her own taxes. As in minor child, if they have first level of income, example, your minor child has FD interest. Is that first level? Will it be club? Out of the interest, can he buy shares? Yes, from the shares, what will he earn? Dividend. That dividend will also come back. Yes, because a minor child does not have a mind. He have a mind, but shortcut guys, no business acumen. So hence they feel that you have discussed all this. So hence it will come back as a shortcut. Every level, repeat things. Every level of minor child will be clubbed in the hands of the higher parent. Guys, in the exam, if they write minor married daughter, please cancel that word and call minor. Basically, clubbing applies the same way. Yes. So, sir, minor married daughter you taught. Yes. Minor married daughter is still there in the chapter called house property. So, if you don't transfer debentures, but you transfer a house property, and that rental income, will it come back? No, because in that case, AM. Remember AM, minor married daughter. We don't tax. We don't club their income. Are we okay? So, in the entire clubbing chapter, minor married daughter is equal to what? Right? Remember sale of painting, quiz I'm just giving you probable questions. They're all sim income. Don't club that. Disabled minor child, don't club. That person will pay the tax. Next, guys, it is with the spouse. As you have an asset, you transfer in the spouse's name. Will it come back to you? What asset or income? But first compute the income and then it will travel. What if you indirectly transfer? Same guys. Direct or indirect transfers, both will come back to you. But you have a master plan. You are an individual. And you along with whom, guys? Relatives. Relatives is what? Wrong. But sir, 232, that relative definition is only for gift tax. So you along with your relatives, guys, if you have control, control means substantial interest basically means number 20% or more in any entity, and you tell that entity to pay salary, remuneration, commission, etc. to your spouse so that you can use the basic exemption limit of your spouse. The government knows what you're trying to do, and they said two conditions. You should have what kind of interest? And this salary should not be linked. Then will the income come back? Yes, it will come back to you, not the partnership firm, because you have planned it. That's a shortcut to remember. Are we okay with this? And last, guys, what if husband and wife both have substantial interest in any entity? Genuine case, Narayan Murthy, Sudha Murthy. The government says, I know it's a genuine case. Still, any salary, remuneration, commission paid to both husband and wife. Example, 5 lakh, 5 lakh. And before this, the husband's income is 25 lakh, wife's income is 30 lakh. So the government says, these 5 lakh, is it salary? Think like the government. Will it be taxable? Yes, but we'll not tax it in two people's hands. We'll tax it both in the higher income, that is the wife. Example. It can be husband also. Yes, in this case, do we see linkage? No, linkage or not linkage doesn't matter. Will it be clubbed in the higher income? Yes. Whereas in the first case, did we see linkage? Yes, yes. It should not be linked. Are we okay with this? Remember, amendment individual along with whom? Relative. Even they can hold substantial interest. Are we okay? Very simple. Son's wife. Guys, why only son's wife? Because traditionally the women in the house did not earn too much money, so would park the money in their hands. So spouse is covered. Now second one is what, guys? It's also called daughter-in-law. What is it called? If you transfer any income and asset to daughter-in-law, it will come back like a boomerang back to you, whether it's a direct transfer or it's a. But in all these cases, adequate consideration is a exception. That means if any of these guys pay you adequately, then guys, are you the owner of the asset? No. The next person is, so clubbing will not apply. Example, if the daughter-in-law says, for these debentures, I'll pay you 10 lakh rupees. Then now who's the new owner, guys? Daughter-in-law. So will clubbing apply in that case? No. And what is HUF, guys? Hindu? Undivided. Did you know even a HUF has a basic exemption limit? If you don't revise rates of tax, you'll know it. And to use that, can I transfer my debentures to the HUF? Yes, I can gift it. And the HUF guys on the interest income will not land up paying tax. Who's not happy with this? So they say even in HUF case, clubbing will apply. Guys, what if the HUF is partition? Partial or full partition, the government says I'm going to ignore partition, even that income will be clubbed. This has been asked 4 marks question. You already written it in your books in fair. Refer to that question for HUF. Next, guys, we come to the additional points here. There's a transfer called cross transfer. Cross transfer means this is A and this is B. They don't transfer the incomes to their respective spouses because they know tax well. So A will transfer it to B's spouse and B will transfer it to, so that they can evade this kind of spouse clubbing of income. But the government is smarter. They feel these are two or more interrelated transfers done with the intention to evade taxes. This will also be called club. This will also be clubbed in the respective relation. Guys, this is not only spouse. Can A give to B's minor child? And can B can give it to spouse? Yes, any two interrelated transfers done with the intention to evade tax. In reality, very difficult to catch, but in the exam, very easy to get those 2-3 marks if this comes in the exam. Yes. Now we go to some additional points. Guys, what if there's an exempt income? Will you club it? There's no point. There is no tax, so you will not club. Next, first you will compute or first you will club? First you will compute. Example, guys, your minor child has got 48,000 in cash as gifts. Will it be taxable? Why is it not taxable? Because it's not more than 50,000. So because it's not taxable, you will not even club it. As if you go wrong here, it will become a problem. So first compute. What if your minor child has rental income? Then you minus 30%, you minus interest, and the final amount will travel. Are we okay with this, guys? Yes. And what if someone pays you some part consideration? Example, you had debentures worth 10 lakh, your wife said, I'll pay you 5 lakh. Now, how she's the owner of how much asset? So 50% will be taxed in one hand, 50% will come back to you. These are some additional points from this chapter. Section is spouse, 64 ones, son's wife, 64 1 because those are 1 1. 64 1 is and 64 2 is H. Remember the relationship of wife and son's wife should exist both when you're transferring the asset and when the income is arising. Example, if you are transfer the asset to your fiance and then she becomes your wife, will clubbing happen? No. But in reality, trust issues, they restrict us from doing all this. And now we come to the last part of the chapter, which applies to everyone. It applies to whom? In case of everyone, we go to section 60, 61, and 62. Guys, this is A and this is B, but it can be even a company. And if you transfer income without transferring what? The government has a problem. They say that if the asset is yours, why is the income going to someone else? Imagine, guys, your FD interest going to someone else, your house rental income going to someone else. The government knows what you're trying to do. So the government says, even in this case, clubbing will apply. Are we okay? In the next case, section 61, you transferred income with transferring what? Asset. But what kind of transfer, guys? Revocable. Revocable means what? RP. What is the shortcut? Revocable means either you have the right to revoke, you might not exercise the right, but do you have it like the nuclear power button, or you have the right to take the benefit. Benefit either in full or in part. Example, I give an office building to a friend of mine on paper saying that the rental income should come back to me. Is it revocable? Right will come back to me. 10% rental income will come back to me. Still, the entire transfer is called, guys, revocable. And here also, will clubbing apply? Yes, because this transfer is a fake transfer. If you genuinely want to transfer it, why are you having the power to revoke it? And last, guys, if you transfer income and transfer asset. What kind of transfer? Irrevocable. No right to revoke. Nothing from that is coming to you. It's called irrevocable. Here the government says now you have genuinely transferred. Now you're an Azim Premji transferring shares to a trust. The dividend will not come back to you. Are we okay? This is section 60. This is the main one. These are not so important ones. And 63 talks only about definition of revocable transfer, which we know R and P. In the exam, you will not know it's a clubbing chapter. I'll give you a small tip how you will know. They will say compute total income or compute gross total income. But there'll be a Mr. Chaman, Mrs. Chaman, Baby Chaman, Major Chaman, Major Son. So they'll give you a whole family, guys. And when you go clubbing, you go with the entire family. Yes, you'll go 4-5 marks, so you don't, but yeah, that's how you'll remember it. Watch this video. The moment you stop watching this video, there are lots of sums which are referenced here. As the marks and the gold lie in the sums, do them well. Thank you so much. All right, everyone. In the series of recording videos, we've recorded till PGBP. Now this is the next one, set of clubbing also recorded. So now we are recording a chapter which is called clubbing of income. Guys, sorry, we are recording a chapter which is called capital gains. Guys, capital gains is one of the most difficult chapters to revise. Yes, and hence this video is going to be extremely useful if you ask your friends around and ask them, how did you revise capital gain? They say, what capital gain? Listen, I'll do it in the end because it's very demanding to revise. But we'll try and find a midway to revise this chapter. Everyone, please open your books to handwritten notes on capital gains. Everyone, everyone, everyone. Guys, in the exam, capital gain does not come every year, but when it comes for about 4-5 marks. It's a practical question, so let's not lose out on this chapter. Let's try and see, guys. In the exam, how will you spot it's a sum from capital gain? There'll be some asset which will be sold, and the moment you see that, guys, you'll write on the working paper, guys, A, T, P, S, and C. Let's try and see, guys. First, what is A? Guys, next is transfer. You need to know the period of holding, how much is the sale considered, and how much is the cost. Now, guys, each of them will do spend a little bit time on asset. So first asset, guys, is what? Gold, property, land, jewelry, all this is all asset. Whenever you sell, guys, there'll be capital gain. But the government says some cases will not be. Guys, there are 3 cases which are not assets, guys. Can you tell me? PSL. Yes, P is basically any personal mobile property, example your mobile phone, laptops and all. When you sell them, there'll be no capital gains tax. Stock. Stock will tax your jewelry when you sell as a jeweler will tax you, but in PGBP and which land, guys? Rural agricultural land. Besides this, everything is an asset. In the exam, most common assets are land and building, guys. Jewelry are and shares are the most common assets. That is the next. Transfer. Transfer could be called sale, but they say no, it's not just sale, guys. It is Royal Enfield compulsorily converted SEZ. So, guys, whenever you're relinquishing your right, that means you're giving it up, that could be transfer. Extinguishment of asset, example, fire, earthquake, and you're getting insurance money, that could be transfer. Compulsory acquisition by the government, guys, they pay you money, they don't throw you out, that is a transfer. Conversion of what to what? You're in capital gain chapter, so whenever you convert the asset to stock, that is transfer. Guys, sale of course, exchange, barter is also, and zero coupon bond. When you buy, no guys, when you redeem the zero coupon bond, the money that you make is a transfer. Zero coupon bond, generally, example, you buy for 85 and you get back how much? 100. So that 15 rupees is a transfer under capital gain. Next is P, period of holding. Guys, although there can be long term and short term, the benefits are in long term. So we'll discuss long term. For long term, you need to hold the asset for more than 36 months or more than 24 months and more than 12 months. More than 36 months are for all assets. 21, 24 is only for UP. That means in the exam, if they say unlisted share, they can say unlisted share indirectly by saying that you've not paid STT. And B is land and building. In these 2 cases, you need to hold them for more than 2 years. They become long term. And guys, 12 months, which is great. I personally love these assets because they become long term in just 12 months. It is listed. Zoom. Let's zoom up and let's see what is this. Guys, any listed security. If they don't say listed, they'll say STT. So STT and listed mean the same. Next, zero coupon bond. Any zero coupon bond. Units of UTI. It's a government mutual fund and units of mutual fund. Guys, where the money is mostly invested in equity, 65% or more. Guys, what if it's not equity oriented? Then it's 36. The gold that your parents buy, 36 month. Diamonds if you buy, 36. But in the exam, they say listed anything, guys, it's 12 months. And remember, long term gets a lot of benefits. Any asset which is not long term. Excellent, guys. We now move to the next one, which is sale. Guys, sale is how much ever I'm selling the asset for. If I bought an apartment for 20 lakhs, selling it for 1 crore, what is my sale consideration? But the government says, listen, I don't believe you in 4 cases. How many cases? B, U, D, S. And in the exam, whenever you come to sale, check if it's buts. Listed share? No. Gold? No. Diamond? No. But other than that, guys, if you're selling building, if you're selling, if you can't determine and it's slum sale, they will always compare your value with fair market value and take whichever is higher. Only thing in building, they will compare it with stamp duty value and they will give you a margin of, example, sale consideration 80 lakh plus 10% is how much, guys? If your stamp duty value is within that range, great. Otherwise, you'll like stamp duty value. Are we okay with this, guys? Yes. And if there are two stamp duty values, you know which one to take, lower one. And if that happens to be date of agreement, then just check if some amount has been received by modes other than CBC. No cash, no bearer check, and no cash. Last is cost, guys. Whenever you buy an asset, is there a cost? Yes. As there is cost of acquisition, there is cost of labor. If I buy land, cost of acquisition. If I fence it, cost of labor. If I buy a gold ring, acquisition. Put a diamond. If I buy this building, acquisition. If I add another floor, improvement. That's cost of acquisition, cost of improvement, whatever you are paid. Some peculiar things. Bonus shares, zero. Rights, whatever you pay. And if I'm selling the right to you for 100 rupees, that 100 plus whatever you pay. Next, guys, if I get a gift from my grandfather of a house, am I taxed on it? No. So then it's the cost to the previous owner. And if I get a gift from a non-relative, am I taxed? That amount will be the cost. Some very, very important cost, guys. Old fashioned. If any asset is bought before 2001, in the exam, you check old fashioned, that is the original cost or the fair market value as on this date. But if it's a land and building, this will be restricted to stamp duty value as on this date. That's a ceiling. Do you remember ceiling, guys? It cannot be more than that. And guys, one more cost is AJ cost, which is the cost, guys. Guys, AJ cost is whenever you're buying listed share. What are you buying? It is long term. That means it is sold for more than 1 year. And it is bought before Arun Jaitley's speech on 31st Jan 2018 and sold after that. In that case, guys, there will be AJ cost. In the exam, guys, shortcut is this date. If they give you this date, then you know you need to figure AJ cost. AJ cost is ON, original or new, whichever is. So they are giving you a benefit by giving you a higher cost because higher the cost, lower the gain. And this new, guys, is the fair market value as on 31st Jan or the selling price, whichever is lower. So higher and lower. Now, guys, fair market value on this date means for shares the highest price, and if it's listed mutual funds, then NAV, selling price you always know. Guys, and any intangible assets, guys, like patent, copyright, etc. The cost of acquisition and cost of improvement is always, unless you purchase. If I purchase a patent, then it will have a cost. Are we okay with this, guys? These are the 5 letters. Once you get to know these 5 letters, guys, you always start with sale consideration. Example 1 crore 5. From that, there are 3 deductions. First, any expenses on transfer, example brokerage, etc. Can you minus 5 lakhs? So what is my net sale consideration, guys? 1 crore. And from that, second, cost of acquisition, third, cost of improvement. And guys, if the asset is long term, guys, index cost index. So what is the indexation? Guys, over a period of time, your costs tend to change because of inflation. So what they do in indexation, guys, is they take your cost. Which cost? COA and COI, and they divided by the year you bought the asset or you improved the asset into the year you're selling the asset. So what happens to the cost here? It increases, and higher the cost, lower the cost. So indexation is a benefit. This benefit is only given to long-term capital. While you're doing this calculation, just be careful of 4 things, guys. Listed bonds shouldn't be indexed. Indexation only for long term, but no indexation for bonds. Why not for bonds, guys? Because in case of bonds, they don't increase in price, except sovereign gold bonds and inflation index bonds. Remember, sovereign bonds they increase in prices, and guys, listed shares. Guys, sorry, no indexation because we'll give you great rates. Remember, 15 and 10%. And guys, STT, CTT is not allowed here. So where is it allowed, guys? PS. Guys, only in PGBP do you get deduction for STT and CTT. Are we okay with this, guys? Next. Guys, this is how you compute the capital gain. Once you've computed the capital gain, guys, can you exempt the capital gain also? So exemption, the tax rates and the additional points you will continue in the next video on capital gains. Thank you so much. All right, and continuing guys with the revision video of capital gain, we've revised till now 80 PSC and now we move to the next leg of how to save capital gains. Guys, once you incur any capital gain and you don't want to pay tax, there is an exemption under which series, guys, section 54. Let's try and see what is section 54 talking about. Guys, in section 54, the first one is 54. Then we will discuss 54B and then we will discuss 54F. All these apply only to individuals and HO, that is you and me and our families. In 54, you are first selling a house property which is long term. You need to calculate long term capital gain. Is that gain example if it's 80 lakh, the government will exempt the entire 80 lakh, but only if the asset is what, guys? Long term capital asset. They say, listen, we'll exempt you, but you have to do us a favor. You need to invest in a new house property, and hence it's called house for house. You need to buy the next house within the next 2 years from this date of transfer or construct it within 3 years. And guys, whenever you do this, till that time, you need to put the money in capital gain account. Today, tomorrow, day after tomorrow, by when? By John. By your return filing due date, you need to put the money in a capital gain account and then remove it to either buy or construct the house. Whenever you buy it, after that, you need to lock in the house for how many years? What I mean by lock in is you can sell the house, but you shouldn't sell it. And if you sell it, there's a small punishment. And this is what it is. As here, there was a small amendment that now you can buy how many houses? Two houses if your long-term capital gain is up to 2 crore. But you can do that only once in your lifetime. And after DMart owners, Radhakrishnan Damani, they have limited this to only up to 10 crores maximum. That means if your long-term capital gain is 18 crores, can you buy another house? Yes, but the maximum will be how many, guys? 10 crores. Are we okay with this? Yes, yes, yes. Everyone? All right. Next, we go to 54B. Guys, here also you're selling something, but this is agriculture land, specifically UAL. Do you have any tax? Whether it's long term or short term, you need to buy another land. Same thing, guys, the government will give you an exemption under 80 or 54B. The new land you should buy within how much time? 2 years, or construct land within? No, right? We don't have that superpower yet. We can't construct land. And we need to put the money in which account, guys? Capital gain. Guys, what if my gain is 80 lakh, but I only put 75 lakh in capital gain account? That 5 lakh will already be taxed. And again, lock in for how many years, guys? 3 years. Everything else is the same. 54F is slightly different, guys, and slightly difficult. Please pay attention. In 54F, you're selling family assets. It could be shares, gold, diamond, bonds, etc. And in that case, you again have to have long-term capital gain. Example, 80 lakh. But the government says, no, I'm not interested in just this amount. I want the bigger amount, that is net sale consideration. Example, that is 1 crore. The government says you need to invest this bigger amount. So here the government is a little greedy. Here, this is family assets for house. You need to buy another house. Everything same, 2 years, 3 years, lock in for how many years, capital gain account, everything the same. But only thing is they check your 1 crore. Out of 1 crore, what if you invest 72 lakh 50,000? Then proportion is 72.50%. Then the exemption will also be of 72.50%. Are we okay with this, guys? Yes. This is section 54F. Next, guys, there is a section called 54D and section called 54EC, which apply to all. 54D. Guys, here the government has demanded. Demanded means compulsory act of an industrial land and building. Example, Parleji. Here, long term, short term does not matter. But what you need to buy is another industrial land and building, plant and machinery within how many years, guys? 3 years. And you need to invest again. Your gain? Yes, your gain. Same concept. Long term. Long term, short term. Which account? Capital gain account. And guys, you should be locking it for how many years, guys? 3 years. So this is very similar. Has been asked before in the exam. But this one is like the hero section, guys. 54 EC, very common in the exam. What have you sold? House property or land? Again, what kind of asset? And if you don't want to buy anything else, you conveniently you can buy bonds of two companies, NHAI or REC. They are now not notified bonds. And these bonds, you don't get 2 years, 3 years, you get only 6 months. And because you have very less period, there is no capital gain account here. You can directly invest in these bonds. And these bonds have to be locked in for how many years? Guys, lock in basically means please do not sell. If you sell, then we'll calculate your capital gain, and whatever is your cost, we'll reduce it by the exemption only. Example, house for house. How much was the exemption, guys? 80 lakhs. How much was the exemption? You bought a house worth 1 crore. How much did you buy a house for? 1 crore. If you sell it within some years, let's say for 1.2 crore, then we will calculate 80 PSC. And in that, what is the cost of this house? But we'll reduce it by 80 lakhs. So we'll make your cost, guys, 20 lakh and lower your costs. And again, and that's your indirect punishment. Guys, this is what the exemptions are. Next, guys, are we taxed on normal rates generally? Yes. Guys, in other heads of income, example, salary or house property or PGBP or IFOS, you are taxed on what rate? But in capital gain, we have special rates. The first shortcut is normal 20 or N20. If it's short-term capital gain, example, you sold a land in 2 years, then normal rates, no special rate. But if you're long-term capital gain, first you get what benefit? Indexation. In indexation, your cost goes up, so your gain becomes lower, and on that lower gain, you have to pay just how much percent? You might think 20% is high, but it's not high. The guy in the blue t-shirt again, guys, second time pointing out to you, third time you'll straight be out of the class. Yes. Next, guys, if it's listed shares, then what is the most ideal time to do this, guys? It's at 15:10. So basically, you buy it at 15:10. That's a shortcut. Why? Because if it's short-term capital gain on listed shares, the government says I only want to tax you on what percent. Remember, these were not given indexation. And now we are giving them a great benefit, guys. If you stay in India and you can pay tax at 15%, that's a great thing. And even better, if it's long term capital gain, that is only, and that to more than how many lakhs, guys? So if your gain is 1.8 lakh, how much will come out of the capital gain? 1.8. How much will go in total income? 1.8. But how much will be taxed? Only 80,000 at what percent, guys? 10%. Are we okay with this, guys? And whenever you have CC incomes, guys, you need to make a menu card. Do you remember the menu card? First one, next, 15, 10, and 30%. Guys, can you adjust your basic exemption limit first year, then 20, then 15, then 10, and 30? No. Because if you get lucky, the government wants to get lucky on the same amount. And guys, for non-residents, sorry, they can't use their bill against these. Are we okay? Guys, the same concept we'll be doing when we calculate tax in a chapter called Computation of Income. Besides this, there were some additional points. Let's see some additional points. One of them was slump sale. Do you remember slump sale? Guys, when you sell your Britannia division or transport, then guys to Baba Ram, they remember for 100 crores. In that case, guys, there will be ATPSC. Is there an undertaking being sold? Is it sold? Period of holding, even if it's long term, you don't get what, guys? And the sale price, but they will compare your sale price with the fair market value, whichever is, and cost they will take what, guys? Net worth, that is assets minus. But people manipulate this net. They make this net worth higher because higher your costs. The government says, listen, assets, we will not take any revaluation. If it's depreciable assets, we can't take higher value. We have to take WDV. If they have not calculated, you will calculate. There's 4 marks question can be anticipated on the section called 50B. What is that called? Slump sale. We have already done AJ cost, forfeiture. Guys, do you remember forfeiture? Guys, someone paid you 5 lakh rupees for a house. How much? And they paid you today, guys, 2023, 24. Did you forfeit it? Where will it go? IFOS. But the same thing happens before 1/4/2012. You got how many lakhs? 5 lakhs. The government does not forfeit that amount that time. They say, I'll tax you, but whenever you sell. So whenever you finally sell ATPSC, whatever your cost is will be reduced by how many lakhs, guys? And lower the cost, higher the gain, they indirectly tax a forfeiture. Not a very important section, but this is section 51. I hope this is okay, aware. Yes, this is what is capital gain chapter, guys. Please revise this. Once you revise this chapter, try and use this video along with your handwritten notes. If there's something else, revise that as well. And then do as many sums as possible and you get better there. Yes. Recording a video, guys, on a very interesting chapter called salaries. Although salaries are great to earn in real life, but the taxation of it is very daunting. Especially revising this chapter a few months later, guys, will be very taxing, and hence I have this revision video for all of us. So let's try and see what we can do with salaries, guys. First, guys, open your handwritten notes. If you don't have your handwritten notes open, you can always go to the QUIK-Book and use the QUIK-Book for salaries. So here is it, guys. What is it? Which chapter are we at? Salaries. Guys, salaries, the sections are very few. We'll plug it in the end. Mainly 15 to 17 of the Income Tax Act deal with salaries. Guys, remember for salary, you need employment. What do you need? And for employment, guys, we have a different word. We call the employer as what? Master, and the employee as slave. This is only for educational purposes only, not to be written in the exam. Yes. So in the exam, it's employer and employee. Now, guys, whenever you get some salary, one thumb rule or one golden rule is any amount going from the master to the slave will always be taxable. So first by default add it, and then if you have some exemption, deduction, etc., you can minus. Our best friends in salaries are six letters called SAP and SEP. So SAP are the incomes and SAP is the deduction. Guys, this is what mainly is asked in the exam. Yes. Try and not go into retirement benefits and all that, because guys, that zone I cannot take you out of, and it's not even very important from an exam perspective. But I have a separate video on retirement benefit. You want to watch it, you can watch it, but at your own risk. Once you finish the entire portion, you should watch it. Finish your portion twice, thrice, and then watch that video. Yes. Remember, every time you revise something, you should be able to revise that one day before the exam as well. Let's first start with SEP, guys. These are the deductions. Let's talk about the three deductions, that is S, E, and P. S is a standard deduction. Every time you open the room of salaries, you'll get a standard deduction of how many thousand. This is basically under a section called 16(1)(a). It is not given to partners when they get salary, because that goes in PGBP, and MPs, MLAs getting salaries will go into IFOS. Next, entertainment allowance deduction. This is only when you get entertainment allowance, you'll get a deduction only given to which employees? And it is least of A, B, C. How do you remember least? It's always a deduction. So deduction will be least. First is amount that is received. This is giving you high hopes that the entire amount will be exempt. But then, guys, they bring it to reality. 20% of your basic salary, and last is only 5,000 per annum. So this is the maximum that they want to give. And last is professional tax. Remember, professional tax is the tax that professionals have to pay. And just like municipal tax, it will be given as a reduction only if it's paid. Can you pay current year? Can you pay arrears? Can you pay advance? Whatever you pay, you'll get a deduction. In fact, whatever even your employer pays for you, will you get a deduction? Yes. It'll be first added into perquisites, but you'll get a deduction for the same. That is SEP. Now we move to the next letters, which is SAP. Guys, S is salary. Salary is received in monetary terms, so you get money in your bank account, and this is broken up into different items, but all of them are taxed. You can get basic salary, you can get bonus, you can get dearness allowance, you can get commission, you can get wages, remuneration, etc. By whatever name called, guys, all of this is salary, and it is taxed whenever it is due or whenever it is received. Sir, I don't understand this. These are Lakshman records. If it's due but it's not received, shall it be taxable? Yes. If it's received but not due, will it be taxable? Yes. And only bonus, which you don't know how much you'll get, it will be taxable only on which basis, guys? Receipt basis. Now we have short forms here. For basic salary, we'll call it what, guys? B. Dearness allowance, which forms part of retirement benefit, guys, will be called as D, and the other one will be called as OD. And commission, guys, if they give you 50,000 commission in the exam, 50, 60, that's called OC, because that is fixed. But if it's given as a percentage, it will be called C. Why do we have these short forms? Because ahead, guys, whenever we talk about salary, we'll call it BDC, basic, dearness, retirement, and commission, that is percentage. Yeah, this is very important. Now we go to the next part, which is called A. A is allowance. Guys, every employer does not give you allowances. Allowances are varying from employer to employer. Lots of employers like Google, etc., give a lot of allowances. Whenever you get an allowance, what do you do, guys? Add, and then you'll get an exemption depending upon a statement called HRA can demotivate and hurt heartbeat. Guys, only these are the exemptions. Yes, only these. Any other allowance you will add, but there will be no exemption. First, HRA. Guys, are you getting a HRA, house rent allowance? They say, listen, first we will of course add it, and then we will give you exemption of A, B, C, whichever is excellent lease, because it's a exemption. As the first, as always, is amount received. The second is rent paid or payable minus 10% of salary. But what is salary? BDC. And last is 40% of salary. It can become 50% if you are in the four metro cities of Mumbai, Delhi, Calcutta, and Chennai. Unfortunately, guys, Bangalore is in the metro city. So if it's Bangalore, then 40%. Guys, this is only if you are paying what? Rent. If you don't pay rent, can you still get HRA? Yes, but you won't get the exemption. Good job, guys, on the revision. Next, guys, conveyance allowance, also called travel. Daily allowance. helper allowance, uniform allowance, research allowance, tour and transfer. Can you get these amounts? Yes. What will you do first? And you will minus any amount that is actually spent. Guys, you have to spend it for office purposes. This helper is an office helper. And traveling allowance you will minus, guys, but the travel from your home to your office and back, that is not spent for office purpose, so that you will not minus. So example, home to office and back is 5,000, and other meeting allowance is spent is 75. Which one will you minus, guys? 75, not this 5. Are we okay, everyone? So the government's intention is, I don't want a tax allowance. I'll add it, but I'll give you exemption of whatever you have spent. Next is heartbeat. Is this fixed? Yes. These are fixed amounts and you'll minus these fixed amounts. First is hostel. Guys, hostel, not your, but children's hostel allowance. Will you add it? And then you'll get 300 per month per child, guys, up to 2 children. E is same, but for education. 100 per month per child. Guys, next is B. Blind, deaf, mute, handicap. Guys, they don't have to spend anything. Fixed, they will get 3,200. Next is area based, like underground, mining area, all these different areas. You get a specific amount which will be given in the exam. And last is not traveling allowance. This is people who work in the transport sector, like pilots, air hostesses, train TTs, etc. Then it is A or B, whichever is lower. A is amount received, but 70%, and B is 10,000 per month, whichever is lower, that will be the exemption. In the exam, the word allowance by default, guys, you add and then you check the sentence. If you see medical allowance, add but no exemption. Movie allowance, add but no exemption. Tiffin allowance, add but no exemption. Guys, even if they say amount spent, there will not be an exemption unless it is a part of this sentence. Are we okay? Guys, some people are very important, like 2 judges and MPs. They left for UN abroad because they were upset their allowances are being taxed. So we brought them back. That listen, High Court, Supreme Court judges, listen, MPs, listen, UN employees and people working abroad for Government of India. Your allowances we will not tax fully. Are we okay, guys? This is allowance. Sir, what is the difference between allowance and a perquisite, guys? Allowance is given in terms of money. Then you can do whatever you want. Your parents give you allowance of 500 rupees. Listen, it's a Saturday. You go whatever you eat. You don't want to eat, you save it, no problem. That's your allowance. On the other hand, a perquisite is basically an expense specifically. Like your parents giving you money because there's a bill they can see and they pay you money, or they give you that facility. That's a perquisite. Yes. Now we move ahead to perquisites, guys. And that's the last letter, guys. That is P. Now, perquisites are also given in kind, guys. What are they given in? So, are they taxable? Yes. Every amount going from the master to the slave is always taxable. So, even these perquisites will be taxable. We'll have to value them. And there is a rule called Rule 3, guys, of the income tax rule. Based on those, we'll value these perquisites. Let's see what are the perquisites and how do you value them. Guys, we'll take the easy ones first. First one is club house membership. Who's enjoying the benefit? Slave. Who's paying for it? Master. Is it a perquisite? Yes. Will it be taxable? Yes. So perquisite will check only two things. Who's paying for it? Master. Who's enjoying it? Slave. Next, guys, and should be a personal benefit. Credit card. Are you getting a credit card? The annual fee plus your personal purchases. Will that be a perquisite? Yes. Next, domestic service. Not a helper in office. This is your house help, guys. Whoever has employed it, who's paying for it? Master. Who's enjoying the benefits? Slave. So is it a perquisite? Yes. Gas, electricity, water. Guys, who's paying for it? Who's enjoying it? Slave. Is that a perquisite? Yes. Only exception is if you're working for the electricity company, gas company, water company, then they will not add the bill value. They will add what, guys? Cost. That's an exception. Next, guys, any liability of slave, who should be paying? Slave. But who pays it? Will that be taxable? Yes. Professional tax of slave, who should pay? Slave. But who by mistake or by unintention paid? Master. So you will first add it and then remember you get a deduction as well. People on the last benches on their phone also need to participate. Yes, this video is for you. I'm happy not to share it with some people if you're not interested, but this is for you. You need to participate. Next, guys, after this, you are getting a loan from your employer, guys. Is that okay? Whenever you get a loan from your employer at a beneficial interest rate, what is beneficial interest? You compare the master's rate with SBI rate on the 1st of April, and that difference is the beneficial rate. Example, you took a car loan of 14 lakh. Car loan of SBI is 10%. Your master is charging you 2%. What is the benefit? And it's for 5 years, but we don't care about 5 years. We care about this year. So that benefit, guys, will be added because ultimately, is it a benefit going from whom? Master to whom? Slave. So it will be taxable. Next, guys, we go to something which is called sweat equity shares, also called ESOPs. Guys, ESOPs are offered by an employer. That means a share which is priced at 620 rupees, he's offering you only for how much, guys? So, what is your benefit? 600. This benefit is coming from whom? Master to whom? Slave. So, it will be taxable in the year of allotment. Guys, remember, whenever you sell this share, now the cost you have paid 20, you are taxed at 600, so your cost is what? 620. So if you sell it for 820, this will go under capital gain. Next, guys, is lunch, tea, coffee, snacks. A lot of offices give you great meals, but don't worry, this is not a perquisite. So enjoy your coffee, tea, and snacks in office. There is no perquisite, but there are two exceptions. Any lunch and dinners, guys, up to how much? 50 will not be taxed. Anything above that, guys, on the excess will be taxed. And if you're not in office, beyond office, guys, the full amount will be taxed. Next, guys, which is the next one? Medical facility in India. Guys, in this case, I want to discuss the definition of family. What is family, guys? Clock. Who's next to you? Spouse. This side? Siblings. Below you? Children. Above? Parents and grandparents. That's your family. But in this case, guys, your spouse and children always. But parents, grandparents, and siblings, only if they are dependent on you, it will be family. Guys, medical facility in India, if the moment it's a private thing, it'll always be what? But if it's GMC, excellent, guys, government or master or commissioner, then in that case it will be exempt, but it has to be GMC plus what, guys? Family. Guys, can it be medical facility abroad? Yes. Guys, abroad is generally a serious illness. So if it's STT, stay, travel, and treatment, the government says, listen, master has paid for all this. Example, he's paid 2 lakhs, 2 lakhs, 2 lakhs. So how much has he paid for you? But this will not be taxed, guys. It will be exempt. Only for travel, there are two exceptions, guys. It should be within RBI limits. Which limits, guys? And only for travel, guys, we will tax you and we will exempt it. Exemption only if you are a poor or not a very rich employee. Your GTI should be up to how many lakhs, guys? 2 lakhs, because guys, people fake it. People say I'm going abroad for treatment, but they're actually going for a holiday and they make the master pay. Next, guys, you're actually going for a holiday. You are going to Kashmir and you want to stay in a hotel. So who's supposed to pay? Slave. But who has paid it? If master pays, guys, is this a perquisite? Yes. But guys, if you're working with Taj and staying in the Taj Hotel, then they don't trust Taj Hotel. They will take the amount charged by similar. Next, guys, leave travel concession. Again, you're going on a holiday, but this time it's about travel. Are you traveling in India? And who's paying for you, guys? So will it be a perquisite? Yes, but they say we will exempt it up to how many people, guys? 4 people. Again, the family is the same. But remember the joke on children. If you have one single child and then you have what? Twins, will you get it for all three? Yes. But if you have a twin first, then you stop because then they stop. Yes. All right. Next, guys, it should be only by any class, but flight exemption will only be for economy class. You will get this exemption twice in a block of how many years? And if you can't use it, at least one of them can be carried forward to the first year of the next block. Guys, has to be the shortest route possible. You cannot take stopovers, etc. So this is leave travel concession. The section is important. Section 10(5). Next, which is the next one, guys? Yes, guys, gift. Guys, your employer also gives you gifts. If the gift is received in cash, then fully taxable. But if they give you watch, sneakers, ties, shoes, etc., then up to how much? They will not tax for employee, but above that it will be fully taxable. Think like the government. Next, guys, lots of purposes, but we're almost coming to the end of it, guys. Yes. Next is education facility in India. Guys, do you want to get educated? There will be no perquisite. But any family member like spouse, children, etc., will it be a perquisite? Yes. And for children, they will minus 1,000 per month. But guys, what if they're sending Reliance is sending you to your children to Reliance school only? Then they will not trust you. They will amount charged by similar schools. All right. Which is the next one? Any idea? Excellent, guys. Movable asset. Guys, in case of movable asset, there are two. One is use, one is sale. Let's discuss use first. If you're using the employer's movable assets except L, M, J, L is M is mobile and J is journal, then there is no perquisite. But otherwise, guys, 10% of the original cost will be the perquisite. And if it's taken on rent, then the rent paid off payable. And guys, if it's sale of mobile asset, then guys, you have to first find out the WDV. Example, the projector was for how much? 80,000 after depreciation. They sold it to you for how much, guys? 20,000. Is that a benefit? From the master to the slave, will it be taxable? Yes. Here it is 10 trades. It's not LMJ, it is 10 trades. So how will you remember, guys? The shortcut is use LMJ and this is 10 trades. If the projector is given after how many years? Or it is by person who trades in them, guys, there will be no purpose. And guys, here, how do you calculate WDV? Two things you have to be careful about. Depreciation rates are changing. Here, electronic devices with memory, 50%. Motor cars, only cars, bikes, laptops, sorry, bikes and other things, guys, are at 10%. WDV, WDV, SLM. We have almost two questions in the book which we solved for this. And guys, depreciation is not half year or full year. It is only the completed years. So if you complete 2 years and 9 months, you will depreciate only for 2 years. Excellent, guys. This is use and sale of mobile asset. Anything else? Accommodation. Guys, accommodation is basically a house which is provided by the employer to you. As first case, the house is owned by the employer. Guys, here it changed from which date to which date? 1st September. Let's do the September one first, guys. Now it is what? 5%, double it, 10% in the middle, 7.5 depending on population. This is least populated. Guys, if it's less populated, cheaper. If it's high populated, more expensive. This is more than how many lakhs? This is up to 15 lakhs, and this is more than how many lakhs, guys? 15 lakhs. But before that, it was different, guys. Before that, it was what? 7.5%, double it, and somewhere in the middle, guys, was 10%. Are we okay with this? But this will not be so important. This is the more important one. Yes. Next, guys, if it's government employees, and it's very simple, there's a license fee. Which fee, guys? Per month, whatever is the license fee added, because guys, who's giving you this accommodation? Master. Who's enjoying it? Slave. So this is the purpose. Next, if it's rented by the master also, then guys, the rent that they are paying or 10%, yes, the last one, 10% of salary, surprisingly, whichever is lower. And fourth, guys, if it's furniture, then it's again mobile assets, so 10% of original cost. But guys, in case they give you a hotel or a service apartment, are they more fancy? So the rent that is paid or 24% of salary, because a hotel is how many floors, guys? 24 floors, that's a shortcut. Remember, if they give you two accommodation, 1 and 2, up to how many days? 90 days, they'll take whichever is lower. For example, Mumbai and Delhi. So they'll take whichever is lower, but after 90 days, they will take what, guys? Both. But remember, in a remote location, whether they give you meals, whether they give you house, there is no one else to give you that. So hence, there will be no purpose. Guys, only thing in accommodation, do it in the end, because the definition of salary is very different. Everywhere definition of salary was BDC. Here it is SAP. In SAP, perquisites we don't take because you're calculating perquisites. Allowance you will take, but only much once. Taxable, that means after the exemption, whatever remains. And S, you take everything except vada pav, that pav, yes, that pav, P. Provident fund we don't take. Areas we don't take. We'll discuss that in 2 minutes right now. And OD we don't take. So can I take D? Can I take commission? Can I take bonus? You can take everything except power. Are we okay? This had come in the recent papers. And remember, guys, salary, SAP, and SEP is something that is important. I know people who try and do everything, retirement benefit, everything, everything. One day before the exam, a message comes, sir, I cannot revise. That's because you're focusing on the wrong energies. Yes. You need to focus on SAP and SEP, and that's the kind of question you should be expecting in the exams. Yes. All right. Next, guys, we move to two additional points. One is relief. Guys, you are in which year? 23, 24, and in the year 22, 23, your salary was 3 lakhs. How much was it? Now it is how much, guys? 10 lakhs. These are examples. And you got a call that, listen, that year there was a strike and you had to demand it 5 lakh. This is given in this year. Guys, will your tax go up? And had you got it in that year, we will check. And if this year is more, you will get a relief. In this, you do 4 calculation. First, second, and first, second. Here you take the first high amount, guys, which is the high amount, and you calculate what? Tax. Let's say that is 1 lakh. How much is that, guys? Then you calculate low. Low means how many lakhs without the arrears, and let's say that is 60,000. So how much extra are you paying? 40,000. This you keep, and this let's call it A. Now you go to this year also, high and low. First, what is high? What is low? Let's say high was 30,000 and low was what? Zero. So here you should have paid how much extra? So in this year, are you paying extra? And because of no fault of yours, the government will give you a relief of how much, guys? 10,000. This is called relief under section 89. Not very important because same four calculation they will not ask. But MCQ, anything is worth now 2 marks. And last, guys, provident fund. Guys, provident fund is like a bank account, but it's for which purpose? Retirement. There are three kinds of provident fund: SPF, RPF, and URPF. Guys, SPF is the best, but from an exam perspective, it's never asked because this is only for which employees? Can the master contribute money? Whatever amount he contributes, example 1 lakh, it will be completely ahead. Guys, why such generosity? Because who uses it, guys? Government. Next on this, what do you get? Let's say that is 10,000, that will also be completely. And can you withdraw the money? That will also be completely exempt because who uses the money, guys? In RPF, this is for private companies, but again, who uses the money? So this 1 lakh will also be exempt subject to 12% of salary. So how do you present this? First, you add 1 lakh, whatever is received, and then you calculate salary BDC, take how much percent, and minus that, and excess is taxable. Interest also will be exempt up to how much percent? 9.5. So how do you present it? Add the interest in IFOS and minus up to 9.5. And withdrawal is exempt after how many years? The government says at least let me use it for 5 years, and then it's okay if you remove it. But in 5 years also, UID, unemployment, illness, disability, if you withdraw because of that, there'll be no tax. And URPF, guys, it's a drawer. Guys, when they put the money, do you get it? No tax, no exemption. Interest, no tax, no exemption. But are you withdrawing it? So master's contribution and interest on it will go under. Why no exemption? Because the government hasn't used it. And guys, your contribution, there will be no tax because you already paid the tax. And interest on that will be called what, guys? IFOS. Are you okay? Sir, where is PPF? Guys, PPF and all these, when you contribute, it will be a deduction under section 80C. Guys, this is salaries. Now that you finish this, please do as many sums as possible. And once you finish your entire portion, I would recommend you only then to watch the retirement benefit video. Otherwise, guys, simple rule, any amount going from the master to the slave in the exam, you add it and you'll be good with that. Yes, this is the salaries video. Guys, we missed 2-3 perquisites, so I'm just adding it here. Guys, life insurance, if the premium is master is paying, it's a perquisite. Health insurance, accident insurance, there is no perquisite. And telephone, Wi-Fi which at your house, guys, now it's work from home, that is not considered as a perquisite. So there could be a salary scale also. Salary scale means 35,000, 5,000, 50,000. So your salary starts at what? 35. After a year, it goes to 40. After a year, it goes to 45. Whenever you join, guys, it changes 5,000 till you reach a peak. In case it comes in the exam. And guys, gifts are 3 types. One general gifts which go in IFOS. One is business gifts which go in PGBP, and one is gifts which go under salary. In salaries, you know the gift, guys. 5,000 is the limit. Cash, there is no limit. Thank you so much. All right, guys, getting back, guys, Bangalore reigns very unpredictable. Who wins IPL? Very unpredictable. But deduction chapter, very predictable. Yes. When you go to CA inter paper, deductions is going to be there in the first sum and some other sum as well, and hence you got to revise it really well. And there are lots of sections, lots of shortcuts. Although this is one of the favorite chapters of people who study DD because it's very easy, but it's very vast. So hence we do a nice recap on this chapter, which is called deductions. Under which chapter, guys? 6A. First thing, guys, can you write something like this? Under section, under chapter, you can write. And this, guys, we do after we finish GTI. So GTI minus deductions will lead to what, guys? Total income. So hence, you should know this really well if you want to know the total income, right? Next, guys, can you minus deductions? Yes. Example, if my GTI is 10 lakh, My deductions can be maximum how much, guys? 10 lakh. Which section tells you that? 80A. And this section also tells you that if there is any CC income. What is CC income, guys? Casual income and capital gain. Casual income and capital gain 20, 15, and 10. That one, not the normal rate one. Then the government says on this, guys, this is not available for any deduction. That means separate it and call it what? NA, and the remaining is what, guys? A. Example A is 8 lakh, this is 2 lakh, so your deductions can only be up to 8 lakh. Are we okay? This NA and A are only shortcut. You don't have to tell them in the exam, you just need to keep them in your mind. Next, guys, we start the series of deductions, which is the first series, guys, which is a C series, which is 80C. Are you contributing? And you need to contribute to a lot of things. You can flip your page to 80C. Girls, life, now, needs, 5, ultra, senior, assets. Yes. One is PF, one is mutual fund, one is shares and debentures, a house with National Housing Bank loan, and Indian education. Guys, this is big, but this is very, very worth it because in the exam, this is pretty common. Guys, here your family size is self, spouse, and children. Are you contributing to Sukanya Samriddhi account? You get a deduction. Are you contributing for life insurance premium, whether India or abroad? You get a deduction for self, spouse, and children. But within the limits, remember 10%, 20%, yes. Next, NABARD bonds, National Savings Certificate. Not just the amount that you contribute, but even the interest that is reinvested. Will you get the deduction? Yes. 5-year FD. This is also called tax saver FD. But who's watching you guys? Government. And if you next year withdraw this FD, guys, then guys, will you reverse this? Yes. Next, Ultra is ULIP. ULIP is a combination of investment plus insurance. Don't worry about what it is. Just that if you pay money into ULIPs, you will get a deduction under 80C. Next, senior citizen saving account. If you open one and you put money, you get a deduction. Next is annuity. Annuity basically means all those pension plans where you put money today and they pay you money later. All those you get deductions. Next, which PF? RPF, SPF, and PPF. What about URPF? No, guys, not URPF. Here, guys, like PF, there can be other funds like superannuation, etc. They're all like PF only. You get deduction there as well. Next, mutual funds, shares, and debentures, which have a lock-in, so not very popular. Very popular house. Guys, when you buy a house on loan, not the interest. Interest goes in IFHP. Interest goes in 80EEA, but this is on what, guys? Principal, do you get a deduction? Yes. And when you buy a phone, you also buy cover and screen guard. Same way, when you buy a house, you also pay stamp duty and registration. Do you get a deduction for that as well? Yes, under this. But remember, the house should be ready. And this entire chapter loan should be from approved sources only. From relative, etc., you can, but you won't get deduction. And next is NHB bonds. NHB is National Housing Bond. Same like NABARD, they also issue bonds. And Indian education. Are you paying fees? Not for yourself, but for children. Up to how many children? 2 children. Guys, they can give you 3 children in the exam, but deduction only for 2. Only for Indian education. Tuition fees? Yes. Private coaching? No. Capitation or donation? No. Guys, this is what is 80C. Next is 80CCC. Care. Are you putting annuity plans again, pension plans? But this time it is of LIC. Will you get a deduction here as well? Yes. And 80 CCD1. Guys, you are contributing in National Pension Scheme. More on this in the pending point video as well. But when you contribute here, you will get a deduction. But the deal is all these three together, there's a limit of 80 CCE of 1 lakh. This is CC's extent. And guys, beyond this extent, there is something called 80 CCD1T, whereby if this limit is already exhausted and still you want to contribute only to which NPS, you can contribute 50,000. This is self contribution. This is also self contribution. First fill this bucket and then anything overflowing to NPS can go here. 80 CCD2 and 80 CCH in the pending video. You can watch the recording video from there and then revise it from there as well. Next, we go to the D series, guys. The D series is slightly different. First is section 80D. You are paying what insurance? Medical insurance premium. Not just for yourself, spouse, and children, but also for your parents. I sell spouse and children, what is the limit? But if even one person is a senior citizen, 50K. Will you get for central government health scheme also? But medical expenses, you don't get it here. Parents also, guys, you are paying good job of your parents premium is up to how much? And if parents are senior citizen and resident, then guys 50K. Guys, central government health scheme you cannot contribute for them, but medical expenses is allowed as a reduction if two conditions. The parent, guys, whose medical expenses you born should be a senior citizen and should not have medical insurance. Guys, can you pay for multiple years together? Yes, if it's for 4 years, you need to divide by 5. Basically, the number of years it covers. If it's for 3 years, you divide by 4 plus 1, unless the policy is taken on first April. And guys, can you have preventive health checkup? This you can pay even in cash. These you cannot pay in cash. And cash limit up to 5,000. Sorry, preventive health checkup limit 5,000. And this is to be shared between both the categories. So how do you do this calculation? Example, guys, here 22,000 and 4,600 health checkup. Here also, guys, 23,000 and 2,700 health checkup. First, you see internal limit, guys. Yes, is 22 allowed? Yes, assuming both are not senior citizens. And 4,600, guys, what is the internal limit? 5,000. So is 4,600 allowed? So internal limit says 4,600 allowed, but external limit says only how much allowed, guys. 22 is used, so only how much allowed, which is lower, guys. So you will not get 4,600, you will only get 3,000. And out of your limit of 5,000, how much is used now? 3,000. Are we okay? Internal first, external later. Now, how much coupon is left, guys? Out of 5,000, 3,000 is used just, so how much is left? 2,000. Now, go to the parents. Check. Internal limit, how much is left? So 2,000, the thumbs up for 2,000. And external limit, how much is left, guys? 2,000. So how much will you get, guys? Not 2,700, we will only get 2,000. Watch this again, do a few sums, you'll be okay with internal limit first, then external limit. Guys, this applies only to individuals and HUs. The family here includes parents. And because you're paying for the economy, it goes better. It is applicable to both residents and non-residents. 80DD. Here, someone is disabled and dependent on you, and this includes the same family, self, spouse, children, parents, plus now it includes sibling, but not yourself because we have another section 80U for that. And here, irrespective of whatever you spend, you get a standard deduction of 75,000 per annum, or if it's severe disability, that is 80% or more. Next, guys, this is only applicable to residents because, guys, disability does not help the economy. 80 DDB, double dangerous bimari. Again, same family, which is here, guys. Here is the same family. Someone is not well, has a specified disease. And have you hospitalized that person? Yes. For the medical expenses, whatever you have spent, or maximum 40,000, they will give you a deduction. Remember, guys, this can also become how much? If the person who is sick, not you, the person who is sick is a senior citizen and a resident. Guys, here there is no standard deduction. And guys, first compare. Let's say you spend 75. So 75 or 40, which is less. And then once you compare, guys, any insurance amount can you minus? Any employer amount can you minus? So the deduction will be only of the balance. Are we okay with this, guys? Because dangerous bimaris don't help the economy, this only applies to whom, guys? The residents. Are we okay, everyone? Guys, we go to the next series, which is the E series. Guys, E series, the first shortcut is pi. What is pi? The E series, entire E series only applies to individuals only when you're paying interest and only when it is paid. Of course, interest makes things expensive. The first one is 80E. Are you taking a loan? In all the E series, what are you taking? Loan. If you're taking a loan for education, or you're taking a loan for house, or you're taking a loan for a EV, as the government likes to give you a deduction. First, home loan. For self, sorry, education loan. For self, spouse, and children, guys, loan should be from approved source in this entire chapter. And the education can be anywhere, but the loan should be from India. Do you get a deduction? Yes, for 8 consecutive years from the year you start making payment. Everyone okay? Now EEA. Guys, here you bought a house property on what, guys? Loan. Will you get deduction for interest? But don't you already get it in house property? Yes, but this is in addition to that, guys. In SOP there, how much is allowed? So can I take the balance here? And in LOP there, how much is allowed? Unlimited, but you cannot go outside for more than 2 lakhs. So can I take the balance here? So this is, guys, an additional jar to keep the excess interest here, but there are some conditions. The house should be up to 45 lakhs. That means the house should be a small house. It should be, loan should be taken from 19 to 22. That is 1st April 19 to 31st March 22. It should be your first, basically your only house that you have. And guys, it can be LOP, SOP, doesn't matter. The interest reduction is 1.5 lakhs. Next is, guys, EEB. Congratulations on your Tata Nexon, guys. Who is in the showroom with you? Government, they say, listen, I'd like to give you a deduction on the interest, guys. This has no connection, by the way, this chapter deductions to PGBP or etc. It can be for personal use, still you will get what, guys? Deduction up to how many lakh? The only loan should be between 19 to 23. Remember, loan can be from anywhere, but only house property loan cannot be from NBFC. All these are there in your handwritten notes and also in the QUIK-Book. Next, guys, we go to the next section, which is the G series. After E, guys, which series next? G series is all about giving. Are you giving money? Yes, let's take the first section, guys. ATG. What are you doing, guys? Donation. But this we will do right in the end, even in the exam, right in the end. And there is another section called GG, guys, the Ghar Ghar play, which will again do right in the end. ATGGA, give, around. Are you donating for scientific research? But guys, you are not opening the room of PGBP because you don't have any business. Then can you take a deduction here? Yes, you'll get a deduction, but cash only up to how much, guys? 2,000. Next, guys, you want to join politics someday. So ATGGB or GGC, GG Bada and GG Chota. This is donations by whom? Companies. This is Chota donation by all others. Guys, you can donate to political parties or to electoral trust or to electoral bonds. Right now, very much in controversy. But only thing is, don't donate in cash because you know what, guys, they already have a lot of cash. And guys, only thing is in GGB, if there's an advertisement in a political magazine which was not allowed where, can it be allowed here as a reduction? Yes. Excellent, guys. That is the G series. We'll come back to the main two again. Next, guys, is 80 job ad. In India, guys, we are a huge population. So anyone who adds jobs, it's a great thing. The government says whenever you add jobs, besides the deduction that we will give you for salary in PGBP, we will give you how much percent extra? 30% in this, provided you follow some conditions first. You should not pay them in cash. You should pay them only up to, but that's a stupid condition, yes, because they want you to engage lower level employees. You should contribute to their PF. That means they should be regular employees, not casual employees. And guys, you should be engaging them for 240 days in a year. If it's in the laugh industry, 150 days for laugh, that is manufacturing leather or clothes, that is apparel or footwear. As if all the conditions are fulfilled, you get 30% extra. If not, then there'll be normal employees, you don't get 30% extra. So divide all the employees into eligible and ineligible. Eligible, you will get how much percent extra? Guys, this is forever? No. It's only for 3 years. You check for the first year. If there are additional employees, will you get this deduction? And that story is over. Then you go to the second year. Again, check. If there are additional employees, will you get? And addition means net addition. If you start with 10 and you hire 2, how many? And you fire 5, then guys, how many do you end up with, guys? 12 minus 5 is what, guys? 7. There are no net addition, you won't get this deduction. And guys, this is available for only how many years? 3. But guys, in case your 240 and 150 days cannot be fulfilled in any particular year, don't worry about it. You cancel that year and you go to the next year. For those employees, if in the next year they fulfill 240 or 150, then you will get this year's deduction in the. What if next year is the 4th year? No problem. What if next year there are no additional employees? Still, you're just pushing this deduction to the next year. And remember, you should also be subject to what, guys? Audit, because how do we believe that you're adding jobs? Are we okay with this? We move to the next one. 80 QQB and its cousin, guys, 80 RRB. In both these cases, guys, what are you earning? And guys, can you have expenses of royalty? Guys, that first will go to PGBP or it will go to IFOS. Any limit on the income here? No, because higher the income, better for the government. So there is no problem here. But guys, in the deductions, there is a limit. Step 1, Step 2, Step 3. If you're getting royalty at 18, 24, 30%, we limit it to what percent? And if you're getting royalty at 12, 12 is great. So maximum how much percent, guys? And if it's lump sum, then we will not touch that. We will take the entire amount. Step number 2, whatever is the royalty earned in India plus royalty earned abroad but received in India within 6 months from the end of the year, that is by 30th September. If this is 5 lakh, this is 4 lakh, which one will you take, guys? 4 lakh, whichever is lower because it's a deduction. And whatever expense you got in PGBP, you'll minus that. Example 1.5 lakh. So how much is that, guys? 2.5. But remember, it can never be more than 3 lakh. This, guys, again is only available to residents because you're not spending any money. JJA to everyone, ATG everyone. RRB is a mirror. The only thing is royalty is not on books here. It is on any patent. And same steps except this 15% is not there. So you take the total royalty. Are we okay with this, guys? Yes. We move to the next section. AT, TTA and AT, very hidden deductions. Are you earning interest? In which account? First, it will go where IFOS and you'll get this 10,000 annual. So 10,000 maximum deduction. But this is only for people who are below how many years and to HUFs. And guys, is saving good for the economy. Hence, it applies to both. But guys, that's not fair to senior citizens. But we make it better than fair because under 80 TTB, their interest can be from which account? Any. First, where do you go? Then they'll get a deduction under TTP, TT, but even bigger, guys. How much? 50,000 per annum. But remember, because there's such a big deduction, we can only give it to whom, guys? In the exam, very common and very hidden. They will not talk about this. They will tell you one line IFOS interest income from savings account. You have to judge whether 80 TT or TTB applies. Next, guys, 80U. Can you yourself be disabled? Then the same deduction of 75,000 or 1,25,000 will be given to you. Are we okay with this, guys? We now move to the next two deductions. Yes, let's open up to 80G and 80GG. Let's do first 80GG. Got, got. Guys, there are two kinds of people. One who get HR, one who get what? Then they can take the HRA exemption, which we've already discussed in salaries chapter. But there are some people, guys, unfortunately, they don't get what, but they are still staying on what? And so they can take a deduction under 80GG. A, B, C, whichever is lower because it's a deduction. A is amount received generally, but here you're not receiving anything. So it is 5,000 per month into the number of months you've taken the house on rent. B is rent paid or payable minus 10% of a number which is called ATI, adjusted total income, which we'll talk about. And this is 25% of ATI. Now, why are we doing this in the end? Because of this number called ATI. ATI is adjusted total income. It's a cousin of GTI. First, you will take the GTI, but which one? Available GTI. So you'll minus example 10 lakh. You'll minus all deductions except which one? ATGG. So let's say that is 6 lakhs. So you'll get how much, guys? And this becomes your ATI. So in the exam, again, guys, very subtle. They will say ATGG, no. They will say house taken or rent. But remember, this deduction you will not get if in the same city, either you or a spouse or your minor children or a HUF already have a house property. Next, we go to the last section, which is section 80G. It's great to donate money, and the government acknowledges that if you donate money up to 2,000 also in cash, is that okay? Yes. Donations are put into four categories. The first category, without any limit. Second category, next 100%, and this is 50%, but both these have a condition. Now, guys, this is simple. If you donate 10,000, 10,000. If you donate 10,000, you get only 5. But here, guys, if you get these categories in the exam, you stop and calculate what, guys? 10% of ATI. ATI is the same calculation. You take GTI minus all deductions here except ATG. None of ATG, no reduction of ATG. And then, guys, let's say this is how much? Let's say this is 60,000. And you're donating here 20,000 and you're donating here 60,000. Now, which one do you start with first, guys? Always this category gets it first. So first compare 20 or 60, whichever is lower, because you're doing deduction, guys. Whichever is lower, how much is that? And how much percentage, guys? 100. So what is the deduction? Full 20,000, and this pastry reduces by how much, guys? 20. So what is left now is 40,000. So this is over. Now we go to this person. Guys, how much is compare 60 and 40? 40, and how much percentage, guys? 50%. So only how much, guys? So while you're donating 60, you get a deduction only of 20,000. Are we okay? Guys, this is 10% of ATI. We've done some sums. Watch them. The working note is important. See how we've written that working note. Guys, this section is great, but don't by heart who's supposed to be following what. Remember, guys, if it helps the economy, applies to both. If it doesn't help the economy, applies only to resident. Remember the section, each one of them have a shortcut, and this is what you need to do. Finish deductions and then move on to sums, as many as you can. Thank you so much. Guys, in ATG, although there are four categories, how do you remember which fund is which category? So guys, for the second category, it is not. For the third category, it is family Olympics. That means you're paying to the government for family planning, or you're paying to Indian Olympics, etc. And last is give him money to create temple. Give him money to create temple. If you donate to whom? Temples, etc. If you donate for minorities, if you donate for housing, if you donate to government other than family planning, and if you donate to charity, guys, this is the main one, then in that case, guys, you will get the fourth category. And besides that, any other common one, PM's cares fund, children welfare fund, all those funds will be in which category, guys? In the exam, this and this you don't have to stop, but if third and fourth come, then you have to wait for ATI. And in the exam, can they give you ATG and ATGG together? Yes, but they will not give you both ATI. Here it will always be ATI, and here it will be first and second. Are we okay with this? Yes. Let's do a nice recap. Can we do it, guys? Let's see how well we can time it. I'm going to go with all details, but you have to participate, guys. This is a chapter for a short chapter, guys. TCS, TDS, and what? Advanced tax. Let's take it from the top. First one is what, guys? TDS. In the exam, TDS question is going to be either 2A or 3A. Anywhere between 5 marks to 8 marks, guys, can be a bounty of this chapter. Whom will you put in the middle always? Payer. And when that payer is paying something to you, you're the recipient here. The government says, listen, I don't want to wait. So hence deduct some money and pay it to me. And we call that money as what, guys? And different rates along with what? PAN. Government should get the PAN number. If you don't give the PAN number, there's a punishment of higher rates, which we will see while we're revising this chapter. Guys, most of them are on payment basis. Which basis? That means if the payer, sorry, some of them are on payment basis. That means whenever the payer pays, if today, 23rd May, then is this month fixed. So he will pay to the government when? 7th of the next month. But some of them are payment or credit, whichever is earlier. What does that mean? If the payment happens, let's say in November, will the government wait till November? No, they say either payment November or credit means books of accounts entry, journal entry, guys. If that happens in May, which month? May. Are we okay with this? And guys, continuously here, any of the income has GST. Will there be any TDS on that? No. We'll see more of those common points in the end. But let's start, guys. The first section that we will do is section 194B. B for what, guys? Betting. In that, the payer is anyone like a lottery company, betting, etc. Even KBC, when they are paying you income of more than how much? 10,000. Excellent. There will be TDS at a very high rate of how much, guys? 30%. This one is on payment basis. And guys, here if you this is 30%, so there is no punishment. Even if you don't give PAN, they will not deduct anything more than 30%. But remember, if you give the PAN, you can take what in this case? Credit. This is section 194B. Similar to that is a section called 194BB, bigger betting. In bigger betting, this is only and only for horse races. So if you go on a Sunday morning to the Bangalore race course or Mumbai race course or the Delhi race course, guys, and three cities that I'm teaching, so they'll be watching these revision videos. So bigger bet, then guys, again say more than how much, guys? 10,000. There will be TDS again at what rate, guys? Again on what basis? Payment basis. So these were two sections that we revised. Next. Guys, some people have a habit of withdrawing notes. Is that a good habit? No, because the government says, but this is very good, guys. The government says that if you withdraw more than how many crores, then they might deduct TDS at what percent? Per bank, guys, per bank. So if I withdraw HDFC Bank 1 crore, ICICI Bank, no problem. Per bank, if it's more than 1 crore, at 2% only on the, guys, there are very rare cases when it's excess. So if I remove 1 crore, 10 lakh, only on 10 lakh, they will deduct TDS at what rate? 2%. Here, guys, they put a punishment. For people in the last how many years? In the 3 years, if in all the 3 years they have not filed what? Return of income, then more than 20 lakhs, 2%, and more than 1 crore, 5%. That means up to 20 lakh, no problem. About 20 lakh till 1 crore. 2 to 2% will be deducted, and above 1 crore, 5%. This is almost like a punishment. Yes, are we okay? This is section 194N. But if you take a bag, then will there be any TDS? No, guys. That means if you're a bank, if you're an ATM example, white label ATM, these are private companies operating ATMs. And if you're the government, then you are saved, no problem from 194N. Moving to the next section, guys. 194O. Guys, nowadays businesses start their business online. So are you selling on an e-commerce operator? Whenever you're selling on an e-commerce operator, like you're selling cakes on Zomato, guys, they collect the money from you and me. So you and me will not deduct TDS. So the money will first go to whom? E-commerce operator. And whenever they are paying that cake seller, they will have to deduct TDS at what rate, guys? 1%. So on e-commerce operator, TDS is at what percent? 1%. This is 194O, is O is called online. But remember, guys, whether we pay e-commerce operator directly, so any direct payments, or we pay to the cake seller, guys, in both the cases, will there be TDS? Yes. But why is that? Because the e-commerce platform is being used. Example, if e-commerce operator got 1 lakh and this cake seller got 10,000, then TDS will be on what, guys? 1 lakh 10,000. How much percent? 1%. And whenever e-commerce operator is paying this 1 lakh, he will deduct that 1% on 1 lakh 10,000. Is that okay? But remember, guys, individuals HUF like a Rapido, guys, etc., up to how many lakhs? 5 lakhs per e-commerce operator when they earn, they are exempted. There will be no 194O. Next, guys, sad music in the background. Someone is no more. Guys, life insurance money. Guys, when life insurance receipts are got on death of a person, they are exempted. When all the premiums are low, it is exempted. And when any of the premiums are high, it is taxable. Now we'll discuss low and high premium first. This is the third time we're doing low and high premium, guys. Before 1/4/2012, what was low premium? Which became what, guys? So in the exam, check when was the policy taken, before or after. And for handicap people, 20% has become, if all the premiums are low, exempt. If on death, exempt. But if any premium is high, taxable. And if it's taxable, we'll have to see TDS. Who's in the middle, guys? These life insurance company, and when they pay more than how much? 1 lakh. That's step number one, guys. It should be more than 1 lakh. Second, you have to calculate the net amount. What is net amount? They say that to take this money back, did you pay some premiums? You paid 5 lakh 60 to get 6 lakh back. What is the net amount? So only on that 40,000, not on the entire 6 lakh, there will be TDS at what rate? 5%. And remember, now onwards, when you don't give PAN, it is 20%. I forgot, in online, because it is new, it's not 20%. If no PAN, then the rate is only 5. Is that an exception? Yes. Otherwise, no PAN rate becomes what, guys? 20%. Excellent, guys. Moving ahead to triplets. Three section, guys, where there is a pair in the middle. And first time, what are you paying? Commission. What are you paying? Or you are paying brokerage. Which section, guys? 194H, H for helper. The shortcut is helper. They say if this commission or brokerage you're paying is more than how much? 15,000 per person in a year, then there will be TDS at the rate of 5% that you need to pay the government, payment or credit, whichever is early. And if no PAN, the rate is what, guys? I just remember here, even small people can pay brokerage and commission. The government says if you are whom? Small individual, or if you're whom? Small HUF, then this section will not apply. Small individual means what height? 4'11", 4'10". No, guys. Small individual, small HUF means you are an individual or HUF. And which year? Last year. Your turnover is up to how many lakhs? 50 lakhs as a professional or 1 crore as a businessman. Are we okay with this? Same section 194D. But now what are you paying? Insurance commission. Is it more than 15,000? TDS at what rate? Everything remains the same except small individual will not apply because insurance companies will never be small. Same triplet, guys. 194G. G is for what? What commission are you paying now? Lottery commission, guys. More than how much again? TDS at what rate? Everything the same. Again, small individual will not apply because lottery companies can never be small individual. Are we okay with this, guys? Yes, moving on in life and in this section, guys, to the next one now. All right. Let's move to the next one. After this, guys, which was a section that we discussed. Guys, in life, sometimes you need to rent. 194 I. Initially, what do you do, guys? Rent. And if you are a payer, guys, who is in the middle? Payer. And if you're paying rent for land and building, or plant and machine, or furniture, and if the rent is more than 2,40,000, but per person, not per category. So land and building, plant and machinery, both together to a person, 2,80,000. Yes, because 2,40,000, then TDS will be at what rate, guys? 10%. For plant and machinery, it will be 2%. Common things, payment or credit. If you don't give PAN, guys, are these common points? And in case that person charges GST, there is no TDS on GST. Why will you deduct some part and pay? Because the entire GST goes to whom anyways? Government. Guys, that is 194I. But right now, again, small individuals, small HUL. Guys, we'll tell them not to pay under this. Do you remember why? Because they're small. So that is 194I. Do you like the place? So 194IA, immovable property you are trying to acquire. Again, you are a payer. You are trying to acquire. And if you are paying more than how much, guys? 50 lakhs. Here, the TDS rate is how much? Only the government just wants to know who this person is. This applies to all. Small individuals, yes. Small HUFs, yes. Because if you can buy a property more than 50 lakh, you can also do the TDS formalities. But because everyone is here, you need to pay by the 30th of the next month. Guys, here there's an amendment. So this will come in your exam, very high probability. Now, if my sale consideration is 45 lakh, but my stamp duty value is 55, whichever is, so the 1% will be on 55 lakh, but don't worry, you will pay only how much? But when you're paying 45, you'll deduct what? 1%. Changing the numbers, if this is 57 and this is 60, on 60, you will take how much? 1%. And when you're paying how much? You will deduct that. Are we okay with this, guys? 194 IA. But guys, you are not buying the property now. 194 LA. What is happening in this? Legally acquire. Who's buying it from you now? Government is acquiring, and when the government acquires, the threshold limit decreases. 2,50,000. But the TDS increases, guys. How much? 10. But very smart. This is only on what basis? Because whenever is the government thing, they convert it. They say only on payment basis. Yes, guys, very good. We should become like the government someday. Make your own rules, guys. Everything changes when it's the government. Next, which is the next section? 194 are, guys, social media influencers making reels. But this reels is only a shortcut. It can be anyone. Tomorrow it can be you, it can be a doctor, it can be anyone who gets any benefit. What is he getting? Relation to his business and profession, he's getting any benefit in money or in kind. The peer has been told now that listen, enough is enough. You can't be giving so many freebies without deducting TDS. So here you need to deduct TDS at what rate? 10% only if the amount paid is more than 20,000 per annum. Are we okay? This came in this year's paper. So not very important for your exam immediately, but why not, guys? Indirectly, they can ask this. Next one. Which is the next one, guys? 194 C. C is for what? Contractor. Are you paying to a contractor, guys? One of the most important sections. Guys, if you revise here, watching the video, you'll also relate to it and it'll go very smooth. Otherwise, TDS is an animal, is an elephant, guys. Will you get scared of? Yes. So are you paying? Whom are you paying to? Contractors. Guys, many contractors. So section 194C, the TDS rate is how much, guys? If the contractor is individual HUF, 1%. But small personal limit. Small individual, small HUF, no TDS. Personal purpose. And limit up to how much, guys? 30,000 per payment or 1 lakh per annum. Guys, these are all kabaddi lines. Anything touches. I'm paying 28,000. 32. Yes. 30,000 three times. No. 30,000 four times. Yes, 1 lakh. So anything, any line process, you need to deduct TDS at 2 and 1%. As other things are common. Payment or credit. If no PAN. Alright. Some new things, guys. If you're a GT, 10 PAN. What is the shortcut? If you have 10 goods carriages, then you give what? PAN number, then we'll not deduct TDS. On purchase, no TDS. But works contract. What is works contract? When you're giving specification and material. Example, I ask someone, furniture maker, to come to this class and make furniture. I give him the specifications and material. What is it? Guys, if I take a place on rent, 194I. But if I take a warehouse or cold storage, 194C. And if I park my plane, I'm Go Air or Indigo and land it, guys, and park it 194C. Do you remember this, guys? Yes. So that was 194C. Moving to the next one. Guys, the next one was 194J. What are you going to be in future? A jealous professional? No, guys, a professional. So 194J is for jealous professional. Whenever you're paying to a professional, PTNRD, TDS at what rate? But if it's CMT, 2%. Let's revise this. Professional, technical, non-compete, royalty, or director's fees, you will deduct 10 and 2%. CMT is call center, movie royalty, technical, what rate, guys? 2%. Everything is common. This is same. If no PAN, 20, and on GST, guys, no TDS. But guys, again, small personal limit, small individuals, personal purpose, and limit only one limit. How much, guys? And that limit does not apply to. And remember, very important, and this can come and has come in the exam, it is per category. So if this is 20 and this is 20 to the same person, no TDS, because per category should be more than how much, guys? Excellent. Next section. Which is the next section, guys? 194 M. 194M and 194IB are two sections only and only for whom? Small individual and small age. A small individual, you are really small, then why are you paying such big rent? Rent of more than how much, guys? More than 50,000 per month, then we will subject you to what? TDS at what rate? Shortcut is immovable property, which is big. But don't worry, do you have to do monthly? No. You have to do it once a year at the end in which month? March, or whenever the lease is ending, guys, whichever is earlier. So what if my lease is ending in December? In December, you will deduct and pay by the next month by 30th. You remember here, guys, if the last month's TDS is greater than rent. But how is that possible? Because TDS can be at what rate? 20. We've done a sum also on this. Then what will you deduct? Only the rent. Are we okay with this, guys? Yes. And 194M, again, small people, JHC, we did not apply to you. But if you're trying to misuse it, what is M for? Misuse. Small people making how many payments? Big payments. Then TDS, same rate, guys. What rate? 5% will apply to you. Payment or credit. If no PAN. And on GST, guys, no TDS. Excellent. But here, guys, personal or not personal doesn't matter. Personal is only in 194C and 194J. Next section, please. 192. Guys, after becoming a CA, some of us unfortunately will become what, guys? Slaves. That means we'll get a job and we'll get what? Salary. So this is your master and he's paying you salary. Whenever he pays you salary, guys, he has to deduct TDS at what rate? But average rate. What the hell is this average rate? Average rate is basically they become your CA. What do they become? CA. And they will calculate. They'll ask you all your incomes. Plus they will ask you house property loss. Plus they will ask you all your deduction, and finally on your total income they will calculate your tax and they will divide it by 12, and that is the amount of TDS they will deduct every month. Is that right? Yes, this is called 192. It is only on what basis, guys? Payment bill. And very scary, if you don't give your PAN to your master, then it will be maximum marginal rate, which is 42.74%. With the balance, guys, very difficult to run the whole month. Yes, so better give the PAN. And next, guys, 192A. Again, guys, 192 series is only two sections, only for slaves. 192A is again for slaves. Guys, did you see your PF balance? And did you withdraw it? If you withdraw after 5 years, life would have not been a problem, but are you withdrawing it prematurely, guys? Then the government says, PF authority, please deduct TDS at what rate? Section is 192 Aram. You're withdrawing PF. Guys, 10% only if the money withdrawn is more than 50,000. So what if I withdraw 10,000? Next year, 20 more thousand. No. Aggregate over 5 years if you withdraw more than how much, guys? 50,000. Guys, here, if in 5 years, if I'm DIU, disability, illness, and unemployment within the 5 years, then still it will be exempt. So no tax. Are we okay with this? Again, here also what will apply, guys? MMR, because who are we talking about? Slaves. Excellent revision happening, guys. Moving to the next one. Guys, now we come to some incomes which are very, very similar. So we'll go to a section called 194K, guys, which is India's best mutual fund. So if a mutual fund is paying you income, what are they paying you? The government is very, very strict. If you're paying more than 5,000 per payment, you need to deduct TDS at what rate, guys? 10% under a section called 194K. Guys, everything else is same here. Otherwise, I'm not repeating. The other things are the same. And 194 is a replica, but instead of mutual fund, it is a company. And it instead of income, it is what, guys? Dividend. If the dividend is more than how much? Same. TDS rate was what, guys? 10%. But cash dividend, guys, then 5,000 limit will suddenly disappear. Remember LIC, GIC? Yes. Guys, no DDS. Excellent. Guys, I want to earn interest. Who is the first person I can earn interest from? Bonds, debentures, government securities, and others. Let's do the first one. Guys, if there are bonds, debentures, and government securities who are paying interest, guys, which is a section 193, loan soldier standing there, guys. TDS at what rate? Only if the amount is more than 5,000 per payment. For guys, government securities, the nominal value should be more than 10,000. Guys, very important others, which is India's best bank. So if it's a bank or if it's a partnership firm or if it's your friend of anyone paying you interest, guys, more than how much? 5,000, they will deduct TDS at what rate? Under a section which is 194A, but very good exception, guys. If it's a bank, the limit is 40,000 for you and 50,000 for senior citizen per bank, not per branch. If there are three branches, 20, 20, 20. Yes, but three banks, 20, 20, 20. No. Next, guys, if partnership firm paying to a resident partner, no TDS because he's not running away. If your friend, small individual is paying you, no TDS. But if all of us are paying to banks, no TDS there because we don't want to block the funds, guys. And last, motor accident claim tribunal up to how much, guys? 50,000, no TDS. Do you remember all this, guys? Yes, section 194A packed up. 194EE, extremely exhausting. This chapter will not be extremely exhausting if you watch this revision video well, guys. Here is National Savings Scheme. If they pay you more than how much? 2,500. TDS at what rate, guys? 10%, guys. This is National Savings Certificate or National Savings Scheme. What next? 194P. Guys, are you a pensioner? Yes. And how old are you, guys? 75 or more. Then, guys, generally bank will deduct interest with section 194A. But here the government says, listen, apply 194P. Under P, the bank will almost become what, guys? See, this is only shortcut, guys. They'll become your CA. That means they'll take all your income, they'll find out your total income, they'll find out tax liability, and they'll deduct only that much TDS. Is that right? And the best part is because they've deducted only that much, will you have to file your ROI? No. But for this, guys, there are three conditions. You should be how many years old? 75 years or more. You should be earning only two incomes. Yes, no other income. Pension goes where? Salary. Interest goes where? IF. No other income should open up, and it should be in the same bank. 194P has not come before. Very big prediction that it will come in your exam, along with that 194IA. Next section. 194Q. Guys, this is the big one. This is the one which people get really, really scared of, but not you guys. Are you a payer? Payer, another word is, are you a buyer? Excellent. You should be in buying in huge quantities. Your turnover last year should be more than 10 crores. And now are you buying? Yes, if you're buying more than how many lakhs? 50 lakhs. Whenever you pay that guy, you need to deduct TDS. At what rate? Only 0.1%. Shortcut. What is the shortcut? There are two quantities. Purchase more than and your turnover more than how many? Both have to be fulfilled. Only then 194Q will apply. Guys, this is another one only on excess, only above 50 lakh. The amount is very, very small. The government is collecting this only to know who the person is. And here also, guys, if you don't give PAN, it doesn't become 20%. It only becomes 5%. Some very important things, guys. Your payment of credit, whichever is earlier. And remember, guys, this is only for Indians. So this person should be a resident, so he can take what, guys? Credit. And remember, what if this 194O also applies? Then which will prevail? 194. Will you buy hard this? No. 194, what is the rate? On the entire amount. And this is what? On the excess. Which one will the government want? Apple or Micromax? Apple, guys. They want the bigger money. So they will take the 194O over 194Q. Excellent, guys. This is the end of TDS. Guys, remember, in TDS, if you are paying to the government, no TDS. If you don't deduct TDS, then interest at the rate of 1%. If you're supposed to deduct it today, 23rd May, then interest will start from May month only. But if you deduct it, but you don't pay, then interest will 1.5, but they will wait for the next month and then only interest will start. Are we okay with this, guys? And small individual, small HUF is a small word, but a big concept in the exam. Yes. All right. Moving to the next one. TCS. It will not take more than like 2-3 minutes, 5 minutes to do TCS, guys. In TCS, who's in the middle? Suddenly, guys, things are changing. Now, when they sell you a car, will they collect money from you? And they will collect something extra, which we call as what, guys? TCS, and is paid to the government and given under the PAN. If you don't give PAN, is there a punishment here? Guys, what is the rate? Shortcut 25. Do you remember that? 25. Yes. All right. So this is TCS. Section is 206C. Who's in the middle always, guys? He has to pay to the government by when? 7th of the next month. Remember, March you have to pay by 30th April. If you don't collect, if you collect but don't pay. So are there similarities, guys, between TDS and TCS? Now the difference is this. That was payment or credit, whichever is earlier. This is receipt or debit, whichever is earlier. That means as a seller, will you receive money? Or when you pass the debit entry in your books of accounts, whichever is earlier. These are some of the differences, and it's always on the seller. Guys, TCS is only on few items. Is that right? Do you buy hard the entire list? Yes. Alcohol, scraps, my car. How much percent, guys? And how many licenses do you want? For what? 2.5 timber. And how many BDs will you not smoke? 5 BDs. Yes. All right. So this is the shortcut, guys, on alcohol, sale of scrap, sale of minerals, sale of cars. But which kind of car? Fancy car, more than how many lakhs? Which kind of minerals? LIC, lignite, iron ore, coal. Scrap generated in business, not the Raddi wala, guys. Don't bother him with TCS. And alcohol, but not at what level, guys? Retail level, 1% you'll collect extra. On licenses for parking lots, toll plaza, mining, and quarry, how much percent? On timber, we had done a some Krishna 2.5 and Tendu leaves, guys. These are the rates you will collect extra. But guys, remember, this will not apply in three cases. PMG. What if you are selling it for personal purposes? Now, except car. What if it's for the minerals only, guys? If it's for your own manufacturing processing. RTP question. You bought some coal. What have you bought? For own power generation. Will there be any TCS? No. And guys, what is it? If you're selling to government, UN, embassy, no TCS. Are we okay with this? Three specific situations. 206C1F. Fancy car. More than how many lakhs, guys? It can be car, it can be any motor vehicle, including nowadays, guys, electric vehicle also. And guys, your RR. It is only on retail and only when you receive. Are we okay with this, guys? Yes. By the way, I did not repeat. If no PAN, then 25 is the shortcut. What is the shortcut, guys? Twice the rate or 5%, whichever is higher. So if it's alcohol, what is twice the rate? 2%. And what is 5, which is higher? 5. So you'll collect 5%. Next situation, very important, 206C1G. Remember, guys, here global. Are you buying forex? If you're, this is not bank transfer, you're literally buying currency. In that case, if you buy more than 7 lakh, that's TCS at what rate? Always on the entire amount. But if you are using it for tours and travels, no limit, 5%. But tears in the eyes, you're going out abroad for what? With which amount, guys? Loan money more than 7 lakh at what rate? 0.5%. And last, guys, the big one which can very much come in your exam, 206C1H. Again, guys, you are whom? Seller. The seller should have last year turnover more than how many crores? So whoever is in the middle, guys, start with the diagram, has to have turnover more than 10 crores. And you are selling more than how many lakhs, guys? So whenever you collect the money, because this is only on what basis? Receive basis. You need to collect how much extra? 0.1 only on the excess. So guys, is the rate the same? Is the concept the same? Is last year's turnover the same? Yes, but here it is H. H means high value. Guys, this is on seller. Again, guys, between 194Q and 206C1H, which one will apply? Will you by heart it? No, because that is payment or credit, whichever is earlier. Excellent. That's the end of TCS. Guys, here the rate is 21. What is the rate? Twice the rate or 1%, whichever is higher. And the last thing, guys, is advanced tax. I can't believe we've done a chapter which is so big, so well. Guys, advanced tax. If you don't believe your own understanding, ask your friend. TDS, TCS, Advanced Tax, let's do it together and see, guys, the understanding. I myself, when I was a CA inter student, CA final student, this chapter, guys, was so confusing with sections, even deductions. QQB used to make me puke, guys. Really, what is QQB, RRB, TTA, TTB, JJA, all these sections. But you have to make best friends with them, guys, till your exams. Everyone, Advanced Tax. Guys, first, will you have a total income? Let's say my total income is 10 lakh. How much is my total income? What is my tax liability? Let's say 1,17,000, guys. And my TDS TCS is 17,000. So what is my balance? 1 lakh. When will I pay the government? John. But the government says, sorry, I don't want to wait till John. So if your tax liability is more than how much? The government expects you to pay what, guys? Advance. Okay, let's pay it. Just send demanded money. How many installment? Four. First one, 15 June, 15 September, 15 December, and 15 March. You need to pay this 1 lakh to us in as advance tax first time. Next, another 40, but this is cumulative. So 15 plus 30, 45 plus 30, and 75 plus 25, 100%. This is how you pay your installments. So the government gets most of the money in this year only. But A, B, C, D, this is this time's question paper, guys. The question paper that I'm holding right now, they are saying that advance tax will not apply on which four incomes? A, B, C. Literally, they've given you marks for writing A, B, C, D. What is A? Asset sale. What is B? New business. What is C? Casual income. And what is D, guys? In these four cases, will interest apply? No, till you earn it. Once you earn it, then you need to include it in your income, include it in your tax, and hence include in your installment also. But only for dividend once it is received. Literally, guys, I'm reading out the question also for you guys in this. I'm just reading out. Explain the cases where advance tax interest under section 234C shall not be leviable under the Income Tax Act. What is your answer going to be, guys? A, B, C, D. Literally, guys, this is the answer. And guys, if you are 60 years or more, then advance tax will not apply. But what if you are PGBP? Then if you can do business, you can also pay advance tax. And remember 44 AD and 44 ADA. Are you presumptive taxation people? Then we like you. So hence only one installment. Which one, guys? So all your advance tax 100% pay by 15 March. So less interest for you guys. Now, guys, if you pay less, guys, is there an interest section? 234C will run first. Who will run next? 234B, and who will run last? Let's quickly revise, guys. 234C, will they check? How many times will they check? First time, if there is any shortfall, into what percent? Into how many months? Remember, guys, any shortfall up to 12% will be cordoned. If you pay 13%, shortfall will be there, but no interest. 14%. No, but if you pay lower than 12%, there will be interest. Next shortfall, again, into how much percent? Into how many months? Here, how much will be the relief? 36. Again, here 3 months. But here, guys, 1 month, because this guy runs only in the previous year, which stops in March. So how many interest installments, guys? Four. We've done a sum, and this kind of sum has already come before. It can come in your exam as well. Now, this is total advance tax. How much were they expecting you to pay? 1 lakh. Even if you pay 90%, we're okay. But if you pay lower than that, we will charge you what? Interest at what percent? Till how many months, guys? Till you file your return or till June. What if I file in June? Then April, May, June. Remember, guys, even June first day if I file, I will calculate interest for the entire June. And guys, if I still don't pay till June, let's say my due date was July, but I paid it in the month of September. Then, guys, from July, August, so August, September, 2 months, we'll have to pay interest. Same, guys, if you don't pay money to the bank, will they charge you interest? This guy keeps running till you actually file a return and pay your tax. Guys, this is advanced tax. Very, very good. The section is not important here, so I'm not repeating, except the interest sections, which I've just discussed here. Do this every time, guys. When you do this, first do the exam questions and then do your Yesh's book or Pinnacle book or whichever book questions, guys. But first do your normal questions and the exam. As remember, this will definitely get you 5 to 8 marks next. All right. Great, great, great revision.